sort of precipitate some sort of harder landing if they don't?
Well, if they just, basically build a wall and say we're not going to cut and don't even talk to us about it, I think that would be the wrong policy. If they said, hey, we're doing 25, we'll probably do 25 in November or late October, the world is not going to end. I think doing the 50 and then sort of being data dependent would be cleaner.
If the Fed were to cut by 50 basis points, like you think, what would that do to the dollar?
Short term would weaken it, because I think that the market would anticipate that they're going to do more, even if they sort of followed my script and said it's data dependent. But I think over time the market would catch on. They would see what the Fed did. If they, kept on cutting, the dollar would get weaker. We don't think they're going to keep on cutting. And interestingly, there's some indications of productivity growth is picking up because the output side just isn't that bad. So, this is like, holding 1997, 1998, you have to be careful what you do. And so I think that they will be.
Are you in the reacceleration camp for 26?
There could be a bit of a pickup. Like I said, the GDP numbers are looking okay. And ultimately the hiring might resume once there's a little bit more clarity about what's going on and things settle down. We're not in the recession camp, sort of saying, okay, we've gone from 150,000 jobs to 30,000 jobs, and we're going to go to minus 300.
Steve, it's good to see you.
Pleasure. Always.
Thanks for being here, sir. Steve Englander there of Standard Chartered, looking for 50 basis points from the Federal Reserve next week off the back of the big step down we've seen in payroll growth.
And more people are coalescing around this idea after what we saw and potentially after the revisions that we get tomorrow. It just is fascinating. I really think right now is a black box moment where people are kind of struggling to understand what the paradigm is, because you could say on one hand, a 50 basis point rate cut, wow, that would signal a real slowdown. That's really dramatic. But when you listen to what Stephen Englander has to say, it's actually for a pretty positive, benign backdrop that actually doesn't speak to some sort of falling off the cliff moment. So, it's sort of a morass of lack of clarity.
I think that's the strongest story that you can tell at the moment, is that the unemployment rate actually hasn't climbed that much over the summer, even though we've seen this massive step down in payrolls. The other thing you could point to as well is that jobless claims have just about held up. But that is the best story you can tell right now in the labour market, which is why most people believe this Fed cuts next week.
I keep looking at the employment rate for people, or the unemployment rate for kids who just graduated from college. It is 10.6%. That is the highest it has ever been outside of a recession. People who are just trying to get into the labor market really struggling. If this were a healthy labor market, that would not be happening.
It's hard to get a job right now. That's what we're being told, and that's what you see in the economic data. The week ahead includes inflation data, a big CPI print going into a Federal Reserve meeting next week. 25 or 50 seems to be the debate at the moment. It's not a matter of if, it's how big. Max Kettner of HSBC joins us tomorrow. Neil Dutter of Renmac, Amy Wu Silverman of RBC, Amanda Lynham of BlackRock. From New York, this was Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
In case you missed it, on the close. Sweetgreen, which has a kind of a similar business model to Kava, they're having some issues, and it's more about just the foot traffic. Maybe the price points are too high, or people have just moved on to other types of ways to feed themselves. What are you seeing?
We're not seeing anything underneath structurally in the business. If anything, we're seeing greater structural strength. In recent years, we've now underpriced CPI by 900 basis points. So again, our value scores continue to improve. We continue to make our food more accessible and really try and mitigate any of the impacts of, say, tariffs and not have to pass along to our guests.
There's been a lot of talk about how do you reimagine stores like this. What do you want your customer to do?
If you're in a hurry, we've got great digital channels. We've got 60 drive-through pickup windows. But if you want a great physical experience, you can have that walk-the-line experience, see the food, smell the food, interact with our team members. Our mission is to bring heart, health, and humanity to food. So we want to deliver that humanity in the 4 walls of our restaurants and have a great environment for you to enjoy your Mediterranean meal.
Don't miss the close, live every weekday.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
Futures higher to kick off the week. 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Danny Berger. Bloomberg open interest starts right now.
Coming up, bullish sentiment faces a test this week with payrolls revisions and key inflation reports on the data docket, plus plenty of action on the deals front, from a $17 billion spectrum sale to consolidation in regional banking. And Apple's recent rally under scrutiny as the tech giant prepares for its biggest product event of the year. Danny, what are you watching?
I'm looking at changes to the S&P 500. This always gets people excited because, yay, passive money will buy these shares. Specifically, Robinhood, AppLovin, and MCore all higher by at least 2% more for Robinhood and AppLovin. They will be added to the S&P 500 index on September 2nd. They replace Market Access, Caesars Entertainment, and Enphase Energy. Matt, what are you looking at this morning?
I'm looking at SpaceX. I highlighted that spectrum sale. SpaceX agreed to buy wireless spectrum from EchoStar for $17 billion in cash and stock. The deal allows SpaceX's Starlink to offer more independent direct-to-device mobile service for customers, and it gives EchoStar now $40 billion worth of total spectrum sales over the past month.
Yeah, and that's why you see the shares rallying 22% on that. Let's get more detail on the deal itself. Bloomberg Tech co-host Caroline Hyde joins us. Caroline, great to see you.
Great to see you.
And as Matt mentioned, this gives them the ability to give direct-to-device service. So is this a coup for SpaceX that they've been able to pull this off?
Well, they'd already been in the mix when it came to that AT&T spectrum sale as well. Remember, $23 billion worth just in August. This is why we've seen EchoStar shares at a record high before even trading today. They're up 100% in the last few days, let's call it in the last month, because they're doing this sale after sale of their spectrum. But this really gives SpaceX more broadly and Starlink an ability to give you direct to your mobile device connectivity with its satellites, but also from mobile to mobile. This is important for the growth story that we're seeing between Starlink and SpaceX. But what's sad is you are seeing perhaps the views that EchoStar was going to be a key challenger when it came to an offering in the mobile space. The fact that it was going to rival the likes of an AT&T or Verizon, that's not going to be clear anymore, because clearly they're having to offload what was this prized spectrum. The reason they're offloading it is because back in May they started getting an investigation by the FCC. Look, this is a company that's on the brink of bankruptcy, and now you see its bonds soar, its shares soar, because basically they've been forced by Trump, even involving himself as well, but being forced by regulators to start selling off some of this spectrum that it had bought at pretty bargain basement prices previously.
Yeah, EchoStar, even though it's the big mover today, it's not really the exciting company in this deal, right? It's all about SpaceX. They're able to use pre-IPO shares to make multi-billion-dollar purchases, and now they're able to get away from T-Mobile. They previously had a partnership with T-Mobile to offer direct-to-device communications, but TMUS, those shares are down because this means Starlink and SpaceX can operate independently.
Yeah, own it themselves, vertically integrated. They're buying this with $8.5 billion worth of cash, but they've also using their own shares. So interesting that EchoStar gets potentially a piece of the pie when they eventually do IPO. Remember, a lot of companies are pushing back that trajectory at the moment. They're also paying down some debt payments as well for EchoStar. So it's a really interesting deal more broadly. But you're right, this is about the play that Elon Musk, Starlink, and more broadly SpaceX, which is run by Gwynne Shotwell, is continuing to have and actually becoming much more of a D2C kind of play. We know it for the space incredible catches that they do of their super of jets and the likes of rockets going to space, but now people are ever more going to know about it for connectivity, particularly when they're in the wild.
Yeah, chopstick landings are interesting, but if I can use a mobile device with your satellite network, that's even more interesting for a consumer. Caroline Hyde co-anchors Bloomberg Tech. That kicks off at 11 a.m. They'll have more on this deal. We've got more M&A in this market on this Monday morning. PNC is going to buy First Bank for about $4.1 billion. Adding nearly $27 billion in assets under management in Colorado to PNC's business. Bloomberg Intelligence senior regional banks analyst Herman Chan is here. And Herman, we're talking about Denver specifically. Right. But is this a bigger consolidation story?
Yeah, we're seeing some more consolidation within the larger regional banks over the past couple months. And this is more of a continuation of that. We've seen Huntington Bank in your home state of Ohio buy Veritex in Texas. We've seen a merger of equals in the Southeast with Pinnacle and Synovus, and this is the third regional bank deal that we've seen over the past couple months. PNC buying into Colorado and Arizona.
Why is this happening, Herman? And it feels like soon we have to update your title from regional bank reporter to just bank reporter, right. National bank reporter, with the way that this is going.
Yeah, so a couple of things. We've seen really strong deposits competition, especially from the largest banks like the Bank of Americas and the JP Morgans of the world. And the regional banks have been trying to contend with that for a while now, coupled with a much lax regulatory backdrop. So bank M&A administration. So there's less anxiety and risk involved with bank M&A under Trump, and so we've seen more deals because of that.
Herman, thank you very much for that. That's Herman Chan of Bloomberg Intelligence. Let's now, though, turn to the latest from Washington. Top Fed Chair candidate Kevin Hassett says the U.S. Central Bank put its independence and credibility in jeopardy by expanding beyond its mandate. He spoke yesterday on Face the Nation.
Central bank independence is something that, as you saw, there was a hearing this week about that Democrats and Republicans in the White House all agreed about. Now, the question is, has the current central bank been as independent as we would like, as transparent as we would like? And I think that there's some dispute about that.
Hassett's comments come ahead of a busy week of economic data that's going to help determine the Fed's policy path if it's not already predetermined. Joining us now, Michael McKee, Bloomberg's international economics and policy correspondent here on set. Mike, what could we see in this data that would change the cut that the market is already pricing in for September 17th?
Well, you probably have to have a big move up in the inflation numbers, and we do get a lot of inflation numbers this week. We get CPI and PPI. We also get payroll revisions, something to pay attention to tomorrow, definitely. We have the Lisa Cook court decision. Does she get to stay on the Fed? The IEPA appeal to the Supreme Court. Are they going to pick up the case about whether tariffs are illegal? And then we have this Besant and Pulte Ultimate Fighting Championship bout that was reported over the weekend by Politico. Does that have any influence on anything? It could. You just don't know. PPI and CPI, though, man, are the big deals. We have to see if we get a bigger increase in both of those than is anticipated. Right now, the forecast is they don't move much from where they are. And if that's the case, the Fed probably goes ahead and cuts. But on that payroll revision thing, I want to point this out. Once a year, they re-benchmark the numbers, and it's the data from April of 2024 to March of 2025. But as you can see, each year lately, we've seen worse and worse re-benchmarking, 800,000 last year. We get anything like that this year, then there are concerns that the president will once again have a cow, you want to call it, and maybe take some additional actions. Not sure who else he could fire, but he might try to do that.
By the way, that Politico story about Scott Bessent and Pulte's fight makes Elon Musk's black eye earlier in the year.
A little bit more suspect.
A little bit more suspect. But there is a lot of personnel drama going on because we also have a narrowing down of who's likely to be the Fed chair candidate, with the Kevins and Waller being the top three announced by Donald Trump. How does that drama evolve with all of the data also in the background?
Well, Trump is going to announce his pick when he gets around to it. And he has said basically he wants to do it maybe by the end of October, November, could do it earlier. But all along, Bessent has added names to the list of people he's going to interview, but the president keeps going back to those three. So we probably are going to see somebody from those three, except that this is Donald Trump, so we could see anything by then. But the sooner he gets a name out there, then everybody's going to focus on that person and what they have been saying about the economy and interest rates.
No rest this week, basically, is what I'm
No
hearing.
rest this week, but as you and I were talking about earlier today, no rest last week, no rest next week either.
No rest for the rest of this year. Mike, thank you so much for joining. Michael McKee there with the latest. And it is a busy week ahead, as Mike was just highlighting, from the inflation data to the Fed drama. We are now 0.3% away from another all-time high, Matt, up 0.2 for the S&P. The NASDAQ goes up 0.4%. The small cap index, by the way, 5 straight weeks rather, of gains for the small cap.
For the small caps. All right, so the small caps obviously need that rate cut as well. Coming up, an immigration raid on Hyundai's EV battery plant, LG's EV battery plant in Georgia, jolts South Korea, and also poses questions about the supply chain and the stability of that in this country. More on that next. This is Open Interest. In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Let's get to high-ends now. Look at what's making headlines around the world. The latest political crisis is unfolding in France. Prime Minister Francois Bayrou is speaking now in front of Parliament. He called a confidence vote today in a bid to break a deadlock over planned budget cuts. The most powerful parties in France have vowed to bring him down, suggesting his ouster may be inevitable. The vote begins later this afternoon, or even this morning before noon. Bloomberg Television will bring you the latest headlines live from the National Assembly in Paris, and we'll show you live shots as well as these beautiful older pictures. The ticket-selling platform StubHub is seeking to raise as much as $851 million in an IPO. The company plans to offer about 34 million shares for up to $25 apiece, according to a filing. Earlier this year, StubHub paused its IPO plans after the U.S. announced wide-ranging tariffs. We'll get more insight into the live entertainment business with the CEO of Tickmill in the next hour. Brett Goldberg is going to join us here on Open Interest. Plus, the U.S. is proposing annual approvals for exports of chip-making supplies to Samsung and SK Hynix factories in China. The compromise is aimed at preventing disruptions to the industry after Trump officials revoked Biden-era waivers that let companies get shipments more easily, sell shipments there more easily, Danny.
Elsewhere, Matt, some more company news for us to cover. South Korea's biggest companies are rushing to contain fallout from a sweeping U.S. immigration raid at a Hyundai EV battery plant in Georgia over the weekend. For more, we're joined by David Welsh, Bloomberg's Detroit bureau chief. And David, this is a White House that wants foreign industry to come and build in the U.S. Do these type of immigration raids, are they in tension with that desire from the White House?
Look, it doesn't make it easier for companies to start doing construction and actually executing the kind of investments that the Trump administration wants. Obviously, these people do need to be here legally, and they need to obey all the rules and dot the I's, cross the T's, and it sounds like that's what some of this was. People had overstayed visas, or they were here working on, for a different purpose than the original visa that they were granted. The Korean, some of the press reports there are saying that it's so difficult to get these permits, and it takes so long that some of the workers had maybe overstayed, or they didn't have everything ironed out perfectly. So
not just
like
some,
between
right?
government cuts.
We're talking about not just like 3 or 4 workers, but like multiple hundreds of workers. And it seems that the factory must have known about this, right?
Look, I don't know what the factory knew and didn't know, but what we do know is that some of these people didn't have their permits, their visas, and everything really ironed out. But if it takes a long time to get these, and the U.S. at the same time is going to be really cracking down on this, then something needs to be worked out between Korea and the U.S. and other countries that are going to have a lot of investment here and a lot of work. These EV battery plants, I saw this in Lordstown when LG was building the General Motors joint venture plant. You had a lot of Korean engineers working here for a long period of time because you don't necessarily have the expertise here in the U.S. I would assume the same is true in semiconductors. And you just have a lot of engineers and people who have very special skills working to build these plants, and this will add red tape for them whether you like the immigration policies or not.
I can imagine it doesn't even just add red tape, but if you're thinking of coming over to the U.S. and you're seeing these images of immigrants in chains at their place of work, yes, they're there illegally, that's probably somewhat dismaying. I mean, this is a president who also off the back of this said, look, send your very smart people because we want to train people up in the U.S. The red tape, the friction of getting the so-called very smart people here for factories, David, how difficult is that?
It's going to be really hard. There's a lot of angst right now in Korea over this, a lot of politicians saying they don't like how it was handled. And those images are really bad advertising. And even if the workers here were not, they had overstayed visas or whatever it is, if you're looking at those images, those videos, as a Korean executive or politician, it's very jarring, and they're going to think twice about what they're going to do with some of these investment promises. And I think you're going to see a lot unfold in the next few days between Korean government and the Trump administration on how to handle this going forward. But it's going to delay some things.
David, I want to ask about another story that you and Keith Naughton had out over the weekend about the U.S. rollback of emissions standards and how much money that's saving U.S. automakers. I think this has gone a little bit under the radar because if I read it right, Ford is saving more than $1 billion by not having to buy credits. GM and Stellantis must be benefiting hugely as well.
That's right. Ford said it was $1.5 billion. General Motors charges as an expense. It was more than $700 million a year over the past 3 years for regulatory compliance that has to do with these different credit schemes. Look, they sell more gas guzzlers than they do efficient vehicles and EVs. So over the years, they've all been buying credits from Tesla. Toyota has been a seller of credits over the years because of their hybrid program. Then you have others like Rivian. And I think General Motors had bought $2 billion worth of credits, I think, in 2024. They don't use them all in that year. They sort of bank them, and they can use them over several years. But it is a big expense for them. And if Trump wipes that away, which he's already done that with the greenhouse gas emissions, they're working on a CAFE, that's a corporate average fuel economy related, kind of watering down of the credit scheme. It's a lot less revenue for Tesla and Rivian, and it's a lot less expense for GM, Ford, Stellantis, and even some others like Nissan, Mercedes, who've had to buy credits or pay fines over the years.
David, thank you very much for bringing those to us. That's David Welsh, Bloomberg's Detroit bureau chief. Now, as we head closer to the opening bell, about 10 minutes away, you are looking at equity futures attempting to rally after Friday's loss, after that payrolls job report. So maybe the bad jobs leading to cuts today, at least, is a good thing. We're up about 0.25% on the S&P. The NASDAQ is up 0.4%. The Russell 2000 continues its run. Coming up, we break down the risk reward for rate cuts, just that, with Citi's Stuart Kaiser. Conversation you don't want to miss on Bloomberg Open Interest.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde. In New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
More Morgan Stanley and Goldman Sachs strategists say we are entering the next leg of the bull market. Morgan Stanley's Mike Wilson says a rapid uptick in positive earnings revisions in the latest jobs data suggests that the U.S. is in a rolling recovery. Meanwhile, Goldman's David Costin sees the S&P 500 rising 6% through mid-2026, 2% this year. Both see small caps benefiting in this environment. Let's add another expert voice to the mix, and it is Citi's head of U.S. equity trading strategy, Stuart Kaiser. Stuart, great to see you this morning. I say something feels weird about this. It feels like since the jobs number, and really maybe since July's jobs figure, that the view has shifted, that the narrative has become we're cutting into weakness, not necessarily strength. Can equities continue to gain off the back of that?
Our view is probably not. I mean, the base case for most investors is probably we slow down but don't hit a recession. And in that case, if you're getting cuts, yeah, I think it's very positive for the equity market. But if what we've seen in the labor market is the early stages of, something somewhat of a more severe slowdown, then we don't think equities or small cap are going to deal with that very well. I mean, June is now a negative payrolls month after all the revisions. So, I tend to agree with you. It's a much more difficult risk reward when you get payrolls down to these levels with valuation at the levels they are to really be, confident in risk reward over the next couple of months.
What does that mean, an expectation of a slowdown in growth for corporate earnings? Because they've been double-digit strong. So what about Q3? What about Q4?
No, I agree. I mean, the bright spot right now is corporate America. And if you wanted to paint a bullish picture, it would be that corporate America kind of sat on its hands for 3 months, amid all the uncertainty around taxes, spending, and tariffs and immigration, and now might be poised to kind of spend those budgets before year end and do some hiring. But you have to put a lot of faith in that. If you look at what happened last earnings season, it was about a 5% earnings beat. But it was a beat and hold. Those companies did not significantly guide up, which tells you they're going quarter by quarter. So I think that means we need to go quarter by quarter in terms of how we think about the market.
So part of the Mike Wilson take and part of the reason he's so bullish is because it's this idea that we're just going to run everything really hot. The Fed's going to be cutting. It's a government that has the one big beautiful bill. They're going to try to get as hot of an economy to spend their way out of debt, to make things
right now. And I think you need to be very, very careful about what you're getting in this labor market data. So we probably have a little bit less confidence in that sort of tactical risk reward around the economy than he does.
I hate to treat you as an economist rather than an investor, right? But to Danny's point, like if we run the economy that hot, we're going to get inflation that's higher. And you can also put on your poli-sci hat because that's no good for midterms, right? I mean, the government can't really afford to have inflation creeping back up to 4%. And we're already seeing a core PPI at 3.7. So how do you expect those numbers? We're looking at CPI coming out this week. We're looking at PPI coming out this week. How do you see those numbers trending?
Look, I think, the market's pretty convinced inflation's on kind of a downtrend, especially if you strip out the tariff-related impact. So again, you're taking a leap of faith that is going to be a temporary impact and the trend is lower. If you look what happened on Friday is you actually got a pretty high odds of a cut priced in for October. And I think those October cuts odds are telling you that inflation is kind of under control and the Fed can focus on growth from a rates perspective. We'll see this week. If you get a very hot CPI print this week, watch that October odds. And if those October odds come in, I think that's pretty telling.
81.2% is what I see right now in WIRP. Going by futures, obviously it looks a little bit different if you go by OIS, but not much. Stuart, you're going to stick with us here. Citi's Stuart Kaiser staying with us through the open. We're looking at futures that are higher this morning, just about 5 minutes to go until we get the opening bell. S&P futures up 0.25%, NASDAQ futures and Russell 2000 futures doing a little bit better. We come back, we'll give you that opening bell and give you the stocks to watch this morning. This is Bloomberg.
break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hardern in Alberta, Canada, and this is Bloomberg.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller, looking at futures higher to kick off the week. Right now, S&P futures up just about 0.25%, 0.2%. We're looking at bigger gains for tech stocks, and even, we were looking at bigger gains for Russell 2000 futures. Now at 0.3%. As Danny points out, they've been up 5 weeks in a row, the small caps, but it doesn't really add up to much. Down at the New York Stock Exchange, Genpact ringing the opening bell. They are pumped, and I like the color coordination. Over the past 5 years, the stock is only up about 20%, 5% year to date, but at least they're moving in the right direction there. Down on the NASDAQ, you've got the USTA ringing the opening bell after what was apparently a very successful U.S. Open. I didn't really watch much of it.
So good.
I think a Spanish guy won, which is important. And apparently Donald Trump, the President of the United States, went and sat in the Rolex box yesterday, which is interesting considering he put 39% tariffs on Swiss imports.
Honestly, good for the president for being there, but I was annoyed because it was delayed 30 minutes because they had to get everyone through security, and I think all the fans were pretty annoyed too. So yeah, there was that, but it was a great match. It was so good.
Well, and you could see those tariffs come down now that he's made friendly with the Swiss, right?
I'm sure that's exactly what will happen, Matt. Okay, away from that, some of the stocks that we're looking at the open, look at this huge move from EchoStar. SpaceX has agreed to buy wireless spectrum from EchoStar for about $17 billion in cash and stock, a whopping 23% rise. The deal also allows SpaceX's Starlink to offer more direct-to-device mobile services for customers, and Matt, that's why you're seeing Verizon, T-Mobile, AT&T, all those providers start to fall because real competition coming from them now in the way of SpaceX.
Yeah, I think a very interesting story for consumers of mobile telephony there. We're watching shares of Robinhood as well as AppLovin, one of the worst named stocks, but a great performer here today, and MCOR, which will be added to the S&P 500 index on September 22nd. You can see a couple of 10% gains there. MCOR not doing quite as well, but still in the green. We're back with Citi's head of U.S. equity trading strategy, Stuart Kaiser. And you know, Stuart, we're going to talk a little bit later about more SPACs. We've seen a couple more SPAC announcements today, and more IPOs. Companies like Klarna prepping for big ones. Are companies finally coming back to these markets?
I mean, you hope so. I think a little bit of
public markets.
A little bit of what we've seen though is the first half of the year was just so disruptive from a markets perspective that you just, I think, had a lot of people kind of stuck in the pipeline, so to speak, and some of that is kind of coming back out again. M&A targets have been performing extremely well. A couple of the other RPOs have done well. So you put all that together, you had some people that were kind of idling, waiting to come out, and then you've had pretty good performance of those in the secondary market, and I think it's motivated some folks to try to get it done before year end.
Are SPACs coming back a healthy thing? I thought that was the thing we all start to freak out about again, that SPACs are coming back and like crypto IPOs are what's in this market. Are those not like kind of frothy signs, Stuart?
They're frothy signs, but that's the market. I mean, Matt's going through stocks I didn't even know existed. Didn't even know the names of. So look, I mean, obviously crypto's a big part of this, and as is alt finance, and that's going to kind of continue. But I think it's a healthy sign that the markets are open and functioning, and that these are performing so well in the secondary that it does suggest that risk sentiment's really positive for both retail and institutions.
So you may not want to put all your bets on crypto SPACs or quantum computing stocks. They always do SPACs. But AI is still obviously a dominant force in this market, and Bloomberg Intelligence thinks that the CapEx increase is going to continue. How much of that is a part of your investment thesis?
It's a huge part. I think what we've seen probably, though, is over the last month or two, people kind of, migrating the way that they're investing in the AI theme. I think focusing a lot more on software. Power gen is just a massively important and well-invested theme as well. So, look, the AI outlook's important. If you look at, earnings last quarter, though, the Mag 7 stocks basically coming into the quarter were estimated to grow earnings in the mid-teens. They reported earnings in the mid-20s. So, when you're generating that much EPS growth, it's hugely important. And again, this has become, it's spreading throughout the market, right? It's not just the semiconductors now, it's software, it's AI. And people, Heath Terry at Citi did a very deep dive into companies outside of technology that are going to benefit from this as well. So this has just become a pervasive theme, and you can't be invested in U.S. equities without thinking about it.
And Peter Scheer was writing on this over the weekend, saying that spending on AI has been instrumental in keeping the economy and getting stocks to record highs. So does that then mean, Stuart, on the other side of things, that there's a real risk, even if there's a slight crack, for things to unravel for both the economy and for the equity market?
Yeah, I mean, look, these things do work in both directions, so you can't completely ignore it. I think what's a little, I don't want to say different this time, but what's unique about AI is this is not just the technology. There's also massive infrastructure spend that's going on alongside this, and massive power generation and consumption that has to go on alongside this as well. So yeah, there's a technology aspect, there's an efficiency aspect outside, and then there's just a real kind of bricks and mortar construction project that needs to go on alongside it. So as I mentioned, it is pervasive throughout the economy and the U.S. equity market. But yeah, what goes up must come down, and you can't ignore those risks if you were to get a real crack in that CapEx spending theme.
Yeah, we talk about, from the jobs perspective, whether or not AI is going to take out a lot of workers, right? And you mentioned software. Every time I look at a software company, I think, wow, AI could write that code itself. Like, why do we need these separate software solutions providers when I can now do it all on my own with ChatGPT, or maybe not yet, but in a couple of years? Aren't you worried that a couple or dozens of companies maybe go extinct because of AI?
I mean, you do worry about it, but you also hope it creates jobs in other places. If you look at the labor market right now, you've had continuing claims have been quite high. I think if you were to squint a little bit and try to see what the AI impact is on the labor market right now, it's that if you do get laid off, your ability to find a job is much more difficult. And you might argue that that's companies saying, well, why don't we wait 6 months and see, can we do this job with AI or something else? So I do think it's slowed down the replacement cycle in terms of employees. And it is something to kind of keep an eye on. But again, it is creating jobs in other places. And there are certain jobs you just can't do with AI. So I think, the economy is adjusting as it always does.
Can I ask you about one other part of this market? Apologies away from equities, but that's increasingly hot too, that you have to pay attention to, is gold, up another 1% this morning at 3,600. There was this report from the FT that Tether is going to start getting into gold mining, the stablecoin company. Again, when you have businesses who are getting into other businesses that have nothing to do with what they're doing, that seems like maybe a bad thing. Has gold run too far, Stuart? How much further does this thing have to go?
Well, I mean, I think gold has a number of things kind of driving it. One is there's some risk to the economy. and people are focused on that. But excuse me. Second, I think is it's a way to kind of be trading currency markets without taking a view on the currency. So I think for a while when people were concerned about the U.S. dollar coming out of the tariff announcements, they were buying gold because it was a view of I want to be short the dollar. There's no other currency I necessarily want to be long. So I just do that through gold. So again, I think there's two or three different dynamics driving this. Part of it is a growth story, part of it is a currency story, and part of it is just people like shiny things, right? So it's it's got numerous kind of drivers going on right now.
We're all just a bunch of magpies at the end of the day. Stuart, thank you so much for joining us. That is City Head of U.S. Equity Trading, Stuart Kaiser. Okay, let's get a check on your equity markets this morning, about 8 minutes into your trading session. And we are looking at a positive start. I think this should put us around a record, maybe just below it, at a gain of 0.3%. Driving us higher, all the tech stocks. There's Broadcom, there's NVIDIA, there's Microsoft. By the way, we're going to get more tech earnings tomorrow. Oracle will be reporting after the bell, but it's the usual suspects of the big tech reporting. On the downside, it seems that SpaceX is really wreaking some havoc. AT&T and T-Mobile and Verizon, some of the biggest losers this morning with, again, SpaceX's Starlink buying some spectrum, mobile spectrum rather, from EchoStar, challenging some of those incumbent players. Now, when it comes to the sectors as a whole for this S&P 500, a somewhat even split, I guess you would say. We are still looking at infotech. That seems to be the thing leading us higher. Some of the more safety type sectors are moving lower. Real estate, healthcare, those are falling by at least 0.7% this morning, Matt.
Yeah, it looks like a sell-off in the defensive indexes. We're looking at 6,500 basically on the S&P 500, and the closing high for those keeping track was Thursday at 6,502. The all-time intraday high on Friday was 6,532. So we're pretty much there. Coming up, it's a big week for Apple with the September product launch tomorrow, including, if you needed this, a thinner iPhone. Details next. This is Open Interest.
At what point do you say, we made a mistake and we're getting out? How long do you give it before you say, this isn't working?
That's one of the most critical differentiators between great investors and just mediocre investors. Because on one hand, you have to have confidence and conviction in all the work you've done, the decision you've made, that if you have a little stumble here and there, if you immediately are selling out, you're never really going to fully realize the depth of potential long-term success. And yet, on the other hand, if you're stubborn and you refuse to admit I'm wrong, you continue to think the market's wrong and I'm always right, then you'll get caught in some very, very difficult positions over time. So that ability to have a fresh perspective, take in the new information, even when things aren't going the way that you'd expect or to hope, and to really understand from this price point today, is this still going to be one of the most compelling investments or not?
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins.
We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Let's get you some of the top calls, some of the analyst action in focus this morning. Starting off with Chewy, they're getting a raise to a buy at Mizuho. They expect a strong earnings report and a positive outlook when they report on Wednesday. Shares up only about 0.2%. Next up, TD Cowen upgrading Canada Goose to a buy. The analysts there see new products driving sales growth at the coat maker. Those shares are up 4.5%. I'm not sure how much innovation you can have with just puffy coats. Anyway, finally, Morgan Stanley and Barclays raising their price targets on Oracle. The software company has earnings that will be reporting tomorrow, so everyone giving them an upgrade. Shares up 2%, Matt.
All right, so a lot of upgrades there for Oracle, an interesting story and stock to watch. But I want to get back to the big spectrum sale we've been talking about. SpaceX struck a $17 billion deal with EchoStar to help expand its Starlink network. Really, I think the story is of a spectrum buy, right? Let's bring in Bloomberg Tech's Ed Ludlow, who's been reporting on SpaceX and Elon Musk for years. And Ed, you could say like EchoStar, the stock is moving a lot and they've sold a ton of spectrum. Right. That's kind of interesting. But far more interesting is the growth in Elon Musk's ability to offer direct-to-device communications.
And Starlink's ability to stand on its own 2 feet in a market where it's direct to device, because they already have an existing relationship with T-Mobile where you can do that. I was part of the beta testing phase of that. It works quite well. SpaceX can now just offer this directly. So $17 billion is also a really interesting piece of M&A for SpaceX. I can't think in its history of something that big. $8.5 billion of cash split with $8.5 billion of SpaceX stock. You know, the EchoStar story was they were a bit troubled anyway. The FCC had looked at their use of that spectrum. By the way, for what it's worth, spectrum is the sort of range of invisible radio frequencies that allow you to send data from, in this case, a satellite down to Earth and a mobile phone. But people were like, is this hardware? No, spectrum is not. It's just invisible space.
I think that's a worthy explainer for all, Ed. And
I was trying to explain it to my 5-year-old daughter yesterday when I gave her an FM radio.
I hope you also emphasize it did not cause
She was
COVID
like, what's the
whatever.
antenna for? Just catches the waves.
Something you need to learn. You know, when they all signal phones, they all do this instead of this. Now, anyway, Ed, away from all of that, I mean, if you just look at some of the share price reaction, not even just the EchoStar gain, it's T-Mobile falling, which, yes, has a partnership with SpaceX, but it's also Verizon. It's also AT&T. Is this a real threat to the incumbents?
Yes, in the sense that it's a relatively nascent technology. The idea that if you don't have cellular tower coverage and you're up a mountain or the middle of the ocean or just walking in the forest, whatever it is you like to do, you can now do it directly with SpaceX. You know, the story of SpaceX has changed where the proportion of revenue from Starlink has overtaken that of launch, and it's clearly much higher margin. There is some brand appeal. We can debate the Elon Musk factor in it, but a lot of people like to go to SpaceX, do Starlink, rather than, say, sign up with a legacy carrier. So it's not that surprising to see pressure on those carrier names.
There's a great story on Apple stock, Ed.
Yes.
The company's gained almost $500 million, I think, or $500 billion, I should say, in market cap since the end of July. But the reason for the run-up is really that the tariff hit lessened after meetings with Donald Trump, and you know, regulations are not hitting them as hard in terms of the payments they can accept from Google. It's not Apple innovation or their moves in AI that's driving the stock higher.
Yeah, some of the headwinds in the first half of the year were removed, and we've discussed that in this program, right? That was the Apple stock story in the first half. The question we're asking ourselves on this network and the show is, why do we care about Apple iPhone Day? It's not as simple as saying that iPhone is 50% of revenue, but I have a chart in my back pocket that I'm not going to show now. I'm going to do it tomorrow. That basically tracks that iPhone days are a sell the news moment, but on a 30 or 60-day basis, and this is based in Bank of America research, it tends to recover. And so, you know, in a moment in time, however the stock trades this week, you know, that's a short-term thing. But over a couple of months, we really do care what's going to happen tomorrow. And with the political backdrop you talked about, the pressure on Tim Cook and Apple from the president to onshore more of the supply chain here, And above all of that, still begs the question, what is the AI story with Apple? And per Mark Gurman's reporting, we expect to learn a little bit about that officially tomorrow as well.
And I know you'll be at that event, Ed. What I want to know away from AI is who wants a thinner iPhone? Who wants that? Who's asking for that?
Yeah, my first MacBook in 2010 when I was at university was a MacBook Pro, chunky old thing. And before that, I'd been a Windows PC user. I couldn't afford the Air. And what Mark's arguing, and I think I agree with him, is that in the first instance, based on our reporting and sources, this iPhone 17 Air, 6.6-inch screen, incredibly thin, is going to be expensive. It's going to have a limited camera because of the design and the space. It's going to be priced between an iPhone 17 Pro at the top end and base model at the middle end. But it will follow the arc of the MacBook. When Mac had the Air in 2008, it was a slow burn to get it to be adopted because it was expensive. But Apple iterates on the technology quickly. And that's the argument that I think Mark's making, that initially you might see a tepid response. But people like thin phones, I think. And it also sets the ground for a foldable phone potentially in 2026. So again, the short term, we'll see what the reaction is, but the long-term roadmap is a bit more clear with that one.
I'm not buying it because I will break it. I promise you, I will snap
also,
it in half.
we have thin phones.
Yeah,
like we already have thin phones. They can't get much thinner before they start being negative space. So like, who cares?
Well, that's the next thing. They'll just implant the chip in our brains. Ed, thank you so much. Bloomberg Tech's Ed Ludlow, thank you so much. Now, coming up, retail investors are changing the IPO landscape, and companies hopeful of listing are fully embracing them. We're going to have more next. That's coming up on Bloomberg Open Interest.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check on what's going on in stocks to kick off this week. And we are seeing gains that'll lead us at least close to all-time highs. S&P 500 right now up 0.2%, 64.94, 64.95 the level there. And the all-time closing high is 65.02. So we're right there. The NASDAQ as well, gaining even more, 0.6%. And one of the big reasons for that is that NVIDIA is a heavier weight on the NASDAQ than it is on the S&P. And you can see, Mr. Profit, if you'll follow me to this corner, NVIDIA right now up 2%. When a $4.3 trillion stock rises and it's worth 12% of the NASDAQ 100, I believe, that adds some decent gains. Apple, really little changed. It's a red arrow, but only 0.1%. We just talked about that with Ed Ludlow. We're going to see new products from watches to whatever they call that Vision Pro thing to a thinner iPhone. AppLovin is one of a number of companies that's going to be added to the S&P 500 as a result. Major rally in those shares as index trackers are going to have to buy the stock. And then EchoStar, we've been talking about a lot this morning after selling a combined $40 billion worth of spectrum over the past month, basically. This morning, the deal was a $17 billion sale to SpaceX. Finally, you see AST Space Mobile on the way down this morning as it faces increased competition. Danny?
Yeah, as are Verizon, T-Mobile, all of those incumbent players. Now, elsewhere in this market, Matt, payments firm Klarna is among the high-profile companies that are planning to go public this week. And as that happens, retail investors have been flocking to the buzzy IPO market. Bloomberg's Bailey Lipschultz, who covers IPOs, SPACs, and more, joins us now. And Bailey, you can understand why retail has been going into IPOs because you've had a lot of these like crypto kind of things that are loved by retail audiences. Can someone like a Klarna recreate that magic?
We're seeing that play out. We're seeing them cater to the likes of Robinhood and Moomoo. These platforms are promoting Klarna and a number of these other companies. Moomoo, it's a trading platform. One of my favorites, just to say.
Is that like a bullish cow pun?
Is it a giant dress, or is it 2 times what a cow says?
I'll take the latter.
Okay.
Unconfirmed, though. But we are seeing these platforms catering to retail investors and promoting some of these stocks. Again, buzzier names, more household names, the likes of a Klarna or a Gemini, which has kind of the Winklevi twins associated with it and are in crypto. So we're seeing retail investors really showing up in size.
We're seeing a lot more SPAC activity today, recently as well. And today I noticed that a lot of these companies are not just in crypto, but in quantum computing, right?
Yeah, we broke the story that a SPAC led by Michael Klein, the well-known banker, is
the Lucid guy. Churchill did Lucid.
They brought Lucid public. They brought Oklo, the Sam Altman-backed nuclear fusion company or fission company. They struck a deal, $1.8 billion deal, in terms of valuation for Inflection, which is another quantum computing name. We've seen a few companies in the quantum space going public via SPAC back in the old days. So now we're seeing kind of that flavor playing up again in the SPAC market. The big question is, when do you reach profitability? When do you actually kind of unveil more products and actually drive the entire industry forward? That's the uncertainty, but we are still seeing SPACs striking deals in crypto, striking deals in clean energy, and now getting back into quantum.
Or again, right, it's a resurgence of, this was your beat during the meme stock days when it was huge, it died off, and now it's really come back.
It's really come back, and we've seen a number of serial sponsors coming back. So we see this deal from Churchill. We've seen Chamath Palihapitiya filing to launch his first SPAC since going under, or shutting down a few back in the bust days. We've also seen the Cohens, Betsy Cohen and Daniel Cohen, coming back to the market and really tapping it, though they have been leading that whole crypto and crypto-adjacent charge.
Still, it is the companies that are going public via SPAC or IPO. It's still these tech-enabled companies. When do you get IPOs that broaden out beyond that? I know StubHub was also announced today or reported that they're going to be raising money for an IPO, but still you could argue it's just another one of these tech companies. It's not necessarily broadening out the IPOs.
It's another tech company, and it's also another tech company we've been waiting for years to go public. So today we saw Netscope launch its process. We saw StubHub, as you mentioned, launch its process. WaterBridge, which is in the water space as it relates to the oil and gas industry, they started their process. We're seeing kind of a broadening out, but a lot of these deals are smaller. We have BlackRock Coffee, the first real consumer name since Kava. We have a Legent, which is a Blackstone HVAC roll-up PE play on the road right now. Figure is also in the blockchain space. So we still are seeing those themes that are catering kind of the hot markets, AI, crypto, blockchain, really dominating. The big question is, when I talk to bankers, what do we see throughout the fall, and really a big focus on what 1Q26 looks like?
By the way, the Politico report on the Bess and Pulte blow-up, apparently that was at an event that was Chamath's birthday.
It all comes full circle.
Yeah, wow, what a party.
Yeah. All right, Bailey, thanks so much for joining us. Senior stocks reporter Bailey Lipschultz there, also all over IPOs, meme stocks, and SPACs for us, and has been for years. He's the voice here at Bloomberg on that reporting. Coming up in the next hour, Franklin Templeton's Katrina Dudley on whether the U.S. is in a rolling recession or is it a rolling recovery. Plus, we're going to talk to Carlyle's head of secondaries, which is, I think, closely related to this IPO SPAC story, on a new $20 billion fundraise, and Ethan Allen, CEO, talks furniture ahead of potential tariffs. This is Bloomberg Open Interest.
about this villa? Very traditional, a lot of things of the past.
I live my very first independent life in the farmhouse, and I built it by the memory of the farmhouse, the philosophy they believe, yin yang 5 elements, the concept of the life, of the happiness. They build this kind of roof like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm a lucky man because not everyone should have the experience of the war and peace, poor and rich, technology progress. I changed during my life, rich by experience.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human being, for the world.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up to the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. A deadly day in rush hour traffic in Jerusalem. Officials there say at least 6 people were killed, 21 hurt when 2 attackers opened fire at a bus stop. The BBC's Yolande Nell.
Dashcam footage captured the moment when a morning bus commute in Jerusalem turned into a deadly shooting attack. An off-duty Israeli soldier at the scene shot dead 2 suspected gunmen, believed to have come from the occupied West Bank. This is usually a busy junction. It's near to Jewish settlements in East Jerusalem, and Palestinians and Israelis mix on the road.
So far, no claim of responsibility, but Hamas issued a statement welcoming the attack. Meantime, Israel's military says it demolished a 12-story office building in Gaza City today, an hour and a half after warning the occupants to get out. President Trump took in the men's final at the U.S. Open as large demonstrations took place in Washington and Chicago after he amped up threats to send in National Guard troops to more cities. Correspondent Ed O'Keefe is at the White House.
When the president got back here last night from watching the tennis, he was asked if he had plans for Chicago this week. He responded, no, not really. He said they're going to go someplace and that a decision would be made over the next day or two.
There's new controversy over a plan to get rid of vaccine requirements for school kids in Florida. Questioned by CNN, the state surgeon general admitted he had not studied the potential impact because his focus was personal rights. CBS News medical contributor Dr. Celine Gounder.
This is alarming. If you're going to make a big change in policy, any kind of policy, whether it's public health or not, you should be making projections as to what will be the positive and negative impacts of that decision.
The Australian woman convicted of poisoning her in-laws with a mushroom-laden beef Wellington has learned her fate.
The total effective sentence is life imprisonment, and I fix a non-parole period of 33 years. 4 generations of the extended Patterson and Wilkinson families have been traumatised by your crime.
A tiny roadside gas station in rural Fredericksburg, Texas is getting a whole lot of attention after selling one of two winning tickets for Saturday night's $1.8 billion Powerball jackpot.
We don't know. I could have sold it. Any of my cashiers could have sold it.
Melanie Carter, who manages Big's gas station, says she was floored when she found out.
We are a brand new store. We opened the end of February of this year, so this is great excitement for us. It's also a blessing for whoever the winner was.
The second winning ticket was sold in Missouri. Each has a cash value of over $410 million. Their owners have not been identified yet. This is CBS News. The joke was on Howard Stern fans today, who were led to believe the shock jock was ending his satellite radio show.
The Associated Press, Variety Magazine, and CNBC all fell for it, reporting that Stern was leaving Sirius XM. But it was a prank, pulled off with the help of another Sirius XM host. The AP said Stern was replaced by a flustered Andy Cohen.
I don't know how much I'm allowed to say, except that he's not here, and I am.
About 20 minutes into the show, Stern returned and admitted it was all a hoax. Christopher Cruz, CBS News.
Police in Glendale, California have caught up with a couple of suspected wedding crashers. They say the alleged thief, Armian Shiragini, was arrested at his home in Sherman Oaks, the getaway driver in Los Angeles. Officials say Shiragini is the one seen on surveillance video running off the dance floor with a gift box filled with $60,000 in cash and checks. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good morning from the Bloomberg Interactive Broker Studio in our headquarters in New York. I'm Scarlett Fu here with Alexis Christoforous. Paul Sweeney is taking a well-deserved vacation.
Yes, he is.
Coming up this hour of Bloomberg Intelligence, we're going to keep track of what's going on in France. There's a government that is teetering, and Stephen Carroll of Bloomberg Daybreak Europe will make us smarter on that. We're also going to talk with Louis Navalier. He's founder and CIO of Navalier & Associates on these markets, with the S&P 500 higher by 0.2% before some key inflation data. Herman Chan of Bloomberg Intelligence will talk to us about PNC agreeing to buy Colorado's First Bank, spending about $4 billion for that deal. And later on in the program, we're also going to speak with Ellen Wald about OPEC Plus's decision to increase production ever so modestly. All of that coming up on the first hour of Bloomberg Intelligence. But let's get things started first with John Tucker, who's got our Bloomberg Business Flash. John.
And this flash being brought to you by IBKR Financial Advisors. Switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. Learn more at ibkr.com/RIA. In the early going mixed market right now, S&P 500 up 13. That's a rise of 0.2%. The Dow down 76 points, and the Nasdaq 100 right now up 171 points. That's a rise of 0.75%. Broadcom, best performing stock in the S&P 500 right now. That is up 4.4%. Deal news today includes Starlink, SpaceX company, buying wireless spectrum from EchoStar. It's worth about $17 billion. EchoStar shares right now up 17.2% as a result of that deal. And ahead of the Fed meeting next week, we're going to get inflation data this week. Producer price data on Wednesday, consumer price index on Thursday. Standard Charter expects a 0.5 percentage point Fed cut. Cameron Dawson is with New Edge Wealth.
The question is, do spicy hot inflation prints really driven by tariffs and supply chain disruptions challenge that rate cut path by the Fed, even as they're looking at some of the weaker jobs data like we got on Friday?
Yeah, right now the 2-year yield 2 basis points lower, 3.48. The 10-year is down just about 3 basis points. That's about 4.04%. Did you see this one from Politico? Great story. A private dinner attended by dozens of administration officials and close advisors to President Trump was marred by a dramatic clash between two of the president's top economic officials, with Treasury Secretary Scott Bessent at one point threatening to punch the top housing official, Bill Pulte, in the bleeping face.
This was during the dinner?
This was, yes, during the reception. The dinner did follow.
Wow.
I mean, that's to be a fly on the wall.
That is
for that dinner.
Very interesting.
Spicy.
All right, John Tucker.
Looking at the two of them, sizing them up,
yeah,
I would have to go with the Treasury Secretary.
I think
on
my
this
money's
one.
on the Treasury Secretary. I think you're right, John. We'll see what happens at the next dinner. All right. Market Drivers, guys, brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio, small firm attentiveness, big advisor impact. Just go to commonwealth.com to learn about their consultative support and technology.
All right, let's take a look at some stocks on the move today. I'm Scarlett Fu with Alexis Christoforous, and let's bring in Bloomberg's Christine Aquino. And Christine, you're focusing on one company whose shares have hit a record high.
Yeah, absolutely, Scarlett. That is EchoStar. John Tucker mentioned this earlier as the subject of this deal with Elon Musk's SpaceX. So EchoStar, ticker SATS, shares are up more than 18% at the moment. So a healthy clip from that deal. It is definitely investors taking this deal positively. So as John mentioned earlier, it is a deal to acquire, for SpaceX to acquire some EchoStar spectrum licenses. So they're designated for satellite and mobile communications. By the way, Bloomberg reported on this earlier, and the company confirmed it in a statement. And so, they're saying that the sale should resolve inquiries from the FCC. Apparently, the regulator was accusing EchoStar in May of not effectively using the spectrum it was awarded and threatened to strip some of its valuable licenses. So Bloomberg Intelligence weighing in on the deal, saying that it may materially shape EchoStar's credit profile by enabling significant debt reduction from its $27 billion load.
All right, let's go into banking for a moment. PNC making a big push into Colorado and Arizona with a $4 billion deal.
Yeah, absolutely, Alexis. So PNC, ticker PNC, shares down more than 1% at the moment, down 1.3%. So investors not necessarily seeing that as a positive at first blush. But yes, PNC agreeing to buy First Bank holding for about $4.1 billion. That will add $26.8 billion in assets for PNC, particularly in Colorado and Arizona. That transaction is expected to be completed early next week. And after that acquisition, PNC's total assets will be approaching $600 billion. So that will bring it closer to the largest regional bank, which is U.S. Bancorp. And Bloomberg Intelligence saying that the pricing looks conservative. The deal is at 12.1x annualized 2025 EPS.
All right, so let's stay in the financial sector, but move on to a fintech company, Robinhood.
Yeah, absolutely, Scarlett. That is enjoying a nice bump this morning. So Robinhood, ticker HOOD, shares are up more than 13%. And that's because we did get news late on Friday that it has been added to the S&P 500. And, we know that its rise was really during the pandemic, when we had all of these retail traders probably bored sitting at home and trying to figure out what to do with their stimulus check. And therefore, Robinhood came in and provided a platform for them to trade. And now 5 years later, it's becoming a lot more legitimate by joining the S&P 500. So that is quite astounding. And, you know, the one perk of joining well, there's many perks, but one significant perk for Robinhood by joining the S&P 500 is that they will enter the portfolios of index funds, pension plans, retirement accounts, which is quite the contrast between them and that type of investor and the retail traders that have really given rise to Robinhood.
For sure. All right. Thanks a lot for the update on our market drivers, Christina Aquino. Always appreciate it. Talk to you a little later on. All right, folks, it's a big day in France. That's because, you know, getting rid of governments is now about as commonplace as complaining about them, don't you think?
It seems like it's an annual thing, isn't it?
It is. And so later today, there's going to be a no confidence vote for the prime minister. If the government collapses as expected, France is going to be looking for its fifth prime minister in just 2 years. Here to break it down is Stephen Carroll, Bloomberg Daybreak Europe host, coming to us from our Paris bureau. So, Stephen, just break down for us what we can expect to happen in the timing of today.
Sure. Well, things are already underway in the National Assembly. So we've heard from the Prime Minister, François Bayrou, Prime Minister as he is for now. More on that in a moment. He spoke for about 40 minutes, reinforcing his key message that France has to tackle its debt problems. We're now in the middle of hearing from the leaders of all of the political parties in the National Assembly. So altogether, 12 speakers are lined up. We're on number 3 at the moment. It's the leader of the Green Party who's speaking right now. We've heard from the centre-left Socialists and from the centre-right Republicans Party, and they have been laying out their positions. The Republicans, some of whom are supporting the government in this, the Socialist Party who definitely aren't and who are voting against the government in this motion as well. Even though we still have to hear from quite a lot of these speakers, we already know how most of them are going to vote, and it basically doesn't look good for François Bayrou. He doesn't have a majority in Parliament. We knew that already. But since even as soon as he called for this confidence vote 2 weeks ago, we had the parties coming out on both ends of the political spectrum saying that they would be voting against confidence in the government. So it does look like we will be heading for, as you say, the 5th French Prime Minister since 2022.
And just like last year, Stephen, the issue is France's deficit and what it's going to do fiscally. And here, politicians, opposition lawmakers are concerned about his plans to narrow France's deficit in 2026. What is he doing that has got everyone so worked up?
Look, François Bayrou, to his credit, has been talking about the problem with France's debt for at least 20 years. I remember him talking about it in the 2007 presidential election campaign. He's always been very consistent that France spends too much and its debt is growing at too fast a rate, and that something needs to be done or it's going to be saddled onto the next generation. That was the whole plan with this budget. He saw this as his main aim as Prime Minister, was to try and put France on a sustainable fiscal path. Of course, the debt has gotten so much worse over the years with things like the COVID pandemic and the government support that was provided during that period, but also during the energy crisis in Europe and the government support that was provided to households at that period as well. So what he tried to do was bring the deficit down with his plan to 4.6% of GDP next year. That's down from the 5.4% of where it is this year, which is the widest in the euro area. That involved 44 billion euros of tax rises and spending cuts in the next year. Some controversial ideas in there too, like cutting 2 public holidays in France. You can imagine how that went down. He said it was all open for negotiation, but essentially nobody wanted to negotiate with him, and that's led us to where we are now.
Well, let's talk, Stephen, about why we should care, because what are the ramifications here for the Eurozone and even for those outside the U.S., given the fact that we are such a global economy?
Yeah, I mean, look, first of all, it's worth remembering that France is the second largest economy in the euro area. This is a big economy in Europe. It also has a large amount of debt, 60% of whom are held by foreign investors. So that is something that has already an international impact there too. Interesting, our colleagues from our FX and rates teams already noting that French bond yields have actually come down slightly as this debate has been playing out. Some of them see they're getting quite good value, quite a good return on their investments in French debt right now. There is a question of broader fiscal stability in the euro area when you're talking about a country that's heavily indebted, and it's not France alone. If you think about Italy, their debt-to-GDP ratio also above 100%. We know the stories in the past from Greece, Spain and elsewhere that have taken a very long time to come under control with very painful measures. So there is a question of how this could spill over and drive up borrowing costs elsewhere in the euro area. Could it force the European Central Bank to intervene? We're not there yet. I mean, that's the situation where it is right now, but certainly that's the warning that Francois Bayrou is trying to put out there with this budget, is that if things aren't done now, it's going to be a problem that gets much worse, leaving France in a more difficult position when it comes to things like paying for pensions and social benefits and essentially the minimum of what people expect to get from the state here.
Right. Stephen, very quickly, in about 30 seconds, where is Emmanuel Macron in all of this?
Well, it's up to him, essentially. If the French government loses this confidence vote, he has to pick the next prime minister, or he has the option of calling fresh elections to the National Assembly. He said he won't do that, but I always say that Emmanuel Macron likes to surprise us, so we never know. So the next big job he'll have is to decide who he wants to be prime minister and how he thinks they might be able to build somewhat of a working minority in the National Assembly, something that the past 3 prime ministers haven't been able to do.
All right. Thank you so much for giving us a rundown of what we can expect. A big day here in France. Stephen Carroll, he is Bloomberg Daybreak Europe host on the French no confidence vote. Right now, the lawmakers are still speaking, but there is a vote scheduled for later on this evening in Paris, about noonish time on the East Coast. And at 8 to 9 p.m. Paris time, we will expect a result. That'll be about 2 p.m. New York time. Alexis.
Looking forward to it.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash being brought to you by Oracle. Attention growing businesses, Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. Right now, the S&P 500 is higher, up just 7 points. That's about 0.1%, 6489 on the index. So it's hovering around the record close of 6502 that we had last week. But only 3 of the 11 major industry groups in the index are up right now. It's being led by information technology. That's home to AVGO, Broadcom. Broadcom up just over 5%. It also happens to be the best performing stock in the S&P 500 right now. Worst performing industry group, that belongs to real estate right now. EchoStar shares soaring, hitting an all-time high. The satellite broadband company agreeing to sell the wireless spectrum to SpaceX Starlink for about $17 billion in cash and stock. And it was a big deal over the weekend. OPEC Plus agreeing to what I guess you could call a pretty bold strategy. It's aimed at trying to sink the competition. They're going to further raise the amount of oil they produce from October. And there's some element of caution to start off with the new policy. 8 of the OPEC Plus nations will add just 137,000 barrels a day initially. So I'm going to say that's why oil right now, despite that news, is actually higher. Brent, the international benchmark, is up 47 cents a barrel, 65.97. And then the refined product, which I put in my gas tank, that's like $3.20 a gallon. At least it was this morning. And that in large part is because of the Western sanctions on Russia and Iran. So we're not seeing a lot of relief at the pump, at least, I'm not.
I filled up for $3.14 in upstate New York this past weekend.
Are you the kind of person who will drive an extra mile to get the better gas price? Because I know
quite a trip to save.
I am. I feel better. It's a psychological thing.
Anyway,
yes.
We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alexis and Scarlett.
John, thank you very much. As I think about that as I drive the extra mile to get my next tank of gas. Let's bring in Enda Kern right now. He is our global economy reporter to give us an update on the latest on trade headlines and the U.S. economy. And I'm looking at a story about how the U.S. is now proposing annual approvals for exports of chip-making supplies to companies like Samsung Electronics and SK Hynix. What does this mean in terms of how easy it is for these companies who are operating in China to be able to do what they need to do to keep the global economy going? Is this an added irritant?
Well, it's certainly an added complication, Scarlett. As you mentioned, essentially SK Hynix and Samsung are going to have to go to the US government and get an approval to sell basically the year's worth of equipment and kit and gear that they want to sell into their clients in China. So these are providing kit to all of the the smartphone makers and electronics makers and all of the consumer kind of goods that we use every day. So on the one hand, it allows the US to keep some control on that process, make sure that chips are flowing to maybe non-sensitive areas that they want to restrict. That's the US side. They're keeping kind of a quota of approval on that. But on the other side, of course, the two companies can carry on doing business and doing trade with China. That's a sense of relief for them. It's just certainly, obviously, a complication. It feeds into this whole backstory of technological competition between the two big economies and speaks to the idea that this kind of tit-for-tat US-China story hasn't gone away, even though they have, of course, ongoing trade negotiations happening in parallel.
And I want to talk about China for a moment because I know the Chinese President Xi Jinping and Russian President Vladimir Putin, they're going to be attending a virtual BRICS trade summit today. It's hosted by Brazil, and I guess it's meant to coordinate a response to Trump's new tariffs. Who will not be there? India's Prime Minister Modi. He's sending a senior representative. So what do you expect? What are you looking for from that summit today?
Well, on the one hand, it's significant it's happening at all. This was called, as you mentioned, by Brazil's President Lula a week or two ago. It is bringing together leaders of some of the world's biggest economies, clearly in response to President Trump's pretty hawkish, aggressive trade policy. So it speaks to this idea that there's another bloc out there, the BRICS bloc, willing to push back. But then, of course, as you mentioned, within the detail, India's President Modi won't be online. We don't, need to know more detail about that, but that's an absence in and of itself. But more broadly, I think there's still some skepticism about how unified that group actually is. Clearly, they are aligned on some topics, but how aligned can they be in terms of creating a unified response against President Trump when it comes to these tariffs? But we do know that these companies are grating when it comes to the tariffs that the US has put on their goods, so they are looking for options to respond, and clearly we'll have to see what comes out of it, but that's what the mood music around this meeting is going to be.
So we started with Korea, or Korean companies at least. I kind of want to end there because over the weekend we had, of course, this immigration raid, or I should say last week, at a Hyundai Motor and LG Energy Solution battery venture in Georgia, which raises a lot of questions, Enda, about how the president is intent on forcing companies, including foreign companies, to bring jobs and production back to the U.S., but it's hard for them to do that if they're going to see that their employees and their factories get raided.
Yeah, look, clearly there's a legal aspect to this. The immigration authorities can comment on what the specifics are there, but just broadly, the optics of it obviously are very jarring for South Korea. Hundreds of South Korean nationals part of this roundup of workers from this plant at a time, of course, when big trading allies are looking to invest more in the US as part of the ongoing trade negotiations. And of course, you throw into that mix the ongoing conversation around skill shortages in key critical sectors like construction sector and in more higher value add manufacturing sectors and the like. It all adds to the idea that doing business with the US is getting somewhat more complicated. South Korea, of course, have responded. They plan to repatriate those workers back to South Korea over coming days. It doesn't sound like it's going to derail broader trade or economic relations between both economies, but it does speak to how the aggressive moves in immigration can spill over into causing complications on the trade front too.
All right, and Bloomberg's global economy reporter, thanks so much for talking tariffs with us today. We appreciate it. Want to switch to the markets for a moment. Just looking right now, we've got a mixed market with the Dow. The laggard here down by about 17 points. It's a big week. We know key reports this week on jobs and inflation. And of course, we got that little Fed meeting next week. So here to break it on down is Louis Navalier. He's chairman and founder at Navalier and Associates. Louis, good to have you. I want to talk about this jobs data we're going to be getting tomorrow because we're expecting quite a large revision. This is backward-looking data, we know, to March. But do you think it's going to be market-moving data?
It might be. I hope they just get rid of all the seasonal adjustments. That's what's messing everything up. I mean, look at the downward revisions for June. I mean, there were 2 downward revisions for June. So if the Labor Department can't hit the broad side of the barn, let's just start fixing it. And I know they do this twice a year, okay? But I really would like to see those seasonal adjustments disappear.
Yeah, I think a lot of people would. However, we know that there are problems with the response rates to surveys. So it just feels like the quality of this data is now under question in a way that it wasn't a few years ago, certainly before the pandemic. As an investor, what does that mean for you in terms of you're looking for the most reliable data to get a better sense of where the U.S. economy is?
Well, fortunately, we have ADP, and that's pretty reliable. The ISM surveys are also very good. Manufacturing still below 50, but it did improve. There's some green shoots in there. And services obviously improved dramatically. And, we're growing, but, the problem with America, as Scott Bassett said, 50% of America is in debt, okay? And that's why we got to lower rates, because those are the people we got to fix. And, if you're a boomer and you got real estate and stocks, things are great, okay? But if you're in that bottom 50% or a younger person that can't, afford a home and things like that, it's really tough. And I think we're bordering on deflation because real estate's falling now across America. I will be very curious of owner's equivalent rent on the CPI. I know that's just rental costs, but there's a glut of rental property now. So we'll see if that finally cracks. Once that cracks, we should get within the Fed's inflation target. And of course, we got falling crude oil prices now. OPEC just boosted production. I know oil's up today, but we're entering the time of year where seasonal demand collapses. So we should have much lower oil prices for at least the next 5 or 6 months.
So if we're indeed entering this deflationary atmosphere, as you're suggesting, what does that mean for rates? I mean, pretty much next week, it's a foregone conclusion that we're going to get a rate cut. I guess the question now is how big will it be? Do we get 3 at each of the Fed's, meetings for the rest of the year? What's your take?
Well, the consensus is 3. We'll see what the dot plot says. I think if you really want to know what's going on in rates, you have to look overseas. Britain and France have budget problems, and they both might have the collapse of their respective governments. In fact, Bloomberg's done a great job reporting on that today. And so, what happens is if you can't pay your debt, you got to keep your rates low, just like Japan did, or just like China is now, because they have a massive demographic problems, and they might even have to have a currency devaluation. So I'm expecting a global interest rate collapse, period, okay? And hopefully that will cause money to flow to America because our rates are higher than everybody else and our economy's growing and the dollar will get its mojo back. And that's what I'm expecting. But those external factors are probably the most important. And, the bond vigilantes tried to jerk the rates around last week, but they ended up a lot lower and they're still falling today.
Yeah, it's not just Britain and France. We're also looking at over in Japan, the Prime Minister Shigeru Ishiba said he will step down following weeks of calls for his departure. So there's going to be a change in leadership in that country as well. So it feels like G7 is very much struggling with these long-term structural debt issues. Louis, when you bring it back to the U.S. and you look at what's happening in the markets here, we know September historically is a very bad month for U.S. equities. It tends to be really weak because pensions and mutual funds are rebalancing their portfolios. Retail buying tends to slow. But does that change because we are looking at a September in which the Federal Reserve will cut rates and perhaps, possibly, could cut rates by maybe even 50 basis points?
Yeah. Well, the weakness in September is through September 15th. A lot of it's also everybody's paying their estimated taxes. But after September 15th, I think things will be fine. And we get the Fed rate cut. We get a dovish FOMC statement. I think it would be great if they did 50, but, they may not want to panic markets. It really depends where market rates are. And if rates are going to go down 150 basis points, as Scott Bessent asked for, we're going to need Europe to crack. And once they crack, then all hell breaks loose, and then the 10-year will be 330.
All right, Louis Navellier, thank you so much for joining us. Louis Navellier is founder and CIO at Navellier and Associates, talking about these markets. And Alexis, we've got some big revisions to the jobs growth, at least for the 12 months to March of 2024
than we thought. Right, heading into even the Trump administration. I'm sure the Trump administration will be quick to point that out.
I'm sure they will be. And of course, that'll increase the pressure on the Federal Reserve to move quickly at its next FOMC meeting on September 17th. This is Bloomberg Intelligence.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. So the S&P 500 continues to kind of flirt with the record we set last week, but only 3 of the 11 major industry groups are higher right now. After last week's weaker jobs report, the economic data, of course, this week, including the PPI and the CPI, and Eric Winograd, the chief economist at AllianceBernstein, says a 0.5% rate cut at next week's Fed meeting is certainly not out of the question.
I don't think it's in order, but I think it's on the table. I think that there are certainly scenarios where you could see them doing that, largely circulating around the inflation data we get later this week.
Right now, the Dow down 8 points, S&P 500 20 points higher. That's up 0.3%. 6502 on the index, so just right about that record. NASDAQ Composite Index right now up 174 points. That's a rise of 0.8%. 2-year yield 2 basis points lower. That's at 348. 10-year down a basis point at 4.06%. Deals plenty this Monday. SpaceX, the Elon Musk-backed company that owns Starlink, has agreed to acquire wireless spectrum from Charlie Ergen's EchoStar. Price tag there about $17 billion. That's going to be in cash as well as stock. PNC Financial agreeing to buy First Bank Holding for about $4.1 billion. That'd be a trick.
Really big.
PNC shares down 1.2%. EchoStar shares, by the way, they're 17% higher. Target says some of its stores are going to be open at midnight, local time on October 3rd. They're going to sell copies of Taylor Swift's Life of a Showgirl album. Number of local stores taking part in the midnight opening will be about 500. They've yet to announce. It's going to be on their website.
First of all, buying a physical book, going to a store to buy a physical book.
It's a book?
It's unheard of.
It's a
I can
book?
already see the line
No,
around
I'm
the
kidding.
block.
Album.
Oh, it's an album. Yeah.
But also going to a physical store to buy an album.
Yeah, I don't get
This
it.
is a collector's item, guys.
I guess.
Yeah, you need the physical
Is there
copy.
going to be a poster that's included?
I would hope so. I mean, if you're standing in line at midnight, I'd like to think Taylor Swift is including a poster, but we don't know. You didn't hear it from us.
Don't know what the price tag is, I confess, but
Get on that, John.
we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Alexis.
All right, Scarlett, Alexis, Christophorus here on Bloomberg Intelligence. Paul Sweeney is off for the week. We want to also get a check on oil prices. You have Brent crude up about 0.75% at $65.98. WTI traded here in the U.S. is up about 0.6% at $62.24. And this after OPEC Plus agreed to raise production at a modest rate. So it kind of is counterintuitive why the oil prices would be rising on this news. So let's bring in Ellen Wald. She is president of Transversal Consulting, also a senior fellow at the Atlantic Council. Ellen, can you explain to us why it is that oil prices are moving higher when OPEC Plus is increasing production?
My guess is that there was definitely some talk that this could have been a larger production increase. And so they're actually kind of compensating backwards because it was expected that it might be a bit bigger. One of the other interesting things is that the group recently just put out a compensation plan. So a lot of the countries that actually agreed to the voluntary increase in production are also being tagged for overproducing their quotas. So they've established a kind of schedule for them to cut production, actually. So while they're putting through this formal production increase, it's actually not going to put very much more oil on the market other than really Saudi Arabia. A lot of these countries don't have that spare capacity, or they've already been overproducing and actually have to cut. So it's a production increase that isn't exactly what it is been said to be.
More than meets the eye, Alexis.
Yeah, exactly. So, I mean, look, we have an impending supply glut, right, of oil on the market. I know that this is just a modest increase, but it seems as though the mandate is shifting, right, for OPEC. Is this really more about boosting market share than it is about supporting prices, Ellen?
So I don't really see it so much as like a ploy for market share. I think that OPEC countries are very secure in their market share, particularly Saudi Arabia. Really, I think this is an opportunity for Saudi Arabia to put more oil on the market, which I think they want to do, and they do see a need for this. I know we're all talking about this oil supply glut, but OPEC's actual forecasts are not nearly as, they don't see as big a supply glut as a lot of the other forecasting agencies. So if you kind of look at this in line with what OPEC is saying, there's not actually as big a supply glut as is feared. In fact, apparently a lot of countries there already is more oil on the market than the official numbers are showing. So we may not really be in for as dire a supply glut as we believe to be. Of course, a lot of that depends on economic output, economic progress, in many areas, including China. It also depends a lot on Russia, and I think that this is also potentially a way of responding to Trump's new sanctions and terrorist policies about Russia, because Saudi Arabia wants to have enough oil to supply those countries that are either going to be cutting back on their purchases of Russian oil or, are already not purchasing Russian oil. And so they want to make sure that there's enough oil where they can supply them. So while I'm not sure I would say that they're fighting for market share, they're looking at maybe shifting their customers, from one area to another.
That makes a lot of sense. Thank you for explaining that. Ellen, one detail that really got my attention was the fact that this was an 11-minute meeting on Sunday, which feels like it was perfunctory. What does that suggest to you in terms of how open these discussions and these conversations among OPEC Plus members are?
Oh, I think this was definitely a Saudi Arabia says, this is what we're doing, guys. Hop on your Zoom and let's all just confirm it. Because one of the things about OPEC and OPEC Plus is that it operates by consensus. So everyone has to agree. It's not like they can just take a vote and majority rules. Everyone actually has to agree. And so that means a lot of times the decisions are coordinated beforehand. So there's a lot of, WhatsApp and signal chatting amongst the ministers before they actually step onto that, get on that Zoom and kind of affirm what's already been agreed upon. And I do think this is mostly Saudi Arabia saying, look, we're going to put more oil out there, and the rest of you guys need to step up and cut your overproduction. And, we'll kind of give you a little bit of wiggle room by increasing production for everyone. But, this is what it's going to be. And I think that in this case, it was really hard to say no, because this is all voluntary anyway. And I wonder when we do actually see the numbers for who's producing what, if they will actually conform to this compensation plan or if they're just going to continue in their overproducing ways.
And Ellen, just want to talk about the impact of lower interest rates on these big oil companies, because we could be very well entering a period of lower interest rates from the Federal Reserve. So just connect the dots for us on how that might affect oil.
Sure. Well, a lot of oil companies, especially those in the U.S., cite higher interest rates as reasons for lower revenues. In fact, and this is not limited to just oil companies. We're also talking about lots of companies in energy, natural gas companies, utilities alike. And so I think a lot of them are concerned about expansion plans and going through with these with higher interest rates. If interest rates are lowered, I do think we'll see companies that know that they need to expand or they need to, make infrastructure changes or do infrastructure upgrades. I think they will start to, take advantage of those lower interest rates, and maybe we'll see more of those projects get started despite an atmosphere of low prices. So we could have low prices and see some projects getting started because, by the time those projects start putting out oil, prices may very well be higher. We may be in a different part of the cycle, but they want to take advantage of lower interest rates, particularly if there's a sense that could change with the new administration. So I think we should look for that.
Ellen, very quickly, does this put the lower interest rates, the OPEC plus modest increase in production, does this put U.S. shale drillers in a better or worse position?
You know, that's a really good question. I think it really does depend. We're at very high levels of production, but there's a very big sense that this is it. This is the top, and it's going to be falling down. I think that you know, we've seen some big companies announcing they're going to be laying off people and consolidating. So I do think we need to watch that space carefully. We could definitely be seeing some pullback in production.
Ellen Wald, president of Transversal Consulting and senior fellow at the Atlantic Council, on the latest from OPEC+. Oil prices slightly higher, almost by 1%. From New York, this is Bloomberg Intelligence on Bloomberg Radio.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
10:53 Wall Street time. I'm Alexis Christophers along with Scarlett Fu. You're listening to Bloomberg Intelligence, and we've got a big bank merger to talk about here this Monday. PNC agreeing to buy Colorado's first bank for about $4 billion. This is a big push by PNC to really go coast to coast. And here to break it down for us is Herman Chan, Bloomberg Intelligence's senior analyst for U.S. regional banks, joining us live here in our New York studios. Herman, good to see you.
Thanks for having me.
First off, I'm just wondering, are regulators going to be okay with this? Because the combined company is going to hold 15% of deposits in, what is it, Colorado?
Yeah, in the Denver market. So that was a real push for this deal in particular. But the regulatory landscape has been really great for banking and getting bank deals done. That's why you've seen some more bank deals over the past couple months. You saw Huntington, which is based in Ohio, go into Texas for Veritex. And you've seen a merger of equals in the Southeast with Synovus and Pinnacle. And this is sort of like the third large regional bank deal over the past couple months. So it just sort of signals that the Trump administration is really open for bank M&A.
And this is not PNC's first attempt at really expanding its Colorado presence. It had previously sought to open 16 locations in Colorado. Why is Colorado such a hot market for PNC?
Right. I would take a step back and sort of highlight that the PNC, which is mostly in the Northeast, Mid-Atlantic, Midwest, that they've expanded across the Sunbelt states and Colorado with the 2021 deal for BBVA USA. And they sort of double down on those markets with this expansion plan to grow organically by opening up new branches. And this deal today that they announced really sort of supports that growth and accelerates it in Colorado and in Arizona.
So Herman, you obviously, you're a specialist here in U.S. regional banks. This is your sweet spot. So I'm just wondering, as you look out onto the landscape now, who might be the next takeover candidate? Who might we be talking about in the not too distant future?
Yeah, so you've seen some of these deals where these slower growth Midwest banks grow into areas like Texas, Florida, Colorado. So the banks that are sort of smaller in size, and we're talking about First Bank's about 20 billion in assets. So banks of similar of that size in these higher growth markets are really attractive to some of these larger institutions.
So with this purchase, PNC's total assets approaches $600 billion. It will bring it closer to the #1 regional bank, which is U.S. Bancorp. Is U.S. Bancorp still a regional bank, Herman?
Yeah,
it is?
I would say there are 3 super regional banks, and I would put PNC, U.S. Bancorp, and Truist, where they're sort of below that 750 mark, but larger than your typical regional bank. And they PNC now is a coast-to-coast lender, and have operations all from the Northeast all the way down to Florida, Texas, California. So you can't really call them a regional bank at this point. I would view them as more super regional.
And I want to tie it back to the Fed next week and interest rates, because don't all roads really lead there at this point? And
That's right.
Want to talk about what, again, if this is going to be an environment of lower interest rates for the foreseeable future, what is this going to mean for the banks, but especially these smaller regional banks? Because I'm thinking it may even squeeze their profitability more.
Yeah, it's interesting because we had a few Fed rate cuts at the end of last year, and the regional banks that I cover were able to navigate that pretty well. They were able to keep their net interest margins, which is a key metric for profitability, fairly stable. And that's one of the reasons why they've been able to do that, is they've been able to lower their deposit costs, which was one of the things that really is a key metric for banks to really show top line growth. On top of that, lower interest rates could help loan growth. You've seen some companies like Rocket Mortgage be very ebullient for lower interest rates, and so that could help improve some of the demand for lending, and that's something that we're seeing so far over the first half of the year.
So they'll make it up in volume. What they lose in profitability, they plan to make up in volume.
They can make it in volume. You'll see some dents in like the rates that they charge for loans, but they'll also make it up in volume and lowering their funding costs.
When you look at the landscape overall of M&A in the banking sector, it feels like we've been waiting for something to happen for a long time. And maybe this is kind of the first domino that falls. Yeah. Will the big banks, and I'm talking about the JP Morgans, the Bank of America's, Wells Fargo's, will they play any role in this consolidation?
They're already too big. So there's, they are prohibited from doing such deals because they just have dominant market share in their markets. One thing that we did see during the height of the regional banking crisis a couple years back is that JP Morgan bought First Republic in an FDIC failed bank acquisition. So if we, in the sense that if we do get to a place like that, that's when the big banks can play. But in a straight M&A type scenario,
to clean up messes, they can clean up
messes, but they can't outwardly buy a bank at this point. They're just way too big.
And just what about the consumer out there only shopping for the best deal? You know, it used to be that these smaller regional banks would be the place to go for the better CD rates, right? Or a more friendly mortgage terms. Is that still the case in the 30 seconds we've got?
Yeah, sure. So that's what really great about these markets that PNC is going to, where they can have really dominant market share in Denver and Arizona, and just having that marketing and having the branches really helps with deposit taking and helping your consumer out.
All right, Herman. Herman Chan, Senior Analyst for U.S. Regional Banks for Bloomberg Intelligence. Always a pleasure speaking with you. Thank you so much. Now, for our listeners in the U.S., a reminder that you can listen to us on satellite radio on SiriusXM Channel 121, access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM Channel 121, presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence begins.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good morning from the Bloomberg Interactive Brokers Studio in our headquarters in New York City. I'm Scarlett Fu here with Alexis Christoforous. Paul Sweeney is taking the week off. Coming up on this second hour of Bloomberg Intelligence, we've got Stephen Carroll of Bloomberg Daybreak Europe to give us the latest on the French no confidence vote. The speeches are happening. The vote is scheduled for shortly in the next couple of hours, and then we'll get the vote count. And after that, Michael McKee speaks with us on the U.S. jobs markdown. There's going to be a revision of jobs numbers tomorrow. So what does that do in terms of setting the stage for a Federal Reserve interest rate cut? Anurag Rana will be joining us after that to talk about Apple's $450 billion rally facing some scrutiny before its big product launch on Tuesday. And following that, Lisa Nee, managing partner, head of real estate at Eisner Ampner, will give us an update on the commercial real estate sector. As well, we've got John Butler to talk about Elon Musk's SpaceX agreeing to buy EchoStar Spectrum for $17 billion. All that coming up. But first, Sean Tucker has our Bloomberg Business Flash.
All right, and right now we're looking at the major stock averages. They are advancing. In fact, the S&P 500 at another record if this keeps up. Just wanted to bring you some breaking news. This is from the Supreme Court. The Supreme Court Justice, the Chief Justice, letting President Trump oust one of the FTC commissioners. This happens to be the Democratic commissioner who was reinstated to her job after an appeals court ruled that she couldn't be fired except for cause, of which there was none, and the Chief Justice effectively reversing that. Again, the S&P 500 right now up 23 points, a rise of 0.4%. 6505, again, a record if this holds up. A best performing individual stock in the S&P 500 belongs to Broadcom. It's up over 4%, adding to the Friday gains and the record close that we saw for Broadcom last week. Meantime, as the Fed meeting approaches, this is next week, Ellen Zentner at Morgan Stanley is looking for rate cuts.
It's easy to look at these numbers and say, we don't need to be as restrictive. We can make some modest changes here. But one cut's not going to be enough. Two cuts is not going to be enough. But more than a handful of cuts is going to be too much because we are set for some reacceleration next year, early in the year.
And right now, shares of EchoStar 15% higher. SpaceX, Elon Musk-backed company that owns the Starlink satellite network, agreeing to acquire wireless spectrum from EchoStar. They're going to pay about $17 billion stock and cash deal there. Dick's Sporting Goods, they've completed the acquisition of Foot Locker. Dick's Sporting Goods, those shares up close to 3%. The Wizard of Oz, drawing 4,000 to 5,000 fans to the Sphere in Las Vegas 2 or 3 times a day, the movie. They're paying an average of almost $200 a piece.
Wait,
now,
to watch a movie?
To watch a movie, but it's also sort of like an not interactive, but it's more of a theme park ride as a movie, because when the tornado blows, you feel the wind, all that stuff.
The chair shakes and all of that.
Why am I doing this? Because it is a story. The original story was actually more about monetary policy than anything else, about expanding the monetary base.
The Wizard of Oz story, you mean?
Yes, from gold, not just gold, to silver. And Dorothy, in the book at least, Dorothy's slippers were not, they were silver.
Ruby, they were silver.
They were not ruby sapphires.
Well, that changes the whole thing for me, John.
Yeah, it's all about monetary policy. Everything comes back to monetary
At
policy.
Bloomberg, it does.
At Bloomberg, it certainly does.
We
Well,
check
well
the
said.
markets and other boring stuff, too, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. You didn't know that? Come on.
I knew that, but I like how you brought it all back. We have to come full circle
So
here.
we all have to go to the Sphere and watch it.
All right, let's move on and take a look at some stocks that are on the move today. I'm Scarlett Fu with Alexis Christophers, and we're joined right now by Bloomberg's Christine Aquino. And Christine, T-Mobile on the move, but down.
Absolutely, Scarlett. So if EchoStar is the winner of that SpaceX deal, T-Mobile is one of the losers today. So T-Mobile ticker TMUS shares down more than 3% at the moment. And that is because it's probably going to be the main competitor for EchoStar if it does expand its footprint in the wireless space, right? Because T-Mobile has the largest market share in that space. So potentially more robust competition. Definitely not good for that stock. But we do have some, T-Mobile it's not doing too shabby with its own acquisitions, right? Last week, we did get updated customer financial guidance with regards to its deal to acquire U.S. Cellular's wireless operation. So it's making moves in that space as well. And so T-Mobile telling us last week that the integration is now seen to be achieved in 2 years, down from 3 to 4 years. So that's an improvement. And costs to achieve synergies expected to be about $2.6 billion. So T-Mobile making moves in that space as well. It's just that the news today is definitely negative for her.
Well, you know what? Not negative for United Health, though, right? I mean, investors in United Health have had a tough go of it. I mean, the stock is down something like 37% year to date. But it's up today. Tell us why.
Absolutely, Alexis. So yeah, United Health, ticker UNH, shares are up a little bit more than 1% at the moment, 1.1%. And so we do have news that it's going to investor meetings this week, and it intends to reaffirm the guidance for adjusted EPS for fiscal 2025. So that is coming from a little bit of a position of weakness, though, because remember last month they did reinstate guidance for about $16 EPS, adjusted EPS. They withdrew it in May, and now that they've reinstated it, it's almost 50% below the initial view. But, that's being taken as a silver lining. At least they reinstated the guidance. The other reason why UNH is improving mostly is because of the Buffett effect. Because we remember in August, we did get news that Warren Buffett's Berkshire Hathaway revealed that it bought a stake in health insurer in the second quarter. And of course, it enjoyed a 24% increase that month.
Buffett effect. Everyone wants the Buffett effect. Let's also talk about AppLovin, because a lot of passive funds may soon be forced to buy that stock.
Absolutely, Scarlett. So AppLovin, ticker APP, shares up more than 11%. And so enjoying the benefits of S&P 500 index inclusion. So that's also one of the companies that has been granted entry into the benchmark. And, they're sailing pretty smoothly this year. We did get their second quarter results last month. Those beat estimates, and Bloomberg Intelligence weighing in that its third quarter sales guidance implies 10 to 12% growth, which is more than the consensus estimate for 8%. And some of its features, such as the self-service ad dashboard and AI-powered user acquisition, is proceeding according to plan. So now that it's also being included in S&P 500, another jewel to its crown.
All right, Christine Aquino, thanks so much for bringing us those three stocks today. Appreciate it. And for more conversations like this, subscribe to our Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Big day for France, folks. It's facing more turmoil with its government on the brink of collapse ahead of a no confidence vote. What's it going to mean for not just the French stock market, but for the global markets? We want to bring in Stephen Carroll now, Bloomberg Daybreak's Europe host, for more on this. Stephen, before we really dig in, just give us the timeline of when we can expect this no confidence vote.
Yes, we've got about 5 speakers by my last count left in the list of party leaders that are giving their point of view ahead of the confidence vote. Then we're going to hear again from the French Prime Minister, François Bayrou. So we're thinking at the moment, it looks like we're about 2 hours away from that vote starting. It takes about 30 minutes for the deputies to file into the chambers around the main parliamentary chamber in the National Assembly, where they'll cast their ballots, and we should have a result after that. So we're looking at about 1:30 Eastern time for that result. So about 2.5 hours away at the moment, but things can change before then. We are seeing some people not use all of their allocated time in Parliament, which is speeding things up a little bit at the end as well. We've heard from the Prime Minister. He stood up in Parliament earlier and laid out his position again, very much focused on the problems France has, needing to bring down its deficit, needing to get its debt under control, and in his words, not to be drowning in this sea of debt that he sees France currently in.
Now, last year, Stephen, he managed to convince some moderate left-wing lawmakers to back his plan. Is there any chance at all that, he might find folks who can support him?
I'm afraid the politics has trumped the economics here. He has been, the Socialist Party, the centre-left party, has been really the focus of quite a lot of the speculation, because they are the ones seen as most likely to join the centrist bloc and give them a chance of being able to get measures passed. As you say, they were key to getting the budget passed the last time for François Bayrou, just after he took over as Prime Minister, when the previous Prime Minister was felled in a no-confidence motion. This time around, the Socialists have very much said they're available and willing to lead the next government if Emmanuel Macron would like to pick one of their ranks to be able to do so. But they have their own budget plans, which involve less in terms of tax cuts or tax rises and spending cuts in the short term. They have measures in their proposal, like a wealth tax on fortunes of over 100 million euros. They want their plan to be the template for the budget, and they've made some promises about how they want to go about doing that, building alliances in the Parliament. For the moment, they are expected to vote against this motion, and they're part of the reason that we are expecting the government to fall in the next couple of hours when that vote goes through.
So, Stephen, what's it going to take to have France tighten its belt? Is it time to call in the International Monetary Fund? Could that be happening in the not-too-distant future?
Look, we're not there yet, and I think I spoke to Jean Delbar from Bloomberg Economics about this on radio earlier, and he was saying we're not in a fiscal crisis yet. Things are creaking, as they have been for quite a while, it's fair to say, in the French fiscal situation, but there is time still to be able to right the ship before they run into real crisis territory. I mean, we're still looking at bond yields on the 10-year about, 78 basis points wider than Germany, which is not as wide as we've seen in the past. It's certainly not good, but it's not crisis levels. It got to around 90 last December when Michel Barnier was being ousted as Prime Minister. So we're not seeing alarm bells yet, and we're still talking about borrowing costs way off the 7% danger level, which used to be what we thought about in terms of crisis during the era of the Eurozone sovereign debt crisis. So not at crisis levels yet, but none of the signs are pointing in the right direction. And the point that François Bayrou has made over and over again over the coming weeks is the cost of servicing France's debt is getting higher and higher, and that is the part that's going to eat up more of the budget, which means that if you don't squeeze the spending at this stage, it's going to mean much more pain down the line. And this is at a time when people in France are worried about cost of living issues, they're worried about funding for education and for healthcare. This is something that people want money to be able to go into, but François Bayrou's argument is, well, you can't have that if we're spending so much money on servicing our debt costs.
Yeah, a lot of big structural problems to resolve, which probably won't get done anytime soon, but it's something we'll continue to monitor. Stephen, thank you so much. Stephen Carroll is the host of Bloomberg Daybreak Europe on the latest on the French no confidence vote. The vote has not yet begun. Speakers are still speaking right now. Let's come back to the United States, because we just got a jobs report last week, Alexis, and you would think that we're done with jobs data for a while, but no. That's not the case. Michael McKee is here with us now. He's the international economics and policy correspondent. And Michael, we're going to get a recasting of some of the jobs data up until March of 2025. And the recasting is going to leave us looking a lot worse off.
That's the expectation. Now, to give you a very quick explanation of this, once a year, the Bureau of Labor Statistics rebenchmarks its labor numbers with tax information, Social Security withholding and things like that, so that they can update the numbers to be more accurate than what they've put out in the previous reports. And each of these rebenchmarkings encompasses the time period a year to the March of that year. So this will encompass April of 2024 to March of 2025. This will be a preliminary release tomorrow by the BLS of approximately how many jobs will be different higher or lower than the BLS had already reported. Now, last year it was 800,000 lower, and these will be in January spread out over the months. But the feeling is that we're going to see another big number, maybe 600 to 800,000, and that will certainly catch the White House's attention.
Yes, I would imagine it will. So we can expect more criticism of the Bureau of Labor Statistics, and I would imagine President Trump would point out that these numbers really reflect before his administration took over.
You would think so, because it would include all but 2 months of the Biden administration. It's the first 2 months of the Trump administration. So it would seem like good news for the president. But remember, this president is on a crusade against the BLS. So he may well take this as another sign that there's something wrong and people are doing political shenanigans behind the scenes there, which no Wall Street economist or statistician, anybody who knows anything about this, would believe. But that's what the president wants you to believe at the present time, that there's something wrong with this data.
I mean, in terms of there's something wrong with this data, one issue that economists have had is the fact that there's a declining response rate consistently to a lot of the data that the government collects. And I'm not sure that that's something that is a political problem so much as it's something that has evolved over time, especially during the pandemic and afterwards. What kind of solutions are being bandied about in terms of how to address that?
Well, one thing to remember is that the response rate that we're talking about is to the first release. So in terms of the August jobs report, it was responses received by the end of August from companies, and that has dropped in the 40 to 60% range from a much higher 70s and 80s before the pandemic. However, these numbers are revised twice, and by the second revision, the third month, they're back up to 95%. So it's not that the response rate has dropped, it's that respondents are getting slower at sending in their responses. And so there have been a number of efforts made by the BLS to try to update the way they do that. They now have most of these responses coming in via computer, electronically filed by companies. They simplified the reporting forms and requirements to make it easier for companies to get things in. And what seems to be happening is that smaller companies are the ones that are slower, and they may just not have the people, and it's been busy and it's been crazy. And ever since the pandemic, it's been very difficult for a lot of companies to get their numbers in on time, but they are getting them in eventually. So there's not a whole lot the BLS can do about that. There are other ways they can statistically adjust the numbers, but the problem is they need to test this first and have basically parallel systems running to know that the new system would work as well as the old system before you switched over, because you wouldn't want to have a big, huge break in the data series that would mean we can't trust any of the data going back to who knows when.
But Mike, do you think it's realistic that these numbers may move to being seasonal as opposed, I'm talking about the monthly jobs numbers, but may they not be monthly soon enough?
No, they're going to be monthly, even though our first month numbers may be a little bit less reliable in terms of what the longer term numbers are. People who trade, people who make policy, want to have numbers on how the economy is doing, and the jobs report is one of the key reports each month. And so there would be a lot of pressure to keep it going, and people just have to recognize that they're going to have to live with the imperfections of the number. Yep. But as we've always said, the Fed has to deal with the numbers that it has, not the numbers it wishes it had.
All right, we're going to get those numbers tomorrow morning. Mike McKee, Bloomberg International Economics and Policy Correspondent, thanks so much for that preview. And I'm Alexis Christoforous, along with Scarlett Fu. You are listening to Bloomberg Intelligence on Bloomberg.
hits, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. And we are being brought to you by Oracle. Attention, growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. And it's for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Major stock averages, they are higher right now. Broadcom, that's gaining 3.7%. In fact, it's the best performing individual stock right now in the S&P 500 and helping push the index to near a fresh record. The semiconductor and software company rose 9.4% last week on Friday. It closed at a record of just over $334 after it announced it had secured an AI order of about $10 billion. Wall Street continues to pile in bets that the Fed's going to cut next week with at least a quarter-point rate cut. Stocks are rising in speculation that policy will ease. And then you have the deal of the day, SpaceX Starlink buying wireless spectrum from EchoStar. That's a deal worth about $17 billion in cash and stock. Porsche is launching the most powerful 911 to date, 711 horsepower. It's actually a hybrid. It's going to cost you about $318,000.
$318,000?
That's the basic starting.
No frills.
Model, right? No frills price, which is kind of the price of a house for a lot of people. But remember, you can't drive your house, but you can sleep in your car.
You know, you leave it to you, John, to come up with these little nuggets.
The 911.
So you're seriously considering it, right?
I mean, absolutely
that's
not.
Nothing for John Tucker.
I can see myself in it. That's more of a Matt Miller thing. Anyway, we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Alexis.
Go get your Porsche, John Tucker. Want to talk a little markets now. That's what we do here at Bloomberg. And, you know, the major indexes have been at record highs, near record highs, hanging out there despite all the uncertainty, the geopolitical issues, the tariffs. We could be looking at lower interest rates next week. What does that mean for your portfolio really in the fourth quarter? Let's bring in Nora Youssef. She's Senior Portfolio Manager at RBC Wealth Management to get her take on all of it. And Nora, in your notes, I liked what you said. You said, you know, look, returns in the past year have been good for equities, but you don't want investors to ignore fixed income. Why?
Exactly. You know, with stocks at record highs, they're getting all the attention. And I don't hear fixed income getting enough love. So I urge people not to sleep on fixed income portion of their portfolio while we're still at these over 20-year highs. It's best to lock in those elevated yields for as long as you don't think you're going to need the cash before that window of opportunity potentially continues to close on us. Otherwise, your cash will have some serious FOMO, and that is a technical term, as rates go down, and those money market and high yield savings accounts will follow.
So, Nora, within fixed income, are you talking about treasuries or are you talking about credit, high yield credit or investment grade credit? Because there's a lot of concern that spreads are pretty tight and that perhaps signals a lot of complacency in the corporate credit market.
Yes, so essentially both. Now, of course, we'll see what the Fed decides to do next week. And what I'll say now that while the markets are flying high, you know, as a reminder, markets are like a roller coaster. They're slow and quiet on the way up and they're fast and screaming on the way down. So I tell my clients, listen, when we're at these all-time highs, don't get too complacent, don't get too comfortable when we have a run up like this. It's actually a great time to review your portfolio and the fixed income portion of it. Make sure you're covering the fundamentals, you know, and that there's no over concentrations like in cash. Make sure your risk and time horizon are aligned and you're properly diversified. Know that doesn't correction proof your portfolio, but it helps take some of the pain away. One of the biggest mistakes I see investors make is taking their eye off the ball.
What do you do with some hedges, like traditional hedges like gold, which is, we know, flirting with a record high? Has the boat sort of already left if you wanted to get in on that gold boat?
Like any other part of the market that's run up, you just want to make sure you're not over inundated and don't have an over concentration. As for the rest of the outlook of the year, my crystal ball is as crystal clear as yours, but it's reasonable to say that, listen, the next few months here, we're going to be the market's going to be trying to bake in what to expect in 2026 as tariffs set in and the $8 or $10 trillion of new investment from foreign countries and private companies reverberate into the U.S. economy. And as the developments for the one big beautiful bill set in, my business owner clients, they're eager to find out, what this nearly 900-page legislation means for their business. And I'm having constructive conversations with retirees, both on the fixed income side, equity side, but also on the planning side. Now that know what we're working with, Social Security wise, deduction wise, tax bracket wise.
So let's dig into that a little bit more. As you have these conversations with clients about the one big beautiful bill, what has surprised them and you the most in terms of how much more flexibility or limitations it puts on their ability to position themselves?
Well, a lot of the conversations I'm having, they're relieved because a lot of their worst fears didn't quite happen, like losing all of Social Security if they've legally paid into the system. So it's really interesting. And now that we have some certainty here, knowing that the tax brackets are going to be permanent, it helps make that forecasting so much easier just for individuals and businesses.
So let's talk a little bit more about what other conversations you're having with your clients. We talk about how you want to lock in these yields while the opportunity is there. We've also seen how a lot of younger investors, Gen Z, for instance, they are very enamored with the idea of really investing in companies or ETFs that pay a lot of dividends and hoping to use that as their income rather than working full time. And I'm wondering whether you see that echoed in some of the conversations you're having.
Yes, and being that we're in September and October is a month away, that could, if we're looking at the historical trends, present volatility and therefore potentially opportunity. Let's just say that the Scarlet and Alexis effect is a much better connotation than the September-October effect, with September being one of the worst performing months for the stock market. It's actually the only month of the year with average negative returns in the market. October, of course, in line with Halloween, is scary, and the trends tend to be that it's the most volatile month. Yes, there may be some opportunities here for people looking to, purchase their individual stocks or ETFs, perhaps at a producing dividend, sure. But I do warn investors be careful not to be overzealous here about the market timing. As the old saying it goes, it's about time in the market, but not timing the market. And it's important not to make some reckless, drastic moves, because we just recently saw, as a great example in April, had you sold at the low or not got in, you missed on the 25% run up of the market, which happened in about a 54-day recovery, one of the fastest in history. So you want to be measured and tempered, which will be hard to do with so much being thrown at the market in the just typical trend of October and September being volatile.
All right, Nora, thank you so much. Nora Youssef is Senior Portfolio Manager at RBC Wealth Management. All right, I'm taking a look at shares of Apple right now, down about 0.4% because tomorrow, Alexis, they're launching some new products, a new line of iPhones.
Yeah, I don't know if it's going to get me to run out and buy a new iPhone. It takes a lot for me to upgrade, and it can't just be the camera.
Or the better guts, right? Or a thinner body.
I don't know what it's going to take for Apple. But
it's all incremental change. I think that's the issue.
Exactly.
Anurag Rana is technology analyst over at Bloomberg Intelligence, and he's joining us now to give us a sense of what the view is on Apple's stock as we head into this product launch. And Anurag, is this annual product launch usually a good thing for Apple's shares?
See, not really. To be very frank, it has been a non-event for the last several years because the models have not seen a big upgrade. It's the same thing, looks slightly different. Maybe the camera is deeper, a faster chip, but as you said, it's not forceful enough for somebody to go out and upgrade their phones. In our experience, people upgrade their phones when either the battery life goes down or the phone actually breaks. So there are a handful of reasons why people upgrade, but we don't think that it is going to be that monumental difference. Although there's one new thing that one should focus on is, for the first time, they're going to come up with a new hardware change, which we haven't seen in a long while, actually.
So do you think, though, that the stock has more room to run, or has it sort of tapped out here? I mean, it added hundreds of billions of dollars to its market cap over the summer.
Yeah, but that has very little to do with the iPhone shipments or the release of a new product. There were two major incidents that happened in the last 6 months. One was Tim Cook going to the White House and basically making peace with the president and, talking about a huge investment in the U.S., which was a big overhang for the stock because the President Trump had talked about, Apple's, not playing or not making phones in the US, making them in India. So there's a bit of friction over there. I think that's been smoothed over. And the second big is, the judgment from the Google case where Apple gets a very big royalty payment from Google to have a search onto the iOS. And I think that, judgment in the last few days is the second big catalyst. So I think it has a lot less to do with the iPhone or the fundamentals of stock, but two different characteristics.
And these are all external events that Apple doesn't have that much control over, right? The president's
Absolutely.
trade policy and what's happening with Alphabet and Google. In terms of things that Apple can control, its strategy on AI is still not really clear. I mean, anyone who did upgrade to the latest iPhone is not exactly using AI on their phone. What is Apple's strategy right now beyond its treading water and looking for something?
Yeah, no, I think you're absolutely right. See, last year around this event time, we thought there could be a faster refresh cycle because of AI. But those AI features never really came up. I mean, in terms of Siri being a lot more smarter. So you're absolutely right about that. Apple's behind in that case. But one of the things that we are hearing now is Apple's looking for partners like Google's Gemini or Anthropic or other large language providers to embed more AI into their iOS or the ecosystem. They already have a partnership with OpenAI where if you are looking for a query and you can't figure it out, it goes up to the cloud and you can get OpenAI's help. I think that's Apple's strategy, is to get help from other third-party providers who are specialists in AI models and then embed that into their services. If that comes in over the next 12 months, that can help some of the, you could say, unit shipment refresh, because when we look at the data, roughly around 80% of the phones are still not what we call AI ready or have the faster chips to enable those kinds of processing or transactions.
So I guess, Anurag, I shouldn't hold out great hope that Siri is going to get much smarter. I'm so frustrated, every time I ask Siri a question.
I don't even turn Siri on.
I'm with you.
Give us an example of the kind of questions you're asking.
Well, that's between me and my Siri, John. but Anurag, what can we expect tomorrow in terms of the of the day? Is there that one product folks are going to be talking about?
Yeah, Mark. It's already reported on, and he does a phenomenal job of telling us what's happening even before the event. And Apple's going to launch a thin model, like the Air, or it's going to be much more slimmer than the regular iPhones. And the big question is whether that's going to resonate well, especially in areas and emerging markets, because it won't have the fastest camera, the best camera that's out there yet, but the slim feature may be enough to at least go out and have some people upgrade.
Right.
When I look at consensus estimates right now,
Anurag,
the consensus looking at only a 1%.
We got to leave it there,
shipments.
Anurag. Anurag Rana is technology analyst over at Bloomberg Intelligence on the latest Apple iPhone launch. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. And I just want to bring you some breaking news across the Bloomberg coming across as a headline. The Supreme Court has lifted the racial profiling ban on the Department of Homeland Security. This applies to Los Angeles, at least for now. Basically, they're going to allow racial profiling in Los Angeles while this court case proceeds. Right now in the markets, for the 11 major industry groups in the S&P 500, they are higher right now. Information technology, the leader, and that's home to AVGO, Broadcom, building on its record close from Friday. So we're hovering right around the record close with the S&P 500 right now. Ahead of next week's Fed decision, we're going to get several inflation reports this week, as well as the jobless revisions, as we heard from Mike McKee. Terry Wiseman at Macquarie says it will take a big surprise to keep the Federal Reserve from cutting.
I mean, there's, of course, a slim chance that the CPI report for August comes out and it's high. It may be high, but even if it's marginally higher than expectations, I don't think it will cause the Fed to not cut effectively or hold back.
Some of the individual shares on the move. The deal of the day, EchoStar shares, ticker symbol SATS, that is soaring right now, just about 13.5%. The satellite broadband company agreed to sell wireless spectrum to SpaceX Starlink. The price tag there, about $17 billion in both stock and cash. And Planet Labs, the ticker symbol there, PL, that is soaring after the Public Earth Imaging Company boosted its revenue forecast for the full year. Once again, S&P 500, 21 points higher, 65.02. The Dow Jones Industrial Average up 56 points, and the NASDAQ 100 right now up 177 points. That's a rise of about 0.75%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Scarlett, Alexis.
Thanks very much, John Tucker. We appreciate it. Want to talk a little commercial real estate now. Call me crazy, but I actually get excited, Scarlett, about commercial real estate. Right, John? Because I think it tells us a lot about the broader economy. I mean, look at how it's doing.
Yeah, it's long-term investments, and so they don't move. Things aren't reacting to day-to-day movements and expectations on interest rates. But once rates are moving down, then you can expect slow, gradual movement, but sea change in how people perceive it.
So where are we now, right? After years of high inflation, limited growth, is the commercial real estate industry coming back to life? We wanted to bring in a pro. She's here in our New York studio, Lisa Nee, managing partner and head of real estate at Eisner Amper. Lisa, thanks so much for being with us. Just in my little cosmic world here in Midtown East of Manhattan, I'm seeing storefronts that had gone empty for so long now having tenants. I'm going to call it a mini upswing. Am I right in saying that?
Well, thank you for having me. And yes, I get excited too when we talk about commercial real estate. So we're in the right group. So office in New York has definitely taken a new surgence again. And so I think I made a prediction at the beginning of this year that's saying by the end of 2026 that we were going to be pretty much at capacity for New York City, and vacancy for office is definitely moving down. And so rents in New York City are about little under $75 a square foot, and the level of volume is really close to 2019, which is really amazing when you're seeing that.
So pre-pandemic levels.
Pre-pandemic levels is the amount of volume that we've seen in office leasing in New York City. And you can be excited about other cities, San Francisco as well. We talked about earlier in the year with AI dollars being spent. So when you look at $55 billion of AI that has been spent in San Francisco, rents there are about $72 a foot. So for I know that's really exciting. So for Class A buildings in San Francisco area, that's where the money's going. Now, whether we have a bubble or a boom or what's going on with AI, it remains to be seen. But initial reports are that people are excited and they do see productivity with AI dollars being spent. So, the excitement, I'm excited. It's there. It's real.
We can feel it from you, Lisa. So it makes sense that in San Francisco, it's an AI story. What's the story here in New York? Because the call for folks to return to work, the city being busy once again, has been in process for a couple of years now. Is there anything that kind of flipped a switch?
So it's again what's here in the market and demand. And so there wasn't a lot of office being put back into the market. And so now people are absorbing those office units are there. We always know New York is still a hub for financial, for entertainment, for all the, it's still a capital of the world. So people want to be here. They want to live here. They want to work here, and they want to be in that environment. So just creating that excitement around New York again is really going to help with the vacancies and bring back the retail and the retail experience to life, which what you noticed earlier on.
Yeah, I mean, there's a big high rise going up not too far from where I live, and I'm just wondering who the anchor stores on the bottom will be, because sometimes those buildings go up and those anchor stores remain empty for a long time.
So most of those projects have the anchor tenants pretty much in place when they're penciling or they're mapping out the deals. And so making sure that it really does create that energy and that vibe for that, for the multifamily. And again, when you look at multifamily, you really have to make sure that you're able to sustain the construction costs and the zoning. And so a lot of goes into those projects to make sure that those will really work. And everybody wants it to work. That's why we have the City of Yes mandates now, and things are going through. So really the excitement, I think, is there. And I think it's just, as you had said before, it's the long-term planning. It's not going to change overnight. It's really knowing that where we're going to be in the next 5 to 10 years with some of these properties.
But the rules of the road have changed, right? You had the One Big Beautiful Bill, which, the president is a former property developer and in many ways still is a property developer. So, I mean, he knows what the industry wants and likes. What did you see in your industry from that bill?
So the real estate industry fared fairly well with One Big Beautiful Bill. There's lots of incentives for both affordable housing, for low-income housing credits that were awarded by the federal government. What the states do are now a different story of how they award those experience points for affordable housing. Same thing with qualified opportunity zones, where there was, in the One Big Beautiful Bill, there are incentives to go for some of these economic zones and create new spaces in there. Things with bonus depreciation. So the incentives are there in One Big Beautiful Bill. It's whether or not the states and the federal governments are going to be able to work together to make sure that developers can still build in those areas that really, really do need economic development and growth.
You talked about Class A buildings a moment ago. I know Boston has been having some real struggles there. And what happens to the non-Class A buildings, to all the other buildings that would need to be retrofitted, or that people, they just don't seem that desirable anymore, given these new buildings coming up with amenities?
So I was in Boston maybe a month ago, and that Seaport District looks great. It was thriving and vibing and doing really things. So the A market, as you said before, is going to fare very well. The B and the obsolete buildings are really going to be the ones that struggle. And that's what's going to remain to see is, does the capital markets, which there's a lot of money out there, where are they going to put those investments to put back into the marketplace? Is it going to continue in the Class A, or is somebody going to come and try to revamp those Class Bs and the obsolete buildings, or what are we going to do with them as those properties? And that's a great question, and it'll remain to be seen as in the next 7 to 10 years of areas. But that Seaport District is really exciting in Boston.
I was there just dropping off my son to college a couple of weeks ago, and we went for some seafood down by the seaport, and it was bustling, and it was hard to get a reservation.
Yeah. I mean, that feels like every city these days.
I'm telling you.
Lisa, how much of your day or how many of your conversations focus around data centers? Because that is an area, you're smiling already, so I can tell it's probably, would you say more than half?
I wouldn't say more than half, but it's definitely an area of interest of where people are dedicating to time to see where it makes sense, if they should be investing in data centers, building data centers. It's interesting. We talk with real estate about square feet, everything's square foot, but on data centers, it's on energy consumption and how much energy usage it is in those centers. So it's a little bit different of a mind shift and change. And the places or the regions that can house these centers are much different than when we're talking the downtown Boston. And so really it's an entirely different niche within industrial, figuring out to make sure that if where dollars get allocated and the excitement around those and energy, I have to make sure I say it, energy consumption.
In the 30 seconds we have left, the most affordable commercial real estate market right now?
Oh, that's a tough one. That is a tough one. I think when people are looking, everyone still likes the Sun Belt and the mountain regions.
Sure.
Is still, because again, when we talk about affordable, it has to be where people want to be. And so you need to look to see where people are moving towards and where they want to be around. interest rates matter, because when we talk affordable, it's what we're going to see what happens, what the Feds do in this month, how many basis points that they reduce interest rates, and affordable definitely goes hand in hand with we're seeing that. And we didn't talk about tariffs, thankfully, but both are uncertainty.
Yes, that's for next time. Lisa Nee, managing partner and head of real estate at Eisen Amper. Thanks so much for stopping by and give us a reality check on commercial real estate. I'm Alexis Christophers with Scarlett Fu on Bloomberg Intelligence.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
And it is 11:53 on Wall Street. I'm Alexis Christophers with Scarlett Fu. Paul Sweeney has the week off. And more deal making for Elon Musk. His SpaceX has reached a deal worth about $17 billion with EchoStar for spectrum licenses that it's going to use to beef up its Starlink satellite network. We want to talk more about this deal and what it means for both companies and the stock of EchoStar, which is doing quite nicely today. I want to bring in John Butler, Bloomberg Intelligence senior telecom analyst. He's joining us from our Bloomberg Princeton office. John, good to see you. Let's just talk about what this deal is going to allow SpaceX to do that it can't currently do.
So the key to this deal, Alexis, is spectrum called AWS-4. So if you look at Starlink and its rivals in the satellite space, they all hold spectrum, but they're not allowed to offer wireless services over that spectrum. AWS-4 spectrum, according to the FCC, can be used flexibly. It's called flexible use spectrum, meaning the satellite providers can offer anything from mobile services to satellite data, downlink services, video, whatever. It's open use spectrum, if you want to think of it that way. And so Starlink getting its hands on this key spectrum will allow them at some point in the future to potentially enter the wireless market as a competitor to AT&T, Verizon, and T-Mobile.
So EchoStar's shareholders seem to like this deal. The stock is up about 14% right now. What are they going to do with the proceeds? What will EchoStar do with the proceeds of the sale?
So for EchoStar, it's a very good deal as well. They have really struggled to get their wireless service off the ground. They've been building this 5G wireless network and have a relatively weak prepaid brand called Boost, and they've really struggled there. So this brings in much needed funds for them to pay down debt. They've been a bit stretched on that front, over leveraged. And, you know, this deal together with a deal a couple of weeks ago with AT&T is going to bring in billions of dollars to reduce debt. That's number one. And number two, it brings in fresh capital for them to invest in the business. And I have a feeling they're probably going to take a step back and reevaluate the strategy here based on the fresh funding and decide what the best avenues of growth may be going forward.
And I'm wondering if this is going to satisfy the FCC, this deal, because I know that they were sort of on EchoStar's case, if you will. They wanted them to sell some of their airwaves as the company looks to roll out its 5G technology. I know they sold some spectrum licenses to AT&T recently. So do you think this is going to sort of take the FCC off their backs?
I do. I mean, I think Starlink was working with the FCC. They had written a letter about EchoStar's underuse of the spectrum. Starlink obviously really wants to get their hands on it. And I think the FCC really took their side on this one. I think they understood that EchoStar, being the only owner of this flexible use spectrum, had not really put it to use to date. So in their view, it was being underutilized, and being such a critical asset, felt that, you know, a sale might make sense. And so they really, EchoStar really got into it with the FCC, trying to protect those licenses. But in the end here, I think if you want to think of it this way, the FCC won the day. And net, I think it's a good deal for both EchoStar and Starlink and the FCC.
Now, I know SpaceX or Starlink had a deal with T-Mobile, right? How is this spectrum acquisition with EchoStar different, if at all? So I think ultimately Starlink could go from being a partner with T-Mobile to being a competitor of T-Mobile's. As I said a moment ago, this spectrum opens the door for them to get into wireless directly without having to partner with a terrestrial carrier. The current deal with T-Mobile basically has Starlink. I think the best way to think about it is they're almost like a tower company. They're providing the space-based cell sites, if you will, to carry T-Mobile traffic, and they get paid a fee for that, but they're not earning the level of profits that you could as a direct carrier. So down the road, Starlink, understanding this, wants to enter the cellular business directly. They have a lot to do before that happens, but I think it longer term puts the deal with T-Mobile in jeopardy. And in the remaining seconds we have, is $17 billion a fair price for these spectrum licenses, do you think? You know, spectrum's a very illiquid market, so it's tough to gauge valuation. But in my mind, I look at it as a fair price, given the potential, again, for Starlink to enter this huge market down the road. And they're very well capitalized, as you know. So I think those two factors together probably make it a good deal for them. They are well capitalized. All right. John Butler, Bloomberg Intelligence Senior Telecom Analyst, thanks so much for talking through that deal with us. We appreciate it. And for our listeners in the U.S., a reminder that you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. All right, taking a look at the markets once again, we have a green on the screen here with the NASDAQ Composite leading the advance up 171 right now. Taking a look at the treasuries, the 30-year yield at 4.70. We've got the 10-year yield at 4.04, down just slightly there. Gold still on a tear, up nearly 1% now at 36.79. And Brent crude, WTI, up slightly. I'm Alexis Christophorus. You're listening to Bloomberg Intelligence Balance of Power. Coming up next.
This is CBS News on the Hour, sponsored by ZipRecruiter.
I'm Steve Kathan. President Trump this morning again defends the use of federal troops domestically. He suggested it will go beyond what's taken place in Washington, D.C.
We are a safe city. You can walk to a restaurant. You can walk to the White House if you work there. You can walk to the Capitol. And even the Democrats, I can't believe it, but they don't want to admit it, but I can't believe it. We could do the same thing in Chicago, New York, Los Angeles. We did it. We saved Los Angeles.
The Supreme Court is clearing the way for federal agents to conduct sweeping immigration operations in L.A. The justices lifted a restraining order from a judge. Federal Appeals Court has upheld the civil jury's decision requiring President Trump to pay $83 million to the writer E. Jean Carroll. As we hear from CBS's Christopher Cruz.
In rejecting Trump's appeal, the court said it found the damages fair and reasonable. Carroll had sued Trump after he repeatedly attacked her on social media after she accused him of sexually assaulting her in a department store in the 1990s. A separate jury awarded Carroll $5 million in a 2023 sexual assault and defamation case.
Chief Justice John Roberts has let President Trump remove a member of the Federal Trade Commission. Trump first moved to fire Rebecca Slaughter in the spring, but lower courts ordered her reinstated. In Florida, jury selection going on today in the trial of Ryan Ruth, the man charged with trying to assassinate Trump last year at a golf course. Legal analyst Lori Levinson.
The first thing that happens is they'll bring in a big pool of potential jurors, about 60 at a time, and question those individuals about what they know about the case and what their biases might be.
Overseas, Hamas has not claimed responsibility but has applauded an attack in Israel that left 6 people dead. CBS's Courtney Keeley.
The 2 shooters were shot dead on the scene. This took place near Hebrew University on the outskirts of Jerusalem at a bus stop. Very reminiscent of years ago of many bus stop shootings, and this was the worst attack in several years.
Ukrainian officials have led 60 foreign diplomats on a tour of damaged government offices in Kyiv. It follows Russia's largest aerial attack on Ukraine with more than 800 drones and decoys used in the assault. CBS's Holly Williams.
Many people simply do not believe that Vladimir Putin has any real interest in ending the war because they say he still wants to control Ukraine and he's tied his legacy to this bloody war. They think he is simply going through the motions to avoid angering President Trump, and they think that even if he does do a ceasefire or a peace deal, he won't stick to his word.
The Dow is up 38 points. This is CBS News. Get ready for a movie made with artificial intelligence.
I'm David Attenborough's neighbor, Dennis, and welcome to a forest filled with little critters.
Wall Street Journal reports the startup is lending its tools and computing resources for the creation of a feature-length film. It aims to debut at next year's Cannes Festival.
Witnessing their subconscious adventures is truly adorable.
Goal to prove AI can make movies faster and cheaper than Hollywood, with a production time of just 9 months instead of an average 3 years. Critters has a budget of just $30 million. Deborah Rodriguez, CBS News.
An Australian judge has sentenced Erin Patterson to life in prison for killing 3 of her estranged husband's relatives with toxic mushrooms baked in a beef Wellington. She'll have to serve at least 33 years. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
3 weeks to a possible government shutdown, and congressional leaders haven't even spoken yet. Welcome to the Monday edition of Balance of Power as we pick up right where we left off last week. Lawmakers getting back to work with very little to show for it, and a White House that may prefer a shutdown. We'll explore that idea coming up as we update things with Nathan Dean at Bloomberg Intelligence. He's, of course, running the odds. Just got off his morning weekly call here. We're going to have a lot more from Nathan to let you know how you can hear that call as well. Russia launching the biggest airstrike of the war in Ukraine. To think we're running a headline like this now. We'll get the latest from Bloomberg's Courtney McBride, and we'll look to another confidence vote in France. Yes, when we talk to Bloomberg's Stephen Carroll in Paris. Rick Davis and Gidi Shanzano are with us, our panel with analysis later this hour, and we start it all with a look at Wall Street. Charlie Pellet holding forth in New York with the latest on the Monday trade. Charlie, how's it look?
Hi, thank you very much, Joe Matthew. We have got the Dow, the S&P, NASDAQ all solidly in the green. Back to work Monday, an 18-point advance right now with the S&P at 64.99, up by about 0.3%. Dow Industrials up 31, up 0.1%. The NASDAQ Composite Index up now by 148. For NASDAQ, that is a gain of just about 0.7%. The Bloomberg Mag 7 Index gaining 0.7%. Apple shares, though, down 0.7% ahead of its product launch tomorrow. 10-year at 4.04%, with the 2-year 3.48%. Gold is surging $51 the ounce. Gold hitting a fresh record, extending gains after Friday's weak U.S. employment report. The precious metal up 1.5%, now at $36.38 on gold. West Texas Intermediate crude up 1%, $62.47 a barrel, and Bitcoin up 1.1%, $112,541 on Bitcoin. Katrina Dudley is senior investment strategist at Franklin Templeton Investments. She says markets are now looking beyond tariffs and politics.
America had a pretty tough time during the tariff regime. We had a lot of uncertainty, and I think that we've really showed how resilient we are, how resilient our economy and our countries are, our companies are. I think this outside noise is just that. We've been dealing with pockets of political weakness, and I think that that's exactly what it is. It's small pockets of political weakness. The market has got enough momentum behind it to be able to kind of work through that.
Katrina Dudley of Franklin Templeton interviewed this morning on Bloomberg Open Interest. Deal news, PNC Financial Services Group is buying First Bank Holding for about $4.1 billion to add $27 billion in assets and branches in Colorado and Arizona. PNC down right now by 1.1%. Recapping, stocks push higher. S&P at 64.98, up 0.3% with the 10-year 4.04%, the 2-year 3.48%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. And back we go to Washington once again. Here is our friend Joe Matthew.
Yes, indeed. Charlie Pellet, thank you so much. Our dear friend covering Wall Street for us every day here on the fastest show in politics. Charlie will be back in a little bit less than 20 minutes for more on the markets. I'm Joe Matthew. Good Monday to you. Thanks for starting your week here on Bloomberg Radio, satellite radio channel 121. You can watch the radio on TV as ever. Go to YouTube and search Bloomberg Business News Live. You can also catch the program on Bloomberg Originals. We're 3 weeks out. If you're keeping score on your home game, there is still no deal to fund the government beyond the 30th of September. Yeah, it's the 8th now, and we have fewer than a dozen legislative days to get this done. This is the conversation we were having going into the weekend, and we're still having it now as lawmakers get back to town. Nathan Dean talked to us last week about this and introduced a really interesting prospect that's now being fleshed out in stories around Washington, D.C. Democrats say they don't trust Republicans, right? Not only did you have the president's big, beautiful bill that they say cut Medicare, Medicaid, I should say. Then there was the rescissions package, followed by a pocket rescission. And Democrats pulled away from the table and said, okay, we're done. Can't trust Republicans when they're clawing back money that's already been passed and appropriated. Appropriated, just not spent. The idea would be, well, boy, so you shut down the government. Republicans could have a real problem politically coming into this fall season. But the White House says, oh, yeah, maybe we do want to shut things down. And that's what I want to talk to Nathan about here, who incidentally just got off, very importantly, the Bloomberg Intelligence Financial Washington Policy Weekly Call, which until now was probably off limits to you. Nathan starts the week Monday morning with this call. All the terminal subscribers who want to be there from all around the world get involved. Well, we've decided to do something pretty cool. And Nathan is with me right here. And he's got the fleece vest. Senior U.S. policy analyst Nathan Dean, great to see you. So here's what we did. We turned your call into a podcast, which is now on the podcast feed of Balance of Power. So every Monday before this show drops, you get this guy, Nathan Dean, to set the table for policy that'll run you through the week. This is like the coolest thing we have going. So thank you for playing ball. And we're like on the same show now. We're team members.
Absolutely. No, thanks for having it. And, you know, one of the best things about the call that we try and advise our clients, and look, if you want to listen to it, go to the podcast and you'll hear it, is we try and advise the clients how to deal with the red lines that are coming from the terminal, meaning the headlines, because there's a lot of noise in Washington. But when you get down to the process of how Washington works, whether it's executive orders, legislation, regulation, committee hearings, you can sort of figure out what the process drives you to these ultimate end games, if you will. And so if you're an investor in Visa, MasterCard, Bank of America, JP Morgan, whoever, you know, this is the call that we decide to help you figure out how does Washington impact your portfolio.
Amazing. This is super cool. And it's frankly why we've been dragging you on the air for this whole time, is to answer some of these questions. So it's just a little more, Nathan, a little deeper, and a sense of what people are asking, which I'm always curious about, which is, you know, what we always talk about. What are people hitting you on today, Nathan? What are they calling you about? And right now, it might be a government shutdown, but I'll let everyone know. I wasn't eavesdropping on purpose. I overheard a conversation that you were having with a client, and you were going out of your way to say, I want you to know, from the investor's standpoint, this is not a big deal.
Yeah, absolutely. I mean, the government shut down, and apologize to, if you're listening to us in D.C. right now and you're a government worker or a contractor, because obviously you don't get paid during government shutdowns. But from the market perspective, whether it's a S&P or whether it's even a government contractor, if you're looking at individual equities, there really is no impact. There really is minimal impact here. During the 31-day shutdown that happened under Trump's first administration, S&P went down just a little bit, but then by the end was up like 10%. And even these large contractors, they're working off of contracts that are usually 2-3 years in length. The one thing that we would advise clients is, if you are a trader in commodities, for example, or if you're looking at just Fed data, data tends to slow down in government shutdowns. And so whether it's a commitment of traders report from the CFTC or a USDA report or something coming from the BLS, that's where you're going to have to be a little bit careful. But, you know, for the most part, it's really those of us who want to take our kids to the zoo. That's what we pay attention to.
I got you. And now you're still at 40%, if I remember from last week, 40% odds on a shutdown.
Yes.
The idea that the White House might prefer a shutdown, I'm guessing, would change the way you're answering some of these calls, because there is a thought, and we talked about this last week. Patrick McHenry talked about it at this table. So did Mick Mulvaney. Say, hey, you know what? Russ Vought's got a plan. There's a folder somewhere in his desk that says shutdown, party time on the front of it, because the idea is you shut down the government, then the White House can start doing what it wants when it comes to doling out money. And maybe the White House would just let it stay closed all year. And that's sort of the ultimate Doge event if that happens, right?
Yeah, absolutely. I mean, when you interviewed former Director Mulvaney, he said he was, and I'm paraphrasing here, he was giddy that
Jealous
he wanted,
was the word he used.
Exactly. He wanted to be Russ Vogt. Because look, who is the person that decides who's an essential employee or a non-essential employee? Right. It's the OMB. And if I'm Russ Vogt and we get into a shutdown situation, Congress is irrelevant. I'm now the person that's driving here. And so if I'm the Democrats, that may not be something that I want to give up right now, because this is what we're telling our clients is that, look, we still have a year and a few months until the midterms. It's not like many people are going to be walking into the voting booth in November 2026 and say, hey, I remember what happened on September 30th, 2025, because the government shut down for 2 days. I'm not going to vote off of that. So I need to see strategies from the parties going into September 30th that if you want to shut the government down, what's the strategy and what's the end game here? Because the end game is, I'm not exactly sure what it is.
Right.
And so if the Democrats get into a situation where there is a government shutdown, and Matthew Iglesias wrote this on Bloomberg Opinion that maybe healthcare is the reason why you want to do it, what's the end game? But ultimately, I think the OMB here is going to do a lot of things the Democrats don't like.
Because there might not be an end game for lawmakers, which is when the White House takes the ball and holds on to it. So in a world like that, let's say this is an extreme, by the way. A lot of people don't think the government's going to shut down at all. But in a world like that, you get 3 to 6 months in a shutdown, the White House is closing agencies or moving people around. That becomes an investor problem. That's a market story, is it not?
Yeah, and I don't think we would ever get into a situation like that, because if you remember, shutdowns are not popular with the American populace, and it's the person who always is seen causing the shutdown is the one that pays the political price. And so, when you hear that, Russ Vogt may want a shutdown, you're also hearing language from the White House saying, look, we want a 1-year CR.
That's correct.
Well, why do we want a 1-year CR? Because then we don't have to deal with shutdown fights in an election year. And if you go back to that 31-day shutdown, remember, there were a lot of World War II vets who showed up at the memorial and they pushed those gates down, and everybody supported that. And so with the American populace not supporting the idea of shutdowns, that's why I think they'll ultimately kick the can. And if we do have a shutdown, say in December or early next year, I think it'd be short term.
What are the chances of a full year CR? Because there are a lot of Republicans who have an allergy to this idea. Pentagon hawks freak out and say that's a cut to defense spending. Is that how we should look at it?
Absolutely. I mean, I think you have the military folks who are saying, look, let's not do this. You have the folks who say, I'm not going to support a CR. But also remember, if I'm a Democrat, I may not want to give a 1-year CR because these are good opportunities to score political points if you're in the minority. And so if you're, for example, one of the things that our clients have been asking is, what is the one piece of legislation that could be attached to this as a way to get it to the president's desk? And my answer to that is the Credit Card Competition Act that would increase competition for Visa and MasterCard. Senator Marshall tried to attach it to the stablecoin bill to advance it to the president's desk. And every time you get about 3-4 weeks before this government shutdown, that's when you should start be thinking, what is the bill that gets attached? And for what it's worth, I don't think it's going to pass, but that's the one that I'm thinking of.
Just a minute left. NDAA. This is the one said to be bipartisan, passes every year. Flies above controversy. Will this year be any different?
I think it may be a little bit different. I think ultimately it still passes on a bipartisan nature, but there could be some fireworks that I think this ultimately...
this is the National Defense Authorization Act. What could be attached to it that would be controversial?
Well, is that it?
That
Visa...
So this is the vehicle?
It could be. Okay. I mean, look, it doesn't have to be. I mean, you know how Washington works. It can be something completely irrelevant.
Yeah, right. Wow. All right. So... subscribe to the Balance of Power podcast. You get the Nathan Dean podcast, the weekly Washington policy call, right? So this is every Monday morning.
Yep.
It's on your podcast feed now. You already dropped the show?
Already dropped
15 minutes of intelligence, Bloomberg intelligence by way of Nathan Dean. He's America's dad, and he wears the most famous fleece vest in the country. It's great to have you as always. We're going to do this every Monday, starting things off here as Nathan Dean sets the table, only on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. Dow Industrials just turning negative. We got the S&P holding on to a 15-point gain, up 0.2%. NASDAQ up 140, continuing its advance, up 0.6%. But the Russell 2000 index of small cap shares trading lower by 0.1%. Wall Street is betting that the Fed will cut rates next week. Stocks rising on speculation that policy easing will keep powering corporate America. The 10-year at 4.04% with a 2-year 3.48%. Spot gold trading at a record up 1.5%, up $53 the ounce to $36.40. West Texas Intermediate crude up 0.7%. WTI 62.33 a barrel. Bitcoin up 1%, 112,420 right now on Bitcoin. Summit Therapeutics shares are plunging 24% after new data cast out on the future of its closely watched lung cancer drug. It is not the first round of bad news for the drug. Summit and its partner Akeso previously released data showing it did not significantly improve survival, though they urged investors to wait for more information on patients from outside of China. Summit Therapeutics, again, down by 24%. Recapping the Dow lower, little changed on the day, down under 0.1%. We've got the S&P up by 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. Balance of Power continues right now. Back we go to Washington. Once again, your host, Joe Matthew.
All right, Charlie, many thanks, and great to have Charlie Pellet with us live at World Headquarters in New York. We'll be back with Charlie a little bit later on this hour for more on the Monday trade as we anticipate breaking news earlier than expected. Yeah, it's going to fall right here in the noon hour, it appears, East Coast time. Breaking news from France. Yes, indeed. Which has had 4 prime ministers in the past 20 months. Now apparently on the verge of adding a 5th. Remember Francois Bayrou? We were here for the vote just months ago. What was it? 9 months ago, I think. Looking like he's already done. He's been in office 9 months, the Prime Minister of France, called a confidence vote for today in what most saw as a suicidal move with his unpopular austerity budget proposal in the mix. We're going to talk to Stephen Carroll about this. He's live in Paris as the vote gets underway now. It's going to last about 30 minutes. So just before the top of the hour, we should have a result. And again, it's not looking very good for the prime minister here. This was expected to happen a little bit later on in the day. But hey, it's noontime. It's balance of power. There's breaking news every day on this program as we come to air. That's for sure. Producer James, by the way, is standing by, and he's talking with his contacts in Paris for the latest on this. In the meantime, we're tracking what's going on in Ukraine. To be able to say a headline like this in September of 2025 is quite remarkable. The largest ever air assault on Ukraine. It happened last night. Hundreds of drones, 800 drones, and 13 missiles from Russia, of course, in an attack that lasted for hours. It was only a couple of weeks ago, President Trump and Vladimir Putin were together in Alaska talking about a potential peace deal. And we're feeling like we're pretty far away from that, which is why I'm glad that Courtney can join us from, of course, our national security team here in Washington. Courtney McBride, national security reporter. It's great to see you. To think that we're still finding superlatives like this far into the war is remarkable. This doesn't look like a leader in Vladimir Putin who's ready for peace anytime soon.
It does not. Trump administration officials are still hoping that the economic situation in Russia is enough to bring Putin to the negotiating table. But last night's strikes and a series of these barrages in recent weeks have called that into question.
Yeah. I saw Volodymyr Zelensky on Sunday morning television making the case. There doesn't seem to be much hope on his part for a meeting with Vladimir Putin. Can there be peace without one?
It seems unlikely that that could happen without the two heads of state and the parties of the conflict. But Zelensky, I think in the last day, has really focused on trying to shore up his country's air defenses in the wake of certainly what we're seeing is a devastating attack on the capital.
Yeah, the idea that Vladimir Putin would only want a ceasefire in an attempt to regroup does seem to ring true when you look at images like these. If you're with us on the radio, we're looking at images of Kyiv and the aerial bombardments going straight into residential areas, into apartment buildings.
Certainly, and even government buildings have been hit as well. Where the business of Ukrainian government is done.
How significant is that? Is that a new level for this conflict?
I don't know that it's new, but it's certainly not something that happens every day, even with the constant barrages.
What's the latest on weapons for Ukraine? Are Europeans buying weapons from the U.S. as the program was to dictate?
That is happening, but as with all weapons purchases, it is a bit of a slow process, and so European allies are beginning to take advantage of that mechanism to purchase weapons for Ukraine, but often, particularly the most sophisticated weapons, take sometimes years to be delivered.
Do we have a sense of where the president's head is on this now? He's been kind of talking out of both sides of his mouth on this. Just in the last 24 hours, we're on the verge of secondary sanctions, but also said that he might be meeting again soon with Vladimir Putin and that they want an end to the war.
Sure. I mean, this could be a matter of strategic ambiguity, from the president. He's made abundantly clear for some time that he wants the killing to stop, but the form that takes, is perhaps anyone's guess. But there certainly has been a lot of talk from both the president and from others in his cabinet about, sanctions and as an inducement to Russia to stop.
I have to ask you what's going on in Venezuela. This is remarkable. We talked about it quite a bit at the end of last week, having destroyed a boat that was said to be smuggling drugs, but there's also a U.S. Navy flotilla off the coast, and now apparently the deployment of F-35s in Puerto Rico, Venezuelan jets buzzing American ships, and there was a real question. Are we about to enter a true military conflict with what the White House calls a terrorist organization or a cartel that's being led by Maduro? The defense minister in Venezuela says, "We are not scared by U.S. threats. We are alert and vigilant." What's about to happen down there?
That remains to be seen. The U.S. Has been very clear about using the military for, counter-narcotics operations. As you said, you had the ship destroyed last week, and, not just Secretary Hegseth, but even Secretary Rubio have been using some pretty aggressive language about the ability of the U.S. to respond or even to act offensively, to prevent these drugs and purported criminals from reaching U.S. shores.
So we're prepared for something down there, it seems.
Yes, and actually the governor of Puerto Rico this morning issued a statement welcoming Secretary Hegseth and Chairman of the Joint Chiefs, General Dan Kane, to Puerto Rico, where they are meeting with troops and thanking them for their role in this mission.
Well, we might need to pull you back in here at some point if this develops. Once again, always great to spend time with Courtney McBride. Thank you, Courtney. As always, our national security team based here in Washington is doing great work. And we're going to keep things international here for a moment because, as I mentioned, the session is underway now in France. Stephen Carroll hosts Bloomberg Daybreak Europe, and he's kind to be on duty for us once again. The last time we were talking, just to believe 9 months ago, Stephen, was the last confidence vote. And so it's kind of curious that we have found ourselves here once again. As I was discussing before you joined us, the Prime Minister, Francois Bayrou, has been in office for about 9 months, and a lot of folks are wondering why he would ever call this vote, which seems to be his political demise. How do you see it?
Yeah, certainly. I've actually just been sitting in this room gathering dust since we last spoke, I think, Joe. But this is, look, a big moment for Francois Bayrou. He is this legendary centrist politician in France. Quite a similar story to the last time we were talking to each other in December of last year with Michel Barnier and his long history and career in France as well, and how that came to an end with this vote. The last time around, it was a vote of no confidence called by the opposition. This time around, it's a vote of confidence called, as you say, by the Prime Minister himself, trying to rally support for his budget plans as he tries, in his eyes, to address the issue of France's ballooning debt. We've heard from all the political party leaders, no surprises in them. It looks like that François Bayrou is going to lose this confidence vote, so he will then become an ex-prime minister very quickly. Afterwards, the voting is underway. About 20 minutes to go on that vote. The MPs have left the main chamber of the National Assembly. They've gone to the adjoining and beautifully adorned, I should add, salons next to the National Assembly chamber where they are casting their votes in alphabetical order, I'm told. And it's actually worth looking up, if you do have a chance, what these rooms look like, because they are incredible pieces of art. Delacroix, Pujol and Casimir Perrier is where the MPs are at the moment casting their ballots.
Wow. Oh, this sounds great. It's even nicer than the room that you're in here. Stephen, the expectation is Emmanuel Macron will then appoint a prime minister from his...
next. We speculated last December that perhaps he might choose somebody from the centre-left Socialist Party. That would change the numbers in the national, potentially bring the Socialists on board, bring them in to support. It would still be a minority, but a more significant minority administration. But the Socialists are well aware of the position that they hold. They've said they're willing and available should Emmanuel Macron call them to lead a government, but they have their own budget plan, which doesn't involve the same level of fiscal consolidation, around half. In fact, for next year, they say that they can spread out the consolidation over several years. Of course, markets would have their own opinions on that as well. Their proposal includes things like a wealth tax on fortunes of over 100 million euros, some of those things which others in the Parliament would find difficult to digest, but that is another option. It is up to Emmanuel Macron to choose who the next Prime Minister is. He does, though, have the option this time around of calling fresh elections to the National Assembly. He didn't have that option last December. Now, he says he won't do it, but as I love to keep repeating, Emmanuel Macron does have the potential to surprise us, so I wouldn't rule it out just yet.
Just in our remaining moment, what's the difference between a confidence vote and a no confidence vote in Paris?
I'm so glad you asked me that. The difference is it's the article of the Constitution that's involved. It's called by the government. It's been called 41 times in the Fifth Republic. But this, if François Bayrou loses it, would be the first time that we will actually have a government fall as a result of a confidence vote. A no confidence vote, like what brought down Michel Barnier last year, is something that would involve that has happened twice, but this would be the first time that a confidence vote would collapse a government. So a bit of a historical first in current French legal history.
Fascinating. I'm so glad. I don't see any dust on you. I'm so glad we're back together again today, Steve. And you'll be back a little bit later on this hour with some real news. This is happening earlier than we thought. And as Steve and Carol just mentioned, live from Paris, we expect results about 20 minutes away, a little bit less than that. So stay right here for the latest on the confidence vote, not to be confused with the no confidence vote. He's the host of Bloomberg Daybreak Europe, Stephen Carroll, a trooper in Paris. I'm Joe Matthew. This is Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P holding on to a 10-point gain right now, but the Dow is negative, down 34, down under 0.1%. NASDAQ up 111 for the NASDAQ Composite Index, a gain now of 0.5%. Wall Street's betting the Fed will be cutting rates next week. Stocks rising on speculation that policy easing will keep powering corporate America. NASDAQ up 110 for the NASDAQ Composite Index, a gain right now of 0.5%. Our Mag 7 index up 0.4%. The 10-year 4.06%. The 2-year 3.49%. Gold at a record $36.37 the ounce, up $51, up 1.4%. While West Texas Intermediate crude oil trading higher now. WTI up 0.7, $62.30 a barrel, and Bitcoin is gaining 0.9%, 112,378 on Bitcoin. Wall Street still mulling over Friday's jobs report and what it means for the broader economy and the Federal Reserve. Stuart Kaiser is head of U.S. equity trading strategy at Citigroup Global Markets.
The base case for most investors is probably we slow down but don't hit a recession. And in that case, if you're getting cuts, yeah, I think it's very positive for the equity market. But if what we've seen in the labor market is the early stages of, something somewhat of a more severe slowdown, then we don't think equities or small cap are going to deal with that very well. I mean, June is now a negative payrolls month after all the revisions.
Stuart Kaiser of Citigroup interviewed this morning on open interest. Robinhood Markets has been added to the S&P 500. Robinhood shares are up 14.6%. AppLovin and MCore also added to the index. AppLovin up by 11%. MCore out of Norwalk, Connecticut, down now by 0.4%. Again, recapping here, stocks trading mixed. The Dow lower, S&P up 11, a gain there of 0.2%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Back, we go to Washington. Once again, your host, here he is, Joe Matthew.
Many thanks, Charlie Pellet. As always, Charlie will have more for us on the markets coming up at the top of the hour, as we also anticipate results maybe 10 minutes, a little bit less from now, from the confidence vote that is currently underway in France. We will have news from Paris before we get to the second hour of Balance of Power. Lucky to have Stephen Carroll standing by in Paris, covering that for us here on Bloomberg. When the headline broke late Friday, it stopped everyone in the newsroom. So what have you heard about what happened in Georgia? U.S. detains 475 in migrant raid at Georgia EV battery plant. This is the Hyundai plant you probably heard about. Hyundai Motor, LG. It's a big operation where they make batteries down there, and federal agents showed up, detained nearly 500 people at the site, at the manufacturing complex. It's a big operation down there, and a majority of them were Korean nationals, many of whom were there to build this thing out and get it up and running. People determined to be working unlawfully turned over to ICE for removal proceedings, generating the next round of headlines that you'll find on the terminal from over the weekend. South Korean firms reel from fallout of Hyundai plant raid. The biggest conglomerates in South Korea are now rushing to contain the fallout here, in many cases canceling travel and expressing deep concern to the administration. What in the world are we doing here if we want to reshore these businesses and we're locking people up when they come to do it? President Trump was asked about that. Here's what he said.
We're going to look at that whole situation. We have a lot of industries that we don't have anymore, and we're going to have to train people. And the way you train people is bring people in that know what they're doing and let them stay for a little while and help. ICE was doing right because they were here illegally. But we do have to work something out where we bring in experts so that our people can be trained so that they can do it themselves.
Now, this story was developing over the weekend as ICE showed up in Boston as well. Remembering, Tom Homan promised that we'd be in sanctuary cities, and here we go. Federal immigration agents conducting raids across the city of Boston and outside the sort of greater Boston area as the Justice Department files suit against the city and its mayor, Mayor Wu, said to be running a sanctuary city. Let's get into all this with our panel. Rick Davis and Jeannie Shanzano are here, Bloomberg Politics contributors. Rick is our Republican strategist and partner at Stone Court Capital. Jeannie, democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick, if you want to reshore certain industries, in this case, the battery industries. We want to bring chips back into this country and other, of course, critical technologies that we've allowed to move to other countries. Is this the best way to do it?
Well, this is even more important than reshoring. This is a foreign country corporation that thinks it's a good idea to invest in building their plants in the U.S. So it's a real gift to the American economy that they think building these battery plants is better than building the batteries in South Korea and shipping them here. And by the way, they were right. They got ahead of this before the tariffs took place. But this is a classic situation of the right hand not knowing what the left hand is doing. You played that quote by Donald Trump, who's like backpedaling as quickly as he can. You know, we just deported 300 people who were actually helping the Georgia economy by bringing technology that we don't have to service an industry that's growing in the United States. And then you layer on top of that massive commitments that the South Korean government has made to invest in the U.S. and build facilities here to help our economy, and we just poked them right in the eye. This is not policy, this is execution, and I would say there are a lot of questions being raised this weekend over the competence of this administration's ability to sort of act with one voice.
Well, the president was enjoying the scene from Boston over the weekend and threatening to send troops to Chicago as this was all unfolding. Jeannie, even putting up a post on Truth Social. This is really something. It came from his personal account, and I believe the White House reposted it. Donald Trump, Chipocalypse now. Chicago. There he is as Lieutenant Colonel Bill Kilgore from the movie Apocalypse Now, right? I love the smell of napalm in the morning. It says, I love the smell of deportations in the morning. Chicago about to find out why it's called the Department of War with 3 helicopter emojis. He did clarify that when asked about it over the weekend, said he doesn't want to go to war with Chicago. He just wants to clean it up. But Jeannie, this one stopped a lot of people in their tracks. If you're with us on YouTube, we're just showing you this. Remember Air Cav Apocalypse Now? Is this a good look for the president?
Joe, I'm glad you did the word Chipocalypse. It took me like 2 hours this weekend to figure out how to say that. So you did it very beautifully.
Thank you.
No, it's certainly not the message the president wants to send. I think we have here an example of the president overreading his mandate to address the problem of illegal immigration and crime. And he's doing so to the destruction of his own party and himself, because while polls show he has still got some approval higher on immigration and crime than, say, the economy, which he doesn't want to talk about, when you ask people about putting National Guard and troops on the streets, when you ask people about going to people's workplace and raiding those workplaces, that is not a popular way to address both of these issues. So the president has that problem. And I would say, you know, the president also said he was going to do this a couple weeks ago in the White House. He said this election, meaning the midterm, will be about crime and immigration. Why? Because he does not want to talk about that very miserable jobs report that came out Friday and all that suggests in terms of his ability to do the one thing that most Americans want him to do, which is lower costs, lower inflation, and address the economic challenges that they are facing. He doesn't want to talk about that, so we're seeing memes like this. And the reality, of course, is that we are facing in this country a huge challenge. This year may be the first year in American history that we lose population. And that matters economically because, like immigrants or not, most of us are immigrants of one sort or another. They drive the economy. And that's why the story of what happened in Georgia last week is so depressing and contradicts completely the president's economic policies and plans to reshore.
You know, Rick, everyone's throwing around this new Gallup poll today. It was in all the tip sheets, and it's in a lot of the stories about that post, the Apocalypse Now post, the raids in Boston, what happened in Georgia. Gallup finds 79% of Americans believe overall immigration is a good thing for the country versus just 17% who say it is not. just from a cultural and political standpoint, when you see a post like that from Donald Trump, what does that mean? I realize there's the base, but then there's everybody else. And this is a president that's had trouble as a candidate expanding the size of his base. What is he doing here?
Yeah, well, this is a president, Donald Trump, the person, who really has never reached out beyond his own point of view, right? He's very much, people need to be for what I'm for, not me be for what they are interested in. And this is a classic example of that. I mean, and you can see it throughout his career, whether it was after the protests in Charlottesville around neo-Nazis and sort of, shouting out to them. But I think this actually portends a bigger issue, especially with the polling that you just described, Joe. And that is, you've got someone in the White House, Stephen Miller, who literally every single day, one of the most powerful people in the Trump administration, is whipping the ICE folks for more deportations, more deportations. So you see things like this South Korean roll up in Georgia without anybody else really understanding the economic implications of that. And now you see this polling data. Stephen Miller's never been involved in elected office. He's not politically sensitive to the voters, and so you have this disconnection where even as a candidate, Donald Trump was able to connect crime to immigration. They've dropped the pretense of that. This is all about deportations, and anybody who is not a card-carrying U.S. citizen needs to get out. And that message was loud and clear to many different constituencies. And so they're going to live and die off of this, and it seems they're doubling down on it, which a lot of political operatives I know around the country looking at very dicey 2026 races are going, oh my God, if we're talking about immigration on November of 26, we're sunk.
Jeannie, Governor J.B. Pritzker replying on social media to President Trump's smell of deportations post. He writes, the president of the United States is threatening to go to war with an American city. This is not a joke. This is not normal. Donald Trump is not a strong man. He's a scared man. Illinois won't be intimidated by a wannabe dictator. I mentioned this after Tom Homan said over the weekend on CNN, absolutely, they're going into Chicago this week. Does this help or hurt Governor Pritzker politically? Because the eyes of the world will suddenly be on his state.
I don't know if we're talking about 28, if it helps or hurts Pritzker, but the reality is he's right. This is not a joke. He also has to be cognizant, as all Democrats do, not to get drawn into a battle with Donald Trump on crime and immigration, but focus like a laser beam on the economy, which is Donald Trump's big weakness at this point. The Supreme Court just issued a decision supporting Donald Trump's roving patrols in LA and Southern California. That's a win for him. We also know that one of the people who was behind the LA immigration policy for the feds has now moved to Chicago. So I expect we will see them, what Tom Homan is talking about. But the reality is this. You look at this Georgia situation. We need workers in this country to do what Donald Trump wants us to do, which is build our economy. The problem is not the workers, it's our immigration system. Anybody who's been involved in it knows it's poorly framed, and it's difficult to maneuver. And that's what most people in South Korea are saying today, that some of these people just accidentally overstayed and couldn't get their paperwork in order. That's what Donald Trump should do if he wants to fix the immigration system, not send troop-like figures in under ICE to draw people out who are simply trying to work. They have to be legal, but we've got to make this process something that most people can utilize in a way that makes sense.
You take the administration at its word, Rick? Are we going into Chicago this week, or will it depend on the news flow? We've got about 30 seconds left. I'm just wondering if we're going to be actually talking about this by Thursday or Friday.
Well, is this going to be the taco week where Donald Trump chickens out from his threats, or is he actually going to muscle his way into the Windy City? I guess that he's not going to back off. He's been thrown the gauntlet by the governor, and I think you're going to see troops in Chicago before you know it.
Boy, well, we'll have Rick and Jeannie to help us through that if and when it happens. And, of course, you'll hear about it right here on Balance of Power. I think we're going back to Chicago, producer James. See if we can line that up. Somebody called Gibson's. Hour 2 of Balance of Power is on the way, and we're going to have Jeannie Shanzano and Rick Davis along with us as we anticipate results from the confidence vote in France. That's just now resolving, and we're going to have breaking news for you coming up here at the top of the hour. It could be the end of the line for yet another prime minister in France, the 4th this year.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
The confidence vote in France ends with no confidence. Welcome to the Monday edition of Balance of Power as French Prime Minister François Bayrou faces now what appears to be the end of his political career only 9 months after becoming prime minister. This may sound familiar. I'm Joe Matthew alongside Preeti Gupta in Washington with a redhead on the terminal. Preeti, 4 prime ministers in the last 20 months. Apparently not enough for France.
It keeps coming right back to the same issue. We're no stranger to right here in the U.S., which is what do you do with the budget? What do you do with the ballooning deficit? Yep. And the French have it even tougher. They have a lot of things like pension reform and holidays they have to work through.
Yeah, austerity is the word of the day here. It's just remarkable how quickly this went once again and how many times this has happened. Emmanuel Macron now would, I guess, appoint another prime minister, presumably from his central party bloc, but we'll find out, I guess, imminently here.
It's really tricky. I mean, the French parliament is quite literally divided into thirds. So to find any sort of majority, especially when you have the threat of Marine Le Pen and the far right on their doorstep, it's a really tricky one.
Yeah, absolutely. So how does this unfold over the coming hours? We just literally got this vote. The redhead rolled about 30 seconds ago, and a series of events will now unfold.
Absolutely. And let's not even forget about this bond market that is really reacting to this. But there's a question here of this, we're coming through this just again. It's a very similar feeling that we have right here in the States, which is, oh, look, it's another shutdown. It's another budget negotiation. Right. The French feel the same way.
And conversations about debt and deficits, austerity, do you accomplish this by cutting budgets or raising taxes, which is really a very big question that they're trying to answer in France, and one that we're struggling with here in the United States, isn't it?
And we should mention that France is one of the highly taxed countries in all of Europe. They're trying to push for investment. They're trying to push for AI. Emmanuel Macron really trying to make it a hub for investment, pull money away from London, pull money away from Germany. You can't do it if you're taxed at over 40%.
Well, this is going to be really interesting over the next hour. We've got some important voices lined up for you, beginning with Oliver Crook, Bloomberg's Europe correspondent, who's in France right now with the latest. Oliver, this just landed a moment ago. What's the reaction and the feel on the ground?
Yeah, well, listen, this is something that had been very much anticipated by the French public ever since this confidence vote was called a couple of weeks ago. You know, it was really a foregone conclusion for many. He was giving interviews all week, the prime minister, and they basically were opening the interview saying, how does it feel to be in your few last days? And that is a sentiment that was validated today, just now as you speak, by the French parliament that voted no confidence for the fourth prime minister, as you said, over the last 2 years, highlighting the sort of political fragmentation, which, by the way, is a story in France, but is a story all over Europe, but really finding its heart here in France. And François Bayrou, earlier a couple hours ago when he spoke, he said, listen, you guys today have the power to topple this government. What you do not have the power to do is ignore reality. And the reality that he is referring to is a debt to GDP burden that is absolutely the third highest in all of Europe. The GDP to deficit, which is the third worst as well, almost 6%. That is almost twice what it is for the average of the European nations. And this is 51 years now that France has not had a balanced budget. The question is, at what point do the bond vigilantes take over? Do they really impose this austerity that he was trying to sort of, through reform, bring into the fore? But as you say, you know, this is a French parliament that is divided into 3 groups. And even within those main groups, you have splinter cells within it. And it just shows you how difficult the path ahead is now no longer for François Bayrou, but for Emmanuel Macron, the president, who took that gamble last June in calling the snap elections and legislation and really backfired colossally. And that is the situation that he needs to continue to live with.
Ollie, we've seen this movie so many times, as you said, just the last 2 years, especially since Emmanuel Macron called those snap elections last summer. Was it 2 summers ago? I can't even remember. It's all a blur now. Walk us through just a massive step back. What is the future of Emmanuel Macron? If he keeps losing prime ministers, does this threaten his re-election or his succession when it comes to 2027?
So listen, for Emmanuel Macron, he really has 3 options here. The first, and this is probably the most likely, is he's going to have to appoint another prime minister and just kind of keep rolling with this really inconvenient parliamentary setup that he's got. Where is he going to choose it from? Is it going to be from the center? This is what he's been trying to do. He's been trying to push center and sort of right-leaning prime ministers. Is he going to have to go to either a cohabitation stagnation? This is very, very unlikely. Emmanuel Macron has pushed back against this. He's going to stay president until 2027. That is his intention at very least. But again, it is getting louder and louder, and you're getting more and more sort of objections from that chamber. And, you know, Marine Le Pen, who now is the biggest party for the first time ever, a much larger protagonist within French politics.
Fascinating. The vote, by the way, we're talking about 194 voted for Beirut, 364 voted against. Oliver, just looking at the reaction in the euro, which is basically no reaction, speaks to the fact that this was expected or something else?
Yeah, I think that there's a lot of this has been priced in. Again, we're some distance away from these sort of red alarm bells ringing across the sort of market complex. But we've got another rating from Fitch that comes out on Friday for France. It's expected to be downgraded. I mean, as you know, with these sort of financial crises that sort of develop at the national level, it's never sort of an instigating event. It's more art than science. And when you look at the sort of spreads that we've seen between Germany and France, I think the thing to really look much closer to is the spread between Italy and France on the 10-year benchmark yield. You look at that, that has come down to 5 basis points. It's only ever crossed below 5 basis points one time since the sort of turn of the century, and that just shows you where the investors currently are pricing risk for France. And again, as François Bayrou said earlier today, this is not just about politics. This is about the future of France remaining a sort of a relevant force on the global stage. He says you can be brought into submission by foreign militaries or by creditors, and that is the main concern for many of the French here.
Bloomberg Europe correspondent Oliver Crook live in Paris. Oliver, thank you so much for the snap reporting in this case. No confidence in the prime minister, and we're lucky to have Catherine Kleppinger back with us today. She was here 9 months ago when he got the job, and back today as associate professor of French and Francophone Studies, International Affairs at George Washington University. Professor, welcome back to Bloomberg TV and radio. 4 prime ministers in 20 months. What would be different about a 5th?
That is, I think, the question everyone's asking. And, I think the biggest question, as I heard from the previous correspondents here, is, which party can one even recruit from? We're hearing from Marine Le Pen, who's saying it's an obligation to dissolve the parliament. So, of course, she has her position. I've been reading that, the party leader for the socialists is kind of angling for it. There have been many other, kind of the further left is saying that they will automatically vote, sent to censure the next prime minister. So, I mean, it's an open question, and yeah, I wish I could read some tea leaves here, but I fear that we're going to be dealing with more of the same.
Mm-hmm. Professor, in every iteration of this, there's always the question of the threat of the far right. Marine Le Pen on ice until she has some decision-making, some guidance from the appeals court about a 2027 run. Not enough confidence in Jordan Bardella. Is the national rally still a threat the way it was when Michel Barnier was ousted?
I think that's been the most kind of interesting point of this moment, to see that Marine Le Pen has shifted her discourse a little bit away from calling on Macron to, resign, because it's not in her interest for Macron to resign right now, because then she couldn't run. So, she's leaving it much more in a parliamentary domain. I think she's still very much focusing on, now that we know the appeals trial will be in January of 26, she's looking at a longer term game here. I'm seeing from kind of man on the street interviews of National Front or National Rally voters that they do want a new election, but that, now Marine Le Pen has to balance, some of the more kind of populist voters who want to disrupt the system with the more stable, market-focused, business community that has been less excited about her candidacy. And so, does she tilt the cart now in order to, impose her party, or does she hold her cards closer for a longer trajectory? It looks like that's where she's leaning right now, because it plays in her interest. But it's true that there is a, sort of groundswell from a certain fraction of society looking for change. It may have come up a little earlier, but there's supposed to be a massive day of rallies on Wednesday that was planned before this vote. So there is this block everything movement announced. They're calling for tractors, to block the roads, and it's throughout France. And so, it's like, how is that going to play in? Do we have a new yellow vest movement? Is that going to mobilize or, kind of detract attention from this? I don't know.
Interesting. Well, when we consider what's about to happen, and you're pointing to Wednesday, which I'm very curious to see how this all plays out. Bayrou's obsession with cutting debt is what got us to this point. What would be the winning message for a successful prime minister?
I think that's the question that, I wish I had the answer again. It sounds like I'm hearing a lot of criticism on Macron for his tax cuts to the wealthy, while also then proposing cuts to social services. So it sounds, like a lot of the debate is still going back to Macron in a way that the prime minister may not have as much control over. But in terms of, like, where does that leave us for the future? The prime minister will need to look at, what does the budget do with, defense spending? That's been a big topic, that impacts the Franco-American relationship. He needs to figure out, how do we balance Social Security reimbursements and retirement ages? So these are all different moving parts that have a negative impact on the budget. And I think that was Bayrou's point from the start. One of the surprising moments from his speech this morning was that he kind of altered the figure on France's overarching, national debt by adding, it went from 3.3 trillion to 3.4 trillion. So he's, kind of trying to play this responsibility card, but showing that, this is a very serious problem that no one has managed to solve. And, it's going to force a lot of really hard reckoning. There's been a lot of criticism that, one proposal was to cancel 2 holidays, one day from Easter and then from May 8th. Is that going to be enough to change France's economy? Hard to see that playing in, that doesn't play well with anyone, really.
Yeah, over my dead body on the holidays. Professor Kleppinger is going to stay with us as we add the voice once again of Stephen Carroll, the host of Bloomberg Daybreak Europe. Stephen is live in Paris as well, having just reported on this breaking story. Stephen, how is this being felt by voters, by people in France? Do you have to have a sense of humor to talk to your neighbor today?
I think probably, but I mean, look, because of the situation, and you mentioned we're heading into our 5th prime minister now in 2 years. This is something that people have gotten used to, and everyone knew when Francois Bayrou was appointed to this job that he didn't have much more chance of winning support than Michel Barnier did before him. He wasn't from outside of the political family that could have changed the parliamentary arithmetic in France and brought in more votes that might have made it easier to pass laws through Parliament. Opposition to him was pretty instant, and when he got to his outlining of the budget, and I think the kite flying around ideas like cutting 2 public holidays was a very interesting tactic, because he was putting on the table, and he admitted this almost immediately, he was putting on the table the most controversial measures so that people would debate them. And his hope was that parliamentarians would get involved and there would be negotiation. And he always said all of the measures were up for negotiation, but with the red line of bringing down the debt and the deficit. Unfortunately, the Parliament is simply too fractured to be able to do that. Everyone looked to their own political interests rather than necessarily looking to the bigger picture and trying to work with it. Everyone's acutely aware that there's a presidential election coming in 2 years' time, and they're pretty much just trying to stake their positions in the ground in the run-up to that, so that they'll be sure that there won't be a centrist who would replace Emmanuel Macron in 2 years' time. Now, a lot can happen in politics, and particularly in French politics, in 2 years. We should point out the last presidential election in 2017 was a big surprise as well for Macron to win. So nothing is all played for yet, but I think for most people in France, they're mostly worried about the protest movements tomorrow, how they're going to get to work, what services will be available, and how serious the protests are going to be.
More drama to come when it comes
to next year. It's not a dramatic handbrake turn for anyone. Sure, there will be some people who will be hit by, no inflation-linked increases and things like benefits, but it's not a dramatic change. Things don't close overnight as a result of the budget crisis in France. It does, of course, just push the problems down the line, and that's something the bond markets definitely will be worried about. And I heard Oliver refer to the ratings downgrades or the ratings reviews that are upcoming, the first of which on Friday. There's several of those to come before the end of November as well, so those will also be very closely watched by the markets.
Really interesting. Let's bring Catherine Kleppinger back into the conversation. Professor, did Bayrou have a choice here? He decided to pull the trigger on this himself.
Right. I think that is one of the most interesting aspects of this moment, that, I'm coming back here in similar circumstances, but the details are actually very different, where Barnier was kind of solicited, he went through the executive orders style of budget negotiations, and then his government fell as a kind of punishment for that. Bayrou was doing something very different. He said from the start, this is a problem, debt needs to be dealt with, rise up to your responsibilities and do something about it. And so he is going out in a very different posture from some of the previous governments that have fallen. I found myself thinking that it was an interesting gesture that, he was challenging the delegates to live up to what he considered, a responsibility as elected officials. I'm not sure what his alternatives were, although that said, I've read some behind the scenes commentaries that he hasn't been as forthcoming with negotiations as, for example, the socialists were looking for. So he may claim, from one side that, I'm putting you in front of your responsibilities, work together or I'm out. On the other hand, was he truly trying the backroom dealings of negotiating with all the different parties? Hard to say. It looks like he did not want to find himself in the position of trying to, for lack of a better term, herd the cats of all the different parliamentary parties, the way Barnier did try to do. And, trying to please everyone meant that he pleased no one. So, I think it's interesting. I've read the idea and I've thought about the idea that it is in some ways similar to the gesture that Macron did in dissolving the parliament, where it's sort of a poker move, that it's a surprise. Macron called it throwing a bomb into the political sphere when he called those snap elections. Maybe it's the same thing.
Well, I'm just wondering when we're all going to be back together here talking about the next confidence vote. Catherine Kleppinger, Stephen Carroll, many thanks to both of you. I'm Joe Matthew alongside Preeti Gupta with much more to follow here as we turn back to domestic politics and a conversation coming up with Congressman Mark Takano, the Democrat from California, next, only on...
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. Stocks higher across the board with the Dow, the S&P, NASDAQ, they're all in the green. Wall Street's betting that the Fed will be cutting rates next week. Stocks are rising on speculation that policy easing will keep powering corporate America. Traders, though, bracing for almost 3 Fed cuts this year, beginning at the September meeting. Here's where we stand. S&P at 64.95, up 13 points now, up by about 0.2%. Dow Industrials have been swinging between gains and losses, in the green right now by 11 points, little changed. NASDAQ higher by 0.5%. The NASDAQ 100 index also higher by 0.5%. The Russell 2000 index of small cap shares flat on the day. 10-year at 4.05%. Gold is up $49 the ounce. Spot gold at a record $36.36, up 1.4%. West Texas Intermediate crude up 0.7%, $62.33 a barrel, and Bitcoin up 1%, $112,473. Apple shares lower ahead of the unveiling of the iPhone 17 tomorrow. Apple down now by 1%, and Nvidia's price target has been cut at Citigroup. Nvidia shares up 1.3%. Again, recapping, S&P higher by 13, up 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, live from New York. Charlie Pellet, the voice of Wall Street and the New York subway. Indeed, I'm Joe Matthew in Washington alongside Kriti Gupta as we turn our attention from French politics to domestic politics and a breaker on the terminal here. If you haven't heard this, we got news from the Supreme Court a short time ago, backing the Trump administration's aggressive enforcement efforts in California, in this case specifically Los Angeles, where federal immigration agents will be allowed to resume using tactics critics say amount to racial profiling. In this particular case, a person's apparent ethnicity cannot be the only grounds for officers to have reasonable suspicion to check legal status, but can, Kriti, be a relevant factor along with some of the others that have been identified in the Supreme Court's precedents. This just now landing at the same time that this administration is threatening to go into Chicago. That was the latest we heard. Tom Homan over the weekend said, absolutely, it will be this week.
Absolutely. These are some scary headlines. We should mention, though, this was something that the appeals court had put a pause on when it comes to whether the immigration raids on that basis are even legal, that the Supreme Court has basically overturned when it comes to the appeals court ruling.
Yeah, right. It also comes with not only the president threatening to go into Chicago, but any number of different cities. Posting on Truth Social over the weekend a meme from Apocalypse Now where he looks like Lieutenant Colonel Kilgore. I love the smell of napalm in the morning. This says, I love the smell of deportations in the morning. The president, by the way, was asked about the second line in that tweet or post on Truth, in which he suggested that we would be going to war in Chicago after they renamed Department of Defense Department of War. Last week, he reacted to that when asked. Here he is.
We could do the same thing in Chicago, New York, Los Angeles. We did it. We saved Los Angeles. We saved Los Angeles, Dan. You know that. Los Angeles was a mess. If we didn't send our troops in, Gavin Newsom would have had a real problem. We sent our troops. The head police officer, the top person, said we could have never done this alone. We sent our troops right in at the beginning, and we killed it. And it was nasty, but we killed it.
That was the president earlier today, in fact, at an event about religious freedom. It's where we start our conversation with Congressman Mark Takano. This is personal for the congressman because he's from California, a Democrat in the 39th district, where much of this is resonating. Congressman, welcome back to Bloomberg TV and radio. What's your thought on the Supreme Court ruling here, and what's that going to mean for L.A.?
I think it's shameful. It's disappointing. It's reminiscent of what my own family experienced, 80 years ago, when they were put behind barbed wire in internment camps because of who they were. They were of Japanese descent. Many spoke a different language, and I am very troubled by the majority on this Supreme Court that they would allow racial profiling to be used by ICE officials. I have constituents that feel compelled, American citizens who are carrying passports because they are concerned about being stopped by ICE. No American citizen should have to carry a passport in their own country. This is shameful. We are the land of the free, home of the brave, but the Supreme Court has said so otherwise today.
Congressman, we saw something similar last week in terms of the immigration raids at a Hyundai plant in Georgia. What message do you think that sends to foreign countries that are actively looking to invest in the United States? Is it safe to do so, especially in your home state of California?
Well, this certainly puts an ominous cloud over the goodwill put forward by the agreement between the United States and South Korea. South Korea agreed to invest $500 billion in our country. In fact, over the summer, I learned about the interest in building more manufacturing plants in my district, in addition to the one that already does exist that was established recently. So this is not a hypothetical or theoretical question you're asking me. It really affects my own district. You know, they were rapidly standing up a battery manufacturing facility in Georgia, Hyundai, and I forget the other company that the partnership with. But, you know, the South Koreans have really expertise in battery technology. And it's an incredible potential alliance between the United States, Japan, and South Korea. If we can determine the future of a battery technology, the next generation of battery technology, which the Chinese currently control. And I would hate to see that jeopardized. I would hate to see the $500 billion of investment in this country jeopardized because of the ham-handedness and lack of coordination of ICE with the Department of Commerce.
Well, that other company was LG, Congressman, and our listeners and viewers should know that you serve on the Education and Workforce Committee, along with being ranking member on the House Veterans Affairs Committee. But from your perch on workforce, what's the message here that we're sending to foreign workers? Would you recommend that they stay away from projects like this in the United States? And if that's where we are, do we have enough American workers to do all of this work, whether it's emerging technologies in batteries, semiconductors, or any other technology we're trying to bring back to this country?
Well, look, I don't know the details about what workers were being contracted with by the South Korean government, but I suspect, given that battery technology is, you know, on the frontiers of manufacturing, that we have to do two things at once. We're going to need some foreign workers to help us stand up these facilities while we're also ramping up the skills and knowledge of the American workforce. We can do both, and I can't imagine that the Koreans were thinking that they were going to fully staff up this Georgia facility with their workers. This was a good faith effort to bring an American manufacturing facility, a Korean investment to build a manufacturing facility in the United States to employ American people. But they need to bring some of their own expertise into the United States to be able to stand up these facilities. So this sends a terrible message to the nations that Donald Trump claims to want to engage and to bring manufacturing. By the way, manufacturing jobs in this country are down significantly this year since Donald Trump took office. So this is not a great step forward for those American manufacturing jobs to be increased when we play such hardball with our economic partners such as South Korea.
Congressman, let's talk about another subject that, of course, is dominating the headlines in Washington. It's a shutdown that we are about 22 days away from, just a handful of legislative days away from at the end of the month. Can you just talk to us a little bit about whether or not you'd be willing to work with Republicans to avert a shutdown if the idea of no rescission packages was on the table.
Well, I would love to work with them. I'm all with full intent to do that. But what I see coming out of the Labor HHS Appropriations Subcommittee is anything but that. It is not an olive branch. It is not what they're proposing. More extreme cuts to domestic health care and that Labor HHS bill. They're cutting AIDS funding. They're cutting funding for prevention. We're on the cusp of defeating AIDS, HIV/AIDS in this country, but I don't understand why after passing over $1 trillion in cuts to Medicaid, and even other cuts we're facing in December with the tax credits for the health care policies that Americans get off the exchange, Republicans are doing even more than that. So, if you're a low-income person, you won't be able to get, if you're kicked off of Medicaid, you won't be able to get, preventative care that comes with maybe AIDS prevention. But they're doing more to even cut that even further. This is not a bipartisan conversation they're having in the House Appropriations Committee. I don't see a sign from Republicans that they are seriously, with good faith, wanting to work out a deal by the end of this month.
Congressman, you just came back to town from California, where the big story right now is about redistricting beyond the deployment of federal troops or some of the other things that we've already had a chance to talk about. Gavin Newsom is making good on his plan to follow Texas, rewriting its map to create 5 new red seats. California will do its own to try to maintain the balance. How many seats will you get? I know this is something that you're deeply involved in. And will this mean the end of Republican politicians in California as we know them?
Oh, hardly is the case. I mean, what we're doing in California is called Proposition 50, the Election Rigging Response Act. It'll be in November. It is a measure that is being voted on by the people. It's fully transparent. Yeah. And it's a suspension of our independent redistricting commission, which, by the way, I am the product of. I would not be a member of Congress today were it not for the nonpartisan independent redistricting commission that was created. But look, I favor the creation of these commissions for every state in the union, not because they will favor Democrats, but because we need fair representation. What we don't need is mid-decade redistricting, which really is tantamount to cheating. And Donald Trump and the governor of Texas, Donald Trump is saying, what Donald Trump is saying is, I'm too insecure. My policies are so unpopular that I don't want to be able to face the accountability that will be in 2026. So let's rig the elections so that I can control the House of Representatives.
Well, Congressman, we'd love to talk to you as we get closer to November and that vote in California. Mark Takano, California's 39th, the voice from the Democratic side of the aisle here on Balance of Power. I'm Joe Matthew.
140 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow lower, the S&P, NASDAQ. They're both advancing. NASDAQ trading at a record up 109 points right now at 21,810. That is a gain of 0.5%. S&P up 0.2, higher by 10. The Dow back in the red right now, has been swinging between gains and losses, but down 7 right now, just under 0.1%. Our Mag 7 index up 0.4%. The 10-year is currently yielding 4.06% with the 2-year 3.50%. Wall Street is betting that the Fed will cut rates next week. Stocks rising on speculation that policy easing will keep powering corporate America. Spot gold at a record up 1.4%, $36.36 the ounce, up $49 the ounce. West Texas Intermediate crude up 0.8%, $62.36 a barrel. And Bitcoin now higher by 1%, 112,415 on Bitcoin. Robinhood Markets being added to the S&P 500 index. Shares are surging now by 13.4%. AppLovin and MCore will also be added to the S&P 500 index. AppLovin up now by 10%. MCore down by 0.1%. Again, recapping here. S&P higher by 10, up 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington as Balance of Power continues. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you so much. Charlie will have more on the markets coming up at the top of the hour as we connect the dots between Washington and Wall Street every day here on Balance of Power. I'm Joe Matthew in Washington alongside Kriti Gupta. Thanks for being with us here on the Monday edition. Yeah, it's still Monday on Bloomberg TV and radio with breaking news coming from France. If you were with us a short time ago, you heard it all happen, Kriti. Francois Bayrou is going to have to find something else to do with his time. The confidence vote ended in no confidence.
In the meantime, Emmanuel Macron suddenly has a list of suitors that he now has to rifle through.
We have just heard from him, in fact, which is something that we can add to the pile here. And great to have Stephen Carroll with us, the host of Bloomberg Daybreak Europe, with the latest from Paris. Stephen, what does the president have to say, and what's the short list look like?
Very short statement from the Elysee Palace saying the president takes note of the vote in Parliament. He will meet Francois Bayrou tomorrow, host him at the Elysee Palace to receive the resignation of the entire government as the constitution now dictates, and that he will name a new prime minister in the coming days. Now, if that sounds familiar, I just went back and checked, and the statement in December 2024, after Michel Barnier resigned, also said that he would name a prime minister in the coming days, and it took over a week the last time, so perhaps we shouldn't be holding our breath too closely for when that announcement will come from Emmanuel Macron, but it is now his decision to pick somebody to succeed Francois Bayrou. Who is it? Well, that's going to be the big question. We have discussed it many times, and Kriti, you'll remember very well from last December, where we spent quite a lot of time discussing who we thought was going to be Prime Minister, and Francois Bayrou was on the list then. He got the nod last time around. This time around, we're back thinking about members of, perhaps if he picks them within his own political family. Gérald Darmanin, the current Justice Minister, said to be interested in the job, so he could be someone that perhaps could be considered for that as well. There's the likes of the current Finance Minister, Eric Lombard. Perhaps he might be somebody who Emmanuel Macron might want to pick from if he did want to go outside of his own political family. The names being bandied about from the left-leaning side. So again, this whole effort, and we've talked about it before, that perhaps Emmanuel Macron might try to win over some of the Socialist Party, the centre-left party, to see if that would help to boost the minority government, the minority that he has working in Parliament. And there we have names like former Prime Minister Bernard Cazeneuve. He's one of those as well. François Rebsamen, who's currently the housing minister in the government, or the minister for urban policy. So he's somebody that you could perhaps think of as well. Ultimately, there's quite a long list of names, and this is one of those moments of conversations happening in this city, very similar to those I'm sure that you hear in Washington, D.C. all the time, where people like the idea of putting their name forward and their name being talked about in the reference for the role. And I'm quite sure that Emmanuel Macron has been thinking about this, because the result of this vote was a foregone conclusion, as we've been discussing, but it is only him who knows where things are at this stage.
Stephen, I'm frantically Googling what French is, or FOMO is in French, given the amount of times you and I have covered this story together. let's play a little bit of inside baseball or whatever it is the French play here. It feels like the socialists are the key player or the key piece of the coalition. Thank you. The key piece of the coalition that are maybe not so much so supportive of Emmanuel Macron this time around. When we saw Michel Barnier's vote of no confidence last December, they were the ones that were the swing vote. Where do the socialists stand on being kind of the make or break player for Emmanuel Macron?
Well, look, the leader of the Socialist Party in the Parliament was one of the first to speak after the results of the vote came through to remind Emmanuel Macron that they are willing to take the government, to take the role of Prime Minister and lead a government if they should be so offered. And they've been very clear about this, and this has been part of the political jockeying that led up to this vote. The Socialist Party had a choice that they could have rode in behind Francois Bayrou and become part of a governing minority in Parliament. They've chosen instead to say, here is our alternative budget, which involves fiscal consolidation worth about half of what was in Francois Bayrou's plan, and a couple of more controversial measures like imposing a wealth tax on fortunes of over 100 million euros. They say that you can do fiscal consolidation slower. That's their condition for taking part in government as well. They've also promised that they won't use the constitutional override in Parliament to force the budget through, that they will secure agreement from across the aisles in the French Assembly to secure a backing for their budget plan, but it's very much they've laid down their positions, and there's not much sign running up to now that there is really any room for negotiation on that front as well. But they're definitely the key players to watch when we're thinking about what happens next, because without them, you end up with exactly the same numbers that Michel Barnier had and that Francois Bayrou had, and we know how that turned out.
Many thanks, Stephen. You've been great today. Stephen Carroll, Bloomberg Daybreak Europe co-host with us here on Balance of Power on Bloomberg TV and radio. The breaking news and the red headline from Paris all unfolding since the lunch hour here in Washington, D.C. I'm Joe Matthew alongside Kriti Gupta in Washington, where we have not yet touched the story of the day here in town. It's at least the talker. It's not a very pretty one, but it carries a headline that everybody woke up to this morning in Politico. Quote, "I'm going to punch you in your blanking face. Scott Bessent threatens administration rival." Pretty remarkable, Kriti. We're actually putting on the gloves for this one here. Remember when Elon Musk showed up with the black eye? And it was right around the same time he was said to have a hallway encounter with Scott Bessent.
I was about to say, this is not the first time Scott Bessent has been in the throes.
A lot of folks are wondering, maybe that black eye wasn't from X, his child. We need to bring in the panel on this, but maybe a dramatic reading just to start here.
You're excellent at those.
Well, I'll tell you, this is what we all woke up to in Politico this morning. Scott Bessent and Bill Pulte, right, the housing finance official, showed up at the inaugural dinner at Executive Branch. This is the new swanky club in Georgetown, open for folks in Trump world. Apparently, Scott Bessent was very upset with Pulte for bad-mouthing him to the president, according to this report, citing sources. Quote, as Scott Bessent approached Mr. Pulte, "Why the blank are you talking to the president about me? Blank you. I'm going to punch you in your blanking face." Club co-owner Omid Malik tried to separate them. Bessent wasn't having it. "It's either me or him," he said. "You tell me who's getting the blank out of here, or we could go outside." Suggesting they go out to do this the old-fashioned. "To do what?" asked Pulte. "To talk?" "No," Bessent replied. "I'm going to blanking beat your blank." Now, this is a network here that has had to, at times, stand by for a president saying swears in the live throes of the news day. So keep the delay handy as we bring in Rick and Jeannie, Bloomberg Politics contributors Rick Davis and Jeannie Shanzano, back with us here in hour two. Rick, you worked at the White House in a very different administration. Were people throwing punches when Ronald Reagan was in the Oval Office? Is this the way it's done here in Washington?
Well, if they were keeping it quiet and not putting it on the front page of Politico magazine. I mean, and by the way, thank you, Joe, for going through that. I know how dangerous it is for anybody in your business to have to say things that you just said. But look, I mean, what a great way to get some publicity about your new club. I mean, Malik must have been like, wow, this is going to put us on the front page. Just what they were hoping for. But look, I mean, we've been talking about this today. I mean, an administration in a little bit of state of disarray, right? The right hand doesn't know what the left hand is doing when it comes to deportations. There have been conflicts over things like trade policy. And of course, you recounted the fight of some sort, either physical or spoken, between Scott Bessent and Elon Musk over who they were going to point to the Internal Revenue Service. And so, you know, I just love the fact that our Treasury Secretary is very muscular attitude toward his relationship with Donald Trump and the rest of the administration.
Jeannie, I don't even know what to ask you. Just react to what Rick said to this Politico story.
Critty, I'm not surprised you are speechless. Boy, I have to tell you, I feel bad for the other members of this club. You imagine you're a founding member, $500,000, and this is the birthday party you get invited to. It's really just very, very shocking. It's not the first time, as you mentioned, we've seen Scott Bessent in this kind of position. But, you know, you got to give him credit. He's 63. Bill Pulte is 37. And online, you're seeing people take bets as to if they did go outside, who would win. So there you go. Give Scott Bessent some credit for, you know, he's not shy about saying, let's take it outside, even if the guy is half his age. So I guess that's something.
Don't mess with Scott Bessent. Let's, by the way, remind everybody, this is the White House that's going to have a UFC fight on the South Lawn at some point next year. Is that what the birthday party? I can't remember if that's a 4th of July event. I think they put a date on that. But, Rick, I don't know. Does this speak to the whole bro culture in the White House? What does the Chief of Staff, Susie Wiles, think about this?
You know, we'll never know, because Susie Wiles is one thing, and that is super secretive with how she feels and what she says to other people. So she's the last person we're probably going to see line up on this one. But the reality is, I don't think we've seen the last of this. In other words, there's kind of an all-out fight within the finance community, within the Trump administration. And you and producer James totally stole my thunder. I was going to say chain link fence, put these guys in the arena in the backyard of the White House on 4th of July. And then we can retire the federal debt by putting it on pay-per-view. I mean, like, this would be fantastic.
Boy, Jeannie, I don't know if you're going to be showing up for that one, but, you know, there's a question here. I don't know if creative destruction is the phrase, but tension within a team can sometimes actually generate results. Sometimes Donald Trump likes this, right? For them to be arguing with each other and for their cases to find the best position on something. Or am I just making it up at this point here?
You're doing very well if you are, Joe. No, you know, it seems like he does. And you look at this and you think, we're told that Scott Bessent's biggest frustration against Pulte was he was talking bad about him to Donald Trump, which is sort of in line with what we see at these crazy cabinet meetings where they're trying to each outdo each other and flattering Donald Trump. So it seems to be that Donald Trump has quite a lineup of sycophants who want to bow to his feet, and this is in keeping with that. But the other thing I think is that Scott Bessent is under enormous pressure, and this reflects that. I mean, let's not forget, he was on Meet the Press this weekend, and he was asked repeatedly if tariffs are taxes. He tried to dodge it, and then in the end, he said no, which Scott Bessent knows is not true. So I might feel a little feisty if I had to say that as well to get my boss's
Interesting.
approval.
I don't know. We were talking team of rivals, or looking for examples earlier, Rick. I'm thinking more like The Who. You know, Roger Daltrey. Like, these guys were beating each other up, or Aerosmith. It's like one of the bands where Oasis, producer James pointing to something a bit younger. Is there actually in our remaining moments something positive about that tension inside an administration?
Well, it certainly keeps everybody focused on needing to be able to be inside the booth with Donald Trump. I mean, Donald Trump creates this tension by the fact that he makes himself the only one who decides your fate. And this actually reinforces that. Today, I guarantee you, Bill Pulte and Treasury Secretary Bessent are all about trying to explain this to Donald Trump in the most negative light they can about the other person.
Just imagine what'll happen when they're seen together at the club. How much does that cost a year? It's like $500,000 to be a member?
No, pocket change, please.
Yes, whatever you say. With Preeti Gupta, I'm Joe Matthew. We'll be back. Late edition of Balance of Power starts at 5 p.m. Washington time. Big thanks to our panel for humoring us, as always. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors. Thanks to the congressman as well for being with us. Congressman Takano this hour. This is Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And good afternoon, everyone, live on Bloomberg TV and radio, streaming on YouTube and Bloomberg Originals. I'm Katie Greifeld, Alongside me is Bailey Lipschultz. We're doing our best to fill in for Carol Masser and Tim Stenovic. They are out in California. You'll be hearing from them later. But let's get a check on these markets. The S&P 500 trying to hold on to its gains here. We saw very tepid gains last week, Bailey, but we know it's going to be a busy week ahead.
It'll be a busy week. A lot of economic data, as you were alluding to in the break before we joined the airways. Busy IPO week, which is near and dear to my heart, with Klarna, Figure, and a number of other companies selling shares for the first time. So a lot going on. Buckle in.
Buckle in, buckle up. We have a lot to get to in this show as well. And still ahead, all eyes on that labor market after Friday's disappointing jobs report. As Bailey said, we're going to discuss the big week ahead in economic data. We have BLS revisions and inflation readings.
Plus, we'll get the latest out of Paris after French Prime Minister François Bayrou lost a confidence vote, forcing France's third change in government in just over a year.
And later, a check on the state of the global commercial real estate and investment landscape. We'll discuss with JLL Chief Executive Christian Ulbrich. All of that and more coming up. But first, a check on the day's trade and top business stories with Charlie Pellet.
Very much. Do want to begin with a developing story out of the United Kingdom. Heathrow Airport's Terminal 4 check-in area closed and evacuated. Emergency services responding to an incident. Terminal 4 closed and evacuated because of possible hazardous material. That according to the Associated Press, quoting the London Fire Brigade. Again, developing story. We'll keep you posted as we learn more about this story out at Heathrow Airport. We have got the Dow Jones Industrial Average right now trading lower, down 66, drop there of 0.1%. The S&P 500 index higher by 3, little change there, up under 0.1%, while the Nasdaq Composite Index surging 91 points at a record, up by 0.4%. Our Mag 7 Index up 0.2%. The 10-year is currently yielding 4.05%, with the 2-year 3.98%. Spot gold $45 the ounce higher. Spot gold, by the way, at a record 36.32 right now, up by 1.3%. West Texas Intermediate crude oil is gaining 0.5%, 62.18 a barrel, and Bitcoin up 0.8%, 112,262 on Bitcoin. We're keeping an eye on Summit Therapeutics shares. They have plummeted after new data cast doubt on the future of its closely watched lung cancer drug. It is not the first round of bad news for the drug. Summit and its partner Akeso previously released data showing it didn't significantly improve survival, though they urged investors to wait for more information on patients from outside of China. Right now, Summit Therapeutics trading lower by 25.8%. Again, recapping, stocks little changed on the S&P, up now by 3 points, under 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you very much, Charlie Pellet. As Katie mentioned at the top, we're in for a busy week of economic data, and likely the most anticipated update will come tomorrow when we receive a revision of the Bureau of Labor Statistics preliminary jobs benchmark. For more on that update and a look ahead to key inflation results, we're joined now in studio by Molly Smith. She is Bloomberg News economics editor. Molly, looking through the Bloomberg story, Wells Fargo and others expecting the BLS to revise March payrolls down almost 800,000. Other shops like B of A and RBC expecting close to 1 million. To start with, how unprecedented is that, and what is your team looking for tomorrow?
So this would be coming after the benchmark of the prior year marked down payrolls by, what was it, over 500,000, I think. So this is definitely, it's not unprecedented necessarily, but we're definitely looking for another sizable downward revision. And this happens when, we see from every month's jobs report that BLS will do monthly revisions to the prior 2 months. That happens all the time. But then this revision is a little different. This is an annual process that BLS does to benchmark the data to another series. And this is something that's taken from the quarterly census of employment wages. So this is a series that it's more accurate, but it's less timely. It only comes out quarterly as opposed to monthly, and it relies on state unemployment insurance records. So this benchmark processing is really important. We get the preliminary number tomorrow ahead of a final number next year. All this to say, data gets revised a lot. This is a very hot topic at BLS right now, something that the Trump administration has very much seized upon, something that they say points to inaccuracies and incompetencies at BLS, but economists and statisticians will tell you that this is very normal. This is something that happens as BLS collects more data, more responses in time, and that's just what we have to do. And you want timely data, this is what happens. You have to, you could put out data quickly, but it's not going to be the most complete set. So this is what happens. This is why we have all these revisions.
Right. And you live and breathe this stuff, obviously. But to your point on the political backdrop here, as you mentioned, the set of data that we're going to get tomorrow, they're more accurate, but maybe a little bit more stale than some of the other labor market sets that we get. But given that political backdrop, given the focus of the Trump administration on the labor market, the BLS, and the revisions that we're getting, I have to imagine that the stakes are a little bit higher. The scrutiny is higher than normal on this specific set of data.
It's very tense right now, for sure. It's been a tense couple of weeks at BLS for sure. And, ever since Trump fired the commissioner after the July jobs report, that one had some big downward revisions to the prior 2 months. Again, this is something that the administration says means that the agency isn't doing a good job, and they say that the data needs to be accurate and fair, and it can't be manipulated for political gains. Everybody would agree with that, but also most people would tell you that that is the status of BLS data already, that there is nothing wrong with it, that this is just the reality of what it's like to collect economic data in this day and age, and that if you want the data to be more complete earlier on, you need to invest in better data collection methods to get businesses and households to reply more promptly to surveys, and that's really where the investments need to be made, not necessarily axing the people who are in these positions and who have the institutional knowledge of how a lot of these processes work.
Well, you touched on the big underlying issue there, and that is collection rates. I mean, we've been talking about revisions to the labor market data for a while. I remember having a very similar conversation with Acting Labor Secretary Julie Su about these big revisions that we were getting. So this has been going on for a while, and the fact that the initial collection rates have just been going down over time, it seems like that's at the root of a lot of what we're talking about.
Right. And who you're just mentioning, Julie Su, she was acting labor secretary in the Biden administration. So, yes, this has been going on for a bit. The Trump administration obviously would concur with that as well, that the revisions are they take a lot of issue with this, and that I think everybody wants more accurate data, more timely data, but there are just restrictions in terms of how to go about doing that. And in order to get these collection rates up, I mean, that's really where so much of the conversation should be focused right now. And I think that's what BLS is really trying very hard to do, especially when you look at the establishment survey. Those collection rates for the first month of sampling very consistently been in that 50 to 60% range now for several years. It gets up closer to 80, 90+% by the time they survey firms in the second and third time around. But again, that's the trade-off. Do you want the data up front that maybe isn't the most, comprehensive set because we all want things that are so timely? Or are you willing to wait a while for something that maybe has more of the responses and perhaps is closer to the accurate number? So that's the trade-off.
And Molly, that's not the only set of data we're going to get. Looking ahead to PPI and CPI, what's the expectation? What should investors and kind of economists, what are they looking for? What's going to stand out?
Yeah, so the inflation data, I know it seems like it's kind of like in the background this week, which is weird. Normally it's like, oh my gosh, CPI, like hair on fire kind of week, but not so much this week. More eyes coming out tomorrow with the benchmark data that we've been talking about. I think honestly, though, that is really the right read, though, right now, just given that, especially whether you're thinking about this in the context of the administration or the context of the Fed, it really is the labor market right now that's driving so many of these decisions, and that the Fed, very much priced in to have a 25 basis point cut at the meeting next week. And this is, again, because of the weakness that they're seeing in the labor market data. The conflicting side of that, though, is that inflation is still running well above the 2% goal. And are you in the camp that you think that this is going to be a persistent inflationary pressure coming from tariffs and other economic conditions right now? Or are you kind of hoping, really, that inflation is going to fade down and that you really just need to step in to support the job market? So that really is the tension at the Fed right now as well.
I think that tension is really interesting. Like you said, it seems like it's the labor market that is in the hearts and minds and the people making decisions at the Federal Reserve. But that feels like a handoff, right? Certainly a few months ago, certainly at the beginning of summer. It felt like it was the inflation picture that Jerome Powell and company were really worried about, but the labor market has maybe supplanted that.
Yeah, no, that definitely is where what is driving Fed policy right now. And you've heard a lot more Fed speakers talk about this, especially since that July jobs report, which came out a little over a month ago. And that really has sparked a lot more of the conversation around, resuming cuts, and not just for September, but for the other two meetings the rest of this year as well. Even some people saying, who knows if the data tomorrow on those benchmark revisions is so bad, could it even spark a discussion for a 50 basis point cut in September? And I find the timing, all of this, just so eerily similar to last year. It's very deja vu when we had a couple of weak jobs reports going into that September meeting, prompted the 50 basis point cut, 2 quarter point cuts for the rest of the year. But at that time, it was more about the unemployment rate moving up, and now it's more about payrolls.
Time is a flat circle. It certainly does feel similar to last September. We'll see, of course, if they actually go with the 50, but that'll depend partly on what we get in the next few days. That is Molly Smith. She is an economics editor over at Bloomberg News, of course, walking us through what is going to be a hefty week when it comes to the economic outlook. But let's switch gears here and bring in Bloomberg News national security team leader Nick Wadhams. Nick, we know it was a really interesting and consequential past couple of days with the recent immigration raid at a Hyundai Motor Solution battery venture in Georgia. This was, of course, was just one of recent actions that has targeted the workforce building these sorts of products done by foreign workers. Nick, what do we know so far?
Well, there's still a lot we're sorting through, including what the immigration status is of those workers. But, you know, the broad brushstrokes are that this has really sent a shockwave through the foreign investment community. For so many years, U.S. states like Georgia have really urged foreign companies to come and invest in the U.S. and build their products in the United States. And in this case, Hyundai was really courted very heavily. The idea being, listen, we want these cars made in the United States. We want jobs. We want that output here. So the companies had been brought in, and now you have this real cross-current, a contradictory message, which is, okay, you bring those factories into the U.S., and now ICE and the Trump administration are essentially targeting them. So that's going to cause a lot of companies to sort of sit up and say whether, you know, ask the question of whether the foreign investment is worth the risk. So we know that there's a South Korean delegation coming to secure the release of those workers. A lot will depend on their immigration status, so we should know more by the end of the day. But needless to say, this is causing a lot of companies to stand up and take notice.
And Nick, one question to stick here. Is it at all surprising for this to take place in Georgia? We've seen kind of a focus seemingly on typically Democrat-leaning states as it relates to ICE raids and other kind of steps taken by the Trump administration.
Right. Well, I mean, the interesting thing here is I think there's something a little bit different at play, which is in some ways you may have found some officials in Georgia had the ear of the Trump administration. There's some reporting out there that there were concerns from unions that a lot of the jobs at this plant would not be unionized. And so some of the concerns around the potential status of the folks who were coming to work at that plant were raised with the Trump administration because potentially they weren't unionized. So, you know, and which is its whole other element in an interesting story where you've had that, you know, the unions, which were typically a bastion of Democratic support, have really flipped over to Trump and have his ear. So it seems to be a little bit more that that's what's at play here rather than the Democrat versus Republican, you know, sanctuary city and blue or red state situation.
Well, Nick, you also touched on another interesting angles, and there's so many different ways you could attack this story here, but it's interesting to hear you say that, you know, some of these foreign companies are standing up and taking notice here, and they're concerned about their workers. It seems like this raid in particular, and maybe some of the other actions that have been taken, stand at odds with some of the Trump administration's stated goals here to bring this sort of manufacturing back to the U.S. and make some of these critical products in the U.S. But if you have foreign companies worried here and maybe hesitant to invest, it seems like that would be at odds.
Right. I mean, and that, I think what you're seeing across the board is a lot of, I mean, when you look at foreign countries, there's a lot of trying to sort through what the Trump administration's message really is, because this is not the only place where there are a lot of cross currents. I mean, you look at Russia, for example, where the president has talked openly about his affection for Vladimir Putin, and suggesting he might step off the gas on Ukraine, but then saying he may impose secondary sanctions on China, and has done so with India. You had the president meeting with the Indian prime minister and promising a very warm relationship. Then that apple cart has really been upset. You obviously have his image as a pro-peace president. He says he's solved 7 wars, and then launches a strike on a boat allegedly carrying drugs in Venezuela. So, you know, it's not only Americans, but also foreigners looking to try to make sense of this administration. And when they have money on the line, especially a putative ally like South Korea, it's going to add to those questions even more. And that's why we are hoping, you know, to see some result as a result of this delegation that's coming into town today to get some answers.
Yeah, Nick, is there any expectation on how long some of these factors or things will take to play out, just given that you are in D.C. right now?
Well, you know, I think there's a lot of sense that folks are going to be buckling up for a long ride through the Trump term, because there are so many forces at play and so many folks who have the president's ear. I mean, especially in this case, it's just, as you mentioned, it is so contradictory when you have the president saying, hey, bring those jobs to the United States. We want that investment in the United States. If you want to avoid tariffs, the way to avoid tariffs is to produce your products in the United States. Well, what happens when it tends to be a plant that's making EVs? You know, in the Hyundai case, and obviously, so the president wants that investment, but he doesn't like electric vehicles, so you have that cross current as well. Suffice to say that when companies are looking at much longer time horizons, they're much more wary about investing in the immediate term.
All right, Nick, great to get some time with you. Really appreciate your reporting. That is Nick Wadhams. He is our Bloomberg News national security team leader, joining us from Washington. Meanwhile, we turn back to what's going on in these equity markets. It is a Monday trading session underway right now. The S&P 500 up slightly right now, but it once again feels like just this wait and see sort of vacuum that we're in. We know that we're going to get some consequential labor market data tomorrow in the form of revisions, maybe a little bit stale, but still politically sensitive there. And then a double dose of inflation.
Double dose of inflation, Katie. We also do get the big Apple event. So the biggest drag on the NASDAQ 100 in terms of points is Apple, down about 0.9%. So pulling back the NASDAQ 100 by about 17, 18 points. But we are seeing what's broadly on the surface of momentum day. Looking on the terminal, factors to watch: momentum and growth outperforming. We're seeing a pullback on dividend and value stocks, though, as you mentioned, not really a ton going on. It seems like we're waiting to see what that economic data looks like. And obviously, again, we do have kind of uncertainty around what that jobs data revision will look like and what inflation is going to signal.
Indeed, for better or worse, this feels like a market that is very focused on the Fed's next step. Of course, we're also counting down to that Fed decision. But a lot coming up on Bloomberg Business Week. Up next, we're going to head to Paris and check in on the state of the French government. I hear that there's some turmoil over there. Don't go anywhere. This is Bloomberg Business Week.
Pick markets all day long here at Bloomberg. We've got the Dow back in the green, has been swinging between gains and losses. Right now looking at a 20-point gain on the Dow Industrials. That's an advance of about 0.1%. S&P 500 index up 12 at 64.93. That is a gain of 0.2%. The NASDAQ Composite Index trading at a record 21,822. NASDAQ up now by 0.6%. The 10-year yielding 4.04% with a 2-year 3.49%, while gold is up $47 the ounce, up 1.3%. Gold at a record $36.33 the ounce, while West Texas Intermediate crude up 0.6%, $62.26 a barrel. Bitcoin up 1%, $112,400 on Bitcoin. Apple shares trading lower by 1%. Apple launching that iPhone 17 tomorrow, and Nvidia's price target has been cut at Citigroup while maintaining a buy rating. The target now $200, down from $210. Nvidia shares up 1.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, thank you for that update, Charlie Pellet. And as we've been teasing, of course, there is certainly a lot to talk about when it comes to the French government. The news coming today that French Prime Minister François Bayrou has lost a confidence motion in Parliament. This should force the third change in government in just over a year. So let's set the scene with Bloomberg Daybreak Europe host Stephen Carroll. He joins us live from the Paris bureau. So what are the different factors that led us to this moment? As I said, the third change in French government in just over a year.
Yeah, I mean, there's sort of if you lose one prime minister is careless, you know, but you lose two is perhaps an indication that something bigger is wrong in French politics. And the problem has been, since Emmanuel Macron called a parliamentary election, a snap parliamentary election in June of last year, is that essentially nobody has a majority. The parliament split pretty much into three blocks: on the left, the centre and the right. Emmanuel Macron's party is in the centre. They've been trying to manage with a sort of a working minority situation, and it just hasn't worked, and that's why we're on a third prime minister. It comes down in each occasion to how the government is trying to pass a budget. At the moment, we were working on the budget for next year. The proposal from François Bayrou was a fiscal consolidation of 44 billion euros, so some tax rises, some spending cuts. The idea was to tackle something that he's been talking about for actually decades at this stage, which is trying to get France's ballooning debt under control. Something that's been exacerbated by a rise in bond yields globally has been the fact that the cost of servicing France's debt has gotten so much worse. He laid out the plan, first of all, in July. He left the summer open for negotiations. 2 weeks ago, he called a confidence vote, which is his right as a prime minister to do, but he didn't win a majority in Parliament. A majority of MPs voted against him, and so that means that he is now going to resign as prime minister. He's going to be going to the Élysée Palace to meet President Emmanuel Macron tomorrow morning to present his government's resignation, as is foreseen in the constitution, and then it will be up to Emmanuel Macron to name the next prime minister, who will face the same fractured parliament, to see if perhaps somebody else might be able to do better and might be able to actually get an agreement on a budget.
Well, where does he turn? Who are the likely names? What actually could be named, or who could be named that would actually kind of unite some part of this parliament?
It's a great question, and it's not the first time we've had to play this game, and it's now at this stage turning into a bit of game of guess who, because we have people ruling themselves out on live TV. As I'm speaking to you, the head of the centre-right party, Les Républicains, said that he doesn't want to be prime minister, so that's one person we shouldn't expect to get the call from Emmanuel Macron. Really the focus, though, has been around whether or not Emmanuel Macron will look outside of his political grouping. He has chosen previous prime ministers from within his own party, from François Bayrou, who was from a similar centrist party that was allied with his, and then there was Michel Barnier before that, who had traditionally come from the centre-right party. So the focus really is whether or not he may pick from the centre-left, from the Socialist Party. That would be what would change the parliamentary arithmetic in the National Assembly. That could win over more votes and make the possibility of passing a budget that little bit easier. Now, the Socialists are well aware of their position of power in this. They put forward an alternative budget ahead of this motion of confidence, which included some fiscal consolidation, about half of that of what was given in François Bayrou's proposal. So still the idea of cutting back on some spending, some new taxes, including on fortunes of over 100 million euros. They wanted to implement a wealth tax. Those are proposals that they say they're ready and willing to lead a government, but they want to do it on their terms. They want to put forward their budget, and they want to lead a government that's going to include the Socialists and the Green Party. So Emmanuel Macron has a choice. He could open that door to them, or he can go back to some of those from perhaps within his own movement, the likes of the current defence minister, Sébastien Lecornu, is a name that's being mentioned quite a bit. We've also got the Justice Minister, Gérald Darmanin. He's said to be interested in the job as well. And a host of other names that will, people will want to put themselves forward for this role as well. But the question is whether anyone can do any better than the last 3, 5, or 7 prime ministers that we've seen under Emmanuel Macron's presidency.
Yeah, I would imagine that would be one of the big questions here. I want to dig in a little bit more to some of the proposals to try to answer that question, because you mentioned the wealth tax, of course. Bayrou, of course, had proposed 44 billion euro worth of spending cuts and tax hikes. He also floated the idea that maybe they would cut 2 public holidays as a way to reduce costs. I have to imagine that, too, was a very tough pill.
Yeah, I mean, I think you can imagine how that went down with the French public. By the way, there's a series of impromptu parties being held. They're being called leaving drinks for François Bayrou in various cities around France this evening. So there are hundreds of people gathered in different cities around the country celebrating the departure of the Prime Minister. So even in times of political crisis, the French will find a way to be French about it. And this is something that we're looking at the idea. Indeed. In times of great uncertainty, there are things that you can rely on about political turmoil in this country. But, I mean, the question remains is that who could do something that's better or different. A lot of François Bayrou's proposals were about freezing things like income tax thresholds, freezing benefits payments at current levels. There wouldn't be automatic inflation-linked increases next year. That was to try and control it. He had wanted to front-load the fiscal consolidation, something that markets certainly had that would be welcomed by markets, because we have seen this pressure on French borrowing costs as well. The Socialists, as I say, want to do it at a slower pace. This is, and Bloomberg Economics have highlighted this again recently, this is not a fiscal crisis right now. It is a political crisis. First of all, the current budget runs to the end of the year, so you've got still several months for somebody to try and cobble together a plan for what happens next year. If they don't get a budget agreed, we don't have a shutdown in this country. What happens instead is the current spending plans simply get mapped on to next year. Not anyone's ideal scenario, but not leading to a situation where there would be massive changes to either how services are provided to taxpayers in this country or how markets would be perceiving the situation down the line. But nonetheless, François Bayrou has repeated, and I think most market participants would agree, long term this problem does have to be addressed, and none of the remedies look particularly attractive. Cutting bank holidays was a particularly surprising idea, but François Bayrou, when he announced it, said, look, everything's open to negotiation. If you come up with a different plan, I'm willing to listen to it. None of the other political parties want to engage, though, with that sort of discussion.
A lot of unknowns that we will figure out at some point in the future. That is Stephen Carroll working the late shift from Paris. He is the host of Bloomberg Daybreak Europe here on Bloomberg Radio. Shifting our focus to the energy markets, on Sunday, OPEC Plus decided to further increase their oil production. For more on that, we're joined now by Dr. Ellen Wald, president of Transversal Consulting and a senior fellow at the Atlantic Council from Boca Raton. Dr. Wald, oil prices moving a touch higher after this announcement. Was it all kind of baked in and expected? What's the real takeaway from here?
I think that markets probably expected a slightly larger increase. And so when news of this came in, we were actually seeing prices move higher as a result of those expectations already being baked into prices. The other thing that has come out actually today is that a lot of the countries that are involved in this increase are actually already overproducing their quotas. And so they've all submitted schedules for reducing production in order to kind of compensate for the overproduction that they have been committing. And so it's going to look like actually we're going to see a little bit less oil on the market from some producers, but Saudi Arabia is going to put more oil from its wells on the market.
Yeah, with that in mind, what's the driver there? Is that just strictly Saudi Arabia having the biggest seat at the table and making the decision and kind of driving the ship?
Saudi Arabia definitely has the biggest seat at the table and is absolutely driving the OPEC Plus ship right now, especially amongst those countries that had committed to voluntary reductions beforehand. So these are all, actually rolling back voluntary extra cuts that they had made previously. But I do think that Saudi Arabia is looking at the forecast from its people at OPEC, and they're showing that we're not actually as oversupplied as some people think we are. That's what they're looking at. And so they're looking at a way to, they're looking to add oil to the market. They're looking to increase their revenue, and they're more likely to be able to do that at this point by selling more oil as opposed to selling less oil and trying to kind of jimmy the prices higher. It would be very difficult for them to actually get prices to go higher based on cuts. But if they can just sell more oil, even if prices are a little lower, they're likely to actually make more money. And then you have this whole issue with Russia and sanctions and tariffs. And so I think what they're looking to do is not necessarily regain market share per se, but they're looking to fill gaps in countries that are being pressured to cut back on purchases of Russian oil.
Yeah, definitely a lot of different cross currents there when you lay it out like that. Ellen, it is interesting that heading into this weekend, you had analysts over at Goldman, also at JP Morgan, basically warning Saudi Arabia and its partners that they could risk unleashing what would amount to a supply glut if they didn't cut production. Obviously, they did not cut production. They boosted it maybe by less than expected. But give us the current state of supply. Are we at risk of a supply glut?
So it's interesting. I think that there are definitely a bunch of different forecasting agencies and banks that do see us as either entering a supply glut or soon to enter a supply glut. And then you have OPEC. And based on the amount of overproduction that was actually going on, I do think there is probably more oil on the market now than the numbers that most people are looking at are saying. So if we're actually in a point where we're in the kind of supply and demand balance that we're in, but there's actually more oil on the market than we think that there is, we may not actually be headed for quite a supply glut as these banks have been forecasting. Of course, these things depend on, how global economies go. Are we going to see, slowdown in China or something of that respect? And those things can all act to change, the supply and the demand situation. But I do think that OPEC is not seeing the kind of dire oil glut that Goldman and other banks are looking at.
And Ellen, just in about 15 seconds, what does this mean for the end consumer of pretty much any energy product?
So, for U.S. consumers, we could see gasoline prices going down a bit, but I don't think that that's really all that dependent on OPEC at this point. We're really in an area where we're producing a lot of oil in the U.S. I do think we need to look carefully to see if that production is actually going to start declining, because that could have a more immediate effect on energy prices. In terms of electricity prices, we are looking at higher prices.
Right.
But that's another story.
All right, great to get some time with you. That is Dr. Ellen Wald. She is president of Transversal Consulting and a senior fellow at the Atlantic Council. For those keeping track at home, Brent's currently trading at $66 a barrel. You're listening to Bloomberg Business Week.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ. They're all advancing right now. S&P higher by 10. That is a gain of 0.2%. Wall Street's piling into bets that the Fed will be cutting rates next week. The Dow now up 28, up 0.1%. NASDAQ trading at a record 21,804 right now, up 104 points. The NASDAQ Composite Index up by 0.5%. Our Mag 7 Index higher by 0.3%, with the 10-year currently yielding 4.04%, the 2-year 3.49%, and spot gold up $47 the ounce, up 1.3%, 36.33. Gold, by the way, looking at a record. West Texas Intermediate crude oil 62.35 a barrel. WTI right now up 0.8%. Merger Monday with PNC Financial Services agreeing to buy First Bank Holding for about $4.1 billion to add $26.8 billion in assets and branches in Colorado and Arizona as one of the nation's top regional lenders adds to its coast-to-coast footprint. PNC Financial down now by 0.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thank you for that update, Charlie Pellet. Let's check in on the real estate market and specifically commercial real estate. We're joined now by Christian Ulbrich. He is the president and CEO of JLL. He is joining us now on Zoom from Frankfurt, Germany. Christian, great to have you here with us. And you have a really unique perch, of course, a very global perch when it comes to the global commercial real estate market. And so with that in mind, how does the U.S. stack up versus the rest of the world? Is this one broad picture that you can paint with a broad brushstroke, or how much dispersion is there when you take a look globally?
Well, when you look at the Western mature economies, there's the absolute performance and there's the relative performance. The absolute performance of the U.S. is okay. It's improving over the last couple of quarters against what we have seen during the trough at 23. But then there's also the relative performance against the other Western mature economies. And compared to that, the U.S. is doing really great and is an attractive area for investment for international investors.
Are there parts of the market that you see, I don't know, better set up to succeed, whether that's manufacturing, industrials, office? Where are you seeing the strength right now?
Well, again, on the offices side, we saw a really deep trough post-COVID and the discussions around what is the need for offices going forward. But what we have seen over the last couple of months that more and more of the large corporates are asking their people back into the office. In fact, when you look at the Fortune 100, more than 54% of the Fortune 100 companies in the U.S. expect their people back into the office for 5 days a week. And that has obviously resulted in a steady increase in demand for high quality office space. And as we are coming from a very low base, there's still a lot of runway for the offices sector. With regards to industrial, usually a very strong sector, but still a little bit shaky from the impacts, the unknown impacts from the tariffs around the world. So that is still something where we hope that we get a little bit more certainty into the market, and then that asset class will recover as well.
Well, Christian, you talk about the return to office post-COVID. Obviously, top of mind for investors, consumers, and managers is the impact of AI. How are you seeing companies within office thinking about whether or not they can reduce their in-office footprint, not just kind of to account for people returning to the office, but if you're implementing AI and you need less white-collar jobs, presumably that means you need less office space.
Yeah, that is obviously a big discussion. I would say this is still too early to really make clear predictions what's going to happen. At the moment, it doesn't have any negative impact. You can argue it's at the moment almost the opposite for the US at least, where we have a lot of investment into AI and a lot of new staffing coming into the tech companies. But going forward, that could become a topic. But as I said, we are still in the early innings where AI is really showing its impact. And so we cannot say how that will play out longer term.
Yeah, certainly a lot of investment into AI. Still unclear, of course, what that means for the worker and the buildings that they work in. But I want to wrap in Federal Reserve rate cut expectations to this conversation. It seems like a done deal that we're going to get a rate cut from the Federal Reserve in less than 2 weeks' time. What happens for the rest of the year? Unclear. But how is that conversation and these shifting rate cut expectations sort of translating into what property owners are considering doing with their real estate?
Well, simply speaking, when you have interest rates expected to come down, that will have an impact on pricing because the cost of capital for those real estate investors will come down and therefore they can afford higher pricing. And we had that debate now for many, many months, first whether it will come further up and then when it will come down. Usually these smaller changes in interest rates, and especially the ones which are expected, don't have a massive impact because people are adapting to it. What the market doesn't like is any rapid movements, and especially those unexpected movements. So going forward, those 1 or 2 rate cuts which are now expected for this year, they will support the overall kind of environment for real estate investment, but it will not have a massive impact.
Yeah, well, one thing we were talking about at the top of the show is the impact of kind of immigration and the lack of immigration or some of these ICE raids and how that impacts manufacturing. What's your read of building and investing in Donald Trump's kind of push for manufacturing and bringing manufacturing back to the U.S. if there's so much uncertainty around tariffs and the ability to actually get employees from other countries here in the U.S. to work?
Well, that is certainly an aspect of uncertainty. I mean, before we had all those debates about tariffs to the U.S. Or from the U.S. to other countries, we already had a shortage of skilled labor in the U.S. So that hasn't become much better since then. So for everybody who wants to invest into the U.S., the question, where will they find the skilled labor, is a big debate. And the uncertainty now about immigration, not only the pictures we see on TV, but also the question around whether the most talented people around the world who usually aspire to come to the U.S. will see the U.S. as kind of their destiny, or whether they want to have their careers elsewhere is now an open question. So whatever going forward helps to calm that situation down will obviously then also help to bring more certainty for those who want to invest into the U.S.
We're talking to President and CEO of JLL, Christian Ulbrich. Christian, just want to ask about something top of mind here in the U.S. is potentially the IPO or re-IPO of Fannie and Freddie. How are you thinking about that? What is your view on the potential impact, not only as it relates to U.S. home buyers, but the entire ecosystem as it relates to real estate, if these are two companies that end up getting out of government conservatorship and into the public markets?
Listen, I think we will deal with that situation when they're a private company, as we have dealt with the situation when they were a public company, publicly owned company. So it is a very important instrument for the U.S. housing market. It plays a huge role. And I'm sure that in any format of an IPO, whoever will be the owner of those entities will try to prevail the success of that instrument going forward. And so we see that relatively relaxed.
All right, Christian, really appreciate your perspective. Great to get some time with you. That is Christian Ulbrich. He is the president and CEO of JLL, joining us from Frankfurt, Germany. Meanwhile, we are just about 2 hours to go. Actually, just over 1 hour to go until the market closes. Time flies when you're having fun. Let's take a look at where we stand right now in the U.S. equity market. Taking a look at the S&P 500 right now, kind of an uninspired trade. We're higher by about 0.2%. Volume is bang in line with the 20-day average here. And we're coming off actually a weekly gain for the first full trading week of September. But we know seasonally speaking, this is a pretty hairy, scary time.
Yeah, and just want to call out that we are using that AVAT function on the terminal below average as it relates to trading volume. So relatively sleepy Monday in terms of trading activity, with kind of all eyes on tomorrow's jobs revisions number. We have, as we talked with Molly Smith, PPI and CPI data, and really just trying to get a sense of where inflation is, what that means for the Fed's decision later this month, and obviously how investors are going to position all around that, Katie, whether we get 25, 50, whatever.
Yeah, anything could happen, but probably 25 basis points. In any case, you might be wondering why Bailey and I are here, and here's the answer. It's because Carol Massar and Tim Stanovic are at the Future Proofs conference in Huntington Beach, California, but they're here with us now. So Tim and Carol, you're on another remote location here. What's going on over at Future Proof?
There are a lot of people at the beach, I can tell you that.
Which is right behind us.
Yeah, a lot of people at the beach. I saw some festival attendees that were wearing their, their tags, and then one guy carrying a surfboard early this morning,
Can I just tell
heading
you,
to the beach.
Tim,
this is like a great conference.
Tim's
That's what I'm
like,
going to say.
I got dressed. I brought my suit. Like, I should be wearing flip-flops. He
I
does not
am
have
the
flip-flops
only
on.
one. I'm the only one out of like 4,000 people around me wearing a suit right now. I feel a little overdressed, but hey, we got a great program coming up. We're taking full advantage of everyone who's here.
We are, and I love what you guys just talked about, everything that's coming out of investors this week, right? Those jobs revisions, we've got a read on inflation. We have so much, it feels like governments around the world. We've spent so much time talking about what's going on in France. There's just a lot coming out of investors. So we are at an event where there's tons of RIAs, registered investment advisors. So they're trying to figure out how do you make sense of all of the macro and figure out what's the best strategies, portfolio allocations for their clients.
Yeah, Lauren Goodwin is going to be joining us a little bit later. She's Chief Market Strategist over at New York Life Investments. We're also going to be hearing from Barry Ritholtz a little later in the 4 o'clock hour. And then Sarah Levy over at Betterment. You know it as a robo-advisor, but increasingly they're offering services to RIAs with a Betterment Advisor solution. So we're going to speak to her about what they're doing right now.
Yeah, I'm really curious too. We have the head of U.S. Wealth Advisory and head of retirement over at BlackRock, and you know that there's been a lot of news. They took over some of the wealth advisory for Citibank. That was news just last week, but also how BlackRock is increasingly wanting to offer private credit to their investors when it comes to long-term investment planning and retirement planning. So we're going to talk about that with her. And I'm assuming the Fed's going to come up a few times in our conversations, don't you think?
Yeah, I think so.
Just a few.
Yeah.
Well, the real question is, guys, it looks like it's sunny. Are you getting in and out? Is in and out being catered? That's all I really care about is what you guys are eating when you're in the better state of California.
You know, that's funny. Yeah, it's funny you say that, Bailey. No In-N-Out sightings yet. Some big burritos last night. Did a little trip to Balboa Island for frozen banana, the legendary frozen banana, which was pretty cool. I don't know. We have dinner tonight, Carol, so maybe we'll make our way to an In-N-Out burger.
I got to say that part of this event, what's interesting is, yes, it's all about the financial world, but it's also, there's food trucks, there's meditation on the beach in the morning, yoga on the beach. There's this kind of whole experiential part of this environment. Future Proof is very different from a lot of the other traditional investment conferences.
This is not a Las Vegas conference, that's what I'll say.
But they're all good. They're all good. Different perspectives. And that's why we're looking forward to see what kind of the mood is. I mean, last year we talked about the upcoming presidential elections. Well, now, as we all know, we have a new president in the White House, and he's certainly been impacting policy and the investment outlook. So we'll see what they have to say about it. All right, guys, back over to you.
All right. Really looking forward to the program that you guys have coming up. It sounds like you're working very, very hard out there in California. So we'll check in with Tim and Carol in just a little bit. We'll hand them the reins. But meanwhile, Billy and I are here and we're looking at markets. And I know that it is a big, important conversation that they're having out there with some of those RIAs about putting private assets in retirement plans. I have to imagine that is a hot topic among that crowd.
I mean, it's been a hot topic really here in New York on Wall Street is how can some of these private equity firms kind of monetize assets or open up the kind of portfolio to your average consumer, your people who are looking to retire and really enabling investments, whether that's private equity assets, whether that's venture capital backed assets. So certainly something to keep an eye on as they get better weather out there and better food. Personally, I'm biased.
There's no way Tim is eating an In-N-Out burger, though. I will just say that. I go by his desk, he's eating beets and raw chicken. Not raw, but close enough.
A healthy guy. He's a biker. I know you're a biker as well, so staying healthy.
Enjoy cardio.
All right.
Anyway.
Well, let's take a look at some stocks on the move today. I'm Bailey Lipschultz, and we're joined by managing editor for Bloomberg Markets live blog, Christine Aquino. Christine, what's top of mind?
Well, let's talk about EchoStar, shall we? That's probably one of the biggest pieces of news today, big in the M&A space. So EchoStar, ticker SATS, and those shares are up more than 17%. So pairing a little bit of the best of its performance today, but still pretty good. And that is because Elon Musk's SpaceX agreed to acquire the wireless wireless spectrum licenses from EchoStar for about $17 billion. So that's going to give them the licenses designated for satellite and mobile communications. So this is according to a company's statement, but it is actually, or was actually reported by Bloomberg earlier. So the good thing about this deal, at least from EchoStar's perspective, is that it should keep the FCC off their backs, because the regulator has accused the company of not effectively using the spectrum that it was awarded and was actually threatening to strip some of its valuable licenses. So Bloomberg Intelligence weighing in on the deal, saying that it may materially reshape the company's credit profile because it enables significant debt reduction from its $27 billion load. So that's quite a hefty load that is now being held by this deal.
Yeah, big move, though. This is a stock that is up almost 250% this year, but another stock that's rallying pretty hard today and this year, Robinhood. What's going on?
Absolutely. Robinhood, well, they're getting really good traction today. So extending those gains now up nearly 15% on the day. So Robinhood, ticker XAUUSD, really getting a boost today because of the news on Friday after the close saying that they have been added to the S&P 500 index. So, you know, looking back 5 years ago, right, Robinhood was just this platform that mostly retail traders used, gained so much popularity, especially when people were sitting at home bored during the pandemic and trying to figure out what to do with their stimulus checks. So fast forward 5 years later, now they're part of the S&P 500. And what's crucial about this is that inclusion allows them to enter the portfolios of index funds, pension plans, retirement accounts, a completely different investor base from the retail traders that are used to using the platform.
This is a stock that IPO'd at $38 right now, north of 115. Bring us on home, AppLovin.
AppLovin. So that is another stock that is getting that S&P 500 inclusion boost. So AppLovin, ticker APP. Those shares up more than 11% at the moment. So we know it's a mobile app marketing company and was also included in S&P 500. And, you know, this is just the latest piece of good news for the company. Last month, we did see their second quarter results beating estimates. Bloomberg Intelligence also noting that their third quarter sales guidance implies 10 to 12% growth, which beats the consensus for 8% growth. And some of the features that they launched, including a self-service ad dashboard and AI-powered user acquisition tool, is really proceeding according to plan. So latest bit of good news for AppLovin there.
AppLovin at an all-time high. For more conversations like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcast. Christine, we have a busy week in terms of economic data. What are you keeping an eye on? What's kind of standing out when you look at this market right now?
Well, Betty, I mean, you mentioned it earlier, right? I mean, the next milestone is, of course, going to be those job revisions. We'll see just how badly the labor market is doing. The thing is, you know, it's doing just bad enough to convince potentially the Federal Reserve to cut rates as soon as this month, maybe a bit more over the next few months, but not so bad that investors are suddenly fearing a recession, you know? So it's almost kind of like a Goldilocks sort of slowdown, if you will.
Well, we see, looking at the WERP function, we see markets pricing in a rate cut, obviously, in a little over a week and a half, and then really pretty much locking in another cut in October. It really seems like a question of, are we going to get 2 or 3 this year in terms of Fed rate cuts and what that really means for the market?
Yeah, absolutely. And of course, to answer that question, we will have another piece of data later this week. That's going to be PPI and CPI. Very, very important to answer the other side of the equation, right? Like how much the Federal Reserve can cut really depends on whether inflation is in check, because there's a lot of fears that, oh, maybe there's kind of a later delayed reaction when it comes to the impact of tariffs, you know, that there are lingering price pressures that risk getting reignited again. So that data is going to be very important in for investors to see how the balance of jobs and labor market slowdown and inflation really goes before the Fed meeting next week.
Yeah, keeping an eye on markets, stocks trading higher. We are seeing a sell-off, though, in utilities and real estate, technology and consumer discretionary, leading to the upside. If you are watching us on YouTube or listening to us on radio, Bloomberg Business Week Daily continues live from Future Proof in Huntington Beach, California, with Carol Masser and Tim Stenovic. If you're with us on Bloomberg Television, The Close is up next. This is Bloomberg.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. There has been a flurry of legal rulings today involving the Trump administration, the latest over whether states can sue the administration over the firings of federal workers. Matt Piper reports.
In a 2-1 ruling, the appeals court says states do not have the standing to sue the Trump administration's mass termination of probationary employees. It says they only have standing to challenge the process by which the government has engaged in mass firings. In March, 19 states and Washington, D.C. sued federal agencies alleging the terminations were unlawful and never gave 30 to 60 days advance notice. The court also notes the harm was done to people, not states, none of whom are parties in the suit.
The Chief Justice will allow the president to remove Rebecca Slaughter, a member of the Federal Trade Commission. Lower courts had ordered her reinstatement. Legal analyst Laurie Levinson.
This order by Chief Justice Roberts is a real signal that the court continues to empower President Trump to have full control over his agencies and those who are in them.
CBS's Camilo Montoya Galvez reports the Supreme Court cleared the way for federal agents to conduct sweeping immigration operations in Los Angeles.
The High Court, through this ruling, is suspending a lower court order from July that had prohibited federal immigration officials from conducting what advocates called roving immigration arrests that relied on certain factors such as somebody's race or ethnicity, the fact that they were speaking Spanish or English with an accent.
There was a deadly attack on a bus stop near Jerusalem today, and the Israeli offensive into Gaza City is ramping up, as Linda Gradstein reports.
Speaking at the Air Force Command Center in Tel Aviv, Israeli Prime Minister Benjamin Netanyahu warned the residents of Gaza City to, quote, leave now, hours after Israel said it would ramp up airstrikes on Gaza. He also said that Israeli forces are organizing and preparing for a ground maneuver hours after 2 Palestinian gunmen killed at least 6 people in a terrorist attack in Jerusalem.
Venezuela's deploying 25,000 troops to its coastal states to tackle drug trafficking after the U.S. ordered additional fighter jets to Puerto Rico to carry out operations against drug cartels. CBS's Charlie Daggett reports it isn't entirely clear yet whether this is an attempt by President Maduro to de-escalate tensions.
He emphasized that the operations were strictly going after drug smugglers, avoiding any of the kind of language or rhetoric that we had seen in reference to the U.S. military presence there.
Defense Secretary Pete Hegseth made a surprise visit to Puerto Rico today. This is CBS News. The British band Supertramp says one of its co-founders has died at the age of 81.
It was an early morning yesterday. Rick Davies added keyboards and soulful vocals to Supertramp, a group that hit it big in 1979. Goodbye Stranger was one of several hits on the album Breakfast in America that soared to #1 in the U.S., won 2 Grammys, and sold more than 18 million copies. Davies had been treated for multiple myeloma, a type of blood cancer, for more than a decade. Steve Kathan, CBS News.
A woman in Australia charged with murdering her estranged husband's relatives with poisoned mushrooms has been sentenced to life in prison. Erin Patterson is expected to serve most of her time in isolation because officials say she could be harmed by other prisoners who followed the case. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenovec. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon. Yes, indeed, folks, we are not on the East Coast, as you can tell. We've got the ocean right behind me, and it's not the Atlantic Ocean, it's the Pacific Ocean.
We are on the West Coast. We're in Orange County, California. We're south of L.A. We're north of San Diego. It's a pretty good place to be on this Monday, September 8th,
It's an amazing place to be.
Huntington Beach, California for Future Proof.
Yes, indeed. It's Bloomberg Business Week live at Future Proof Huntington Beach. Today's show, by the way, sponsored by Van Eck. We are celebrating 70 years of helping investors stay ahead in a world that never stands still. And that is why it is so fun to kind of helicopter in, it feels like, drop down in this space.
You got to take a helicopter?
I was
in like a Uber.
I've also got the executive suite in terms of the hotel room. He's so mad. He's so mad. Having said that, there's so much macro going on. You know about it. Kind of geopolitics around the world. A new leader expected to come in terms of a prime minister in France. There's just a lot coming out. Investors, including in the U.S. We've got a Fed meeting just around the corner. These are the people to talk to. They are managing people's money.
That's the backdrop. 4 days of keynote speakers, panels, lots of meetings happening, and some music too. Weaving all that in, as you mentioned, Carol, there's a lot for investors to digest right now, and we got a great group of folks over the next 2 hours who we're speaking to help us make sense of it all.
Matt Middleton, he's in the chair right next to me. He is the reason this has all come together. It's several years it's been going on, so we're going to talk about today's themes, what is top of mind for investors, and some of the interesting events that are going on. Because, yeah, it's about the financial backdrop, but it's also about experiences, and they kind of weave it all together.
One thing we're thinking a lot about is the growth and business of wealth management. On that and more, we're going to be joined by head of U.S. Wealth Advisory and head of retirement at BlackRock. We're going to talk to, yes, private credit.
Yeah, we are, indeed. We've also got Lauren Goodwin, Chief Market Strategist at New York Life Investments. We're going to talk the macro. Barry Ritholtz is going to stop by. Certainly a friend, colleague here at Bloomberg. And then Sarah Levy of Betterment Advisor Solutions. Going to talk about individual investors, but also serving investment advisors.
Also, we got a close eye on everything happening when it comes to fixed income. Priya Misra is going to stop by. She's going to talk about the bond market and that upcoming Fed meeting. Let's send things back to Bloomberg headquarters in the Bloomberg Interactive Brokers studio with a check of the day's trade and top business stories. Charlie Pellet is holding down the fort.
Hi, thank you very much. And here's what's going on. We've got the Dow, the S&P, NASDAQ all advancing. 53 minutes to go until that closing bell clangs on Wall Street. S&P right now higher by 9, 64.90, up by about 0.1%. Dow Industrials pushing higher right now, up 45, up 0.1%. The Dow has been swinging between gains and losses. Right now, looking at the NASDAQ Composite Index at 21,802. The old record on NASDAQ, 21,713. Likely we'll see a new record for the NASDAQ Composite Index, up right now by about 0.5%. Our Mag 7 Index is advancing 0.2%. The 10-year, 4.04%, with the 2-year, 3.49%. Gold up almost $50 the ounce, 36.36 on the precious metal, right now up 1.4%. And West Texas Intermediate crude up 0.7, 62.32 for a barrel of WTI. As for the market backdrop and the calendar, Cameron Dawson is Chief Investment Officer at New Edge Wealth.
September is notoriously a higher volatility and lower return month for markets. And so it actually has been surprising, given everything that continues to be thrown at markets, that equities have held up so well. We wouldn't be surprised as we move through the next few weeks to see some volatility kick into higher gear. Nothing to necessarily halt the rally. We do think we are set up for a pretty powerful Santa Claus rally into the fourth quarter.
And she mentioned Santa Claus ahead of October. Cam Dawson of New Edge interviewed this morning on Bloomberg at daybreak. S&P again up 9 right now, up 0.1%. Briefly, SpaceX, the Elon Musk-backed company that owns the Starlink satellite internet network, has agreed to acquire wireless spectrum from EchoStar for about $17 billion. EchoStar shares, SATS on the ticker, surging by 19.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie Pellet. This is Bloomberg Business Week live at Future Proof in Huntington Beach. Today's show is sponsored by VanEck, celebrating 70 years of helping investors stay ahead in a world that never stands still.
All right, there's so much going on behind us. 5 stages, 6 football fields worth of boardwalk, 5,000 plus attendees, financial advisors, wealth management execs, limited partners, around 100 sessions featuring over 200 speakers. There's a lot going on, and it represents about $20 trillion in assets under management. So this is why it's a great place to be. Behind it all, the reason we are here, the reason this exists is Matt Middleton. He is with us, founder and CEO at Future Proof, joining us here on site. I should point out, former growth strategy director at Informa, co-creator of the financial advisor conference WealthStack, and recently, along with a partner, acquired a majority stake in ETF.com. So you got a lot going on here.
Been busy.
Yeah, you're busy. Tell us about how you think about the financial space and what advisors today really need.
Yeah, so I think it's 2 parts, right? We all grew up. My personal experience into the industry, it was conformity, right? It's, talk this way, walk this way, dress like this, act that way. If you want to get in that room, this is what you have to be. And really, what we're representing here is a shift, right? It's a mindset shift. It's a generational shift. And what we're seeing is that people with real buying power, real influence and assets want to actually break up of the status quo. And this is a representation of that new industry, which is not just casual attire. Obviously, we're here on
I know we feel a little dressed up here.
I said earlier, I'm the only one here wearing a suit.
I know, that's first timer, that's why.
Yeah, that's what happens. You can tell who the first timers are, yeah.
But it is. It's mostly about the experience here and people connecting. And the industry is better when we all connect versus siloing out. And so our hope is here is not just to define it as wealth management, not to define it as asset management or fintech, it's to bring everyone together from all job levels across all functions and give them the tools that they have to meet and network to see how to build a better business.
One thing that I noticed about this conference that I've never seen before is for a small fee, you can bring your partner, meaning your husband, your wife, your boyfriend, your girlfriend, your significant other. I've never seen that before. What's the thinking behind this?
Well, personally, obviously, I'm an entrepreneur, and, I always laugh when I have these conversations. Everyone's like, what's the vision? What do you do this? How do you manage it? You just acquired this business. And at the end of the day, it's like, my co-founder is my wife, right? At the end of the day, it's who you have at home, the people that are on that journey with you, that kind of wear all of that. And so part of that view was, one, we're in this beautiful setting, right? It should feel like a destination and a vacation to some sorts, but also it's allowed to you get your spouses to experience what the industry is like, meet your clients, meet your partners. And again, I think if they are more exposed to it, they'll understand it more. And that's a representation of what we're trying to do here, which is if we could get this event to a large enough scale and get national attention with the help of you all, well, maybe some people on the, the general public will start to look at it and say, oh, what is this, right? They'll scroll through Instagram and it's like, oh, I see Coachella and my friends, and this is it's a cultural movement. And then the next scroll, they're scrolling and they're seeing Future Proof, like, oh, this is great. What is a wealth management conference? This is interesting. What is wealth management? And we could expose them to more of it. And so it's a little bit of one, we want to make it family oriented, and the other side of it is we want to change the narrative and the optics of our industry.
But do you also think about, I thought I read somewhere too that you want to kind of cap how many people are here, because we've certainly been to lots of conferences where it just feels like thousands and thousands and thousands of people and tons of booths, and it's almost overwhelming, and I'm not quite sure what the takeaway is.
Yeah, so it's 2 parts, right? One is, yes, that is true. When you get a large crowd, the word that always comes out is boondoggle, right? And you have no mission, people get lost, you're drinking from a fire hose. We use proprietary event technology, so Breakthrough, what you see this big tent here, to allow people to connect in meaningful ways. And the goal there is you go into the event, so 3 weeks before the event, you basically are making connections and guaranteeing certain meetings. So you have one-to-one meetings, you have roundtable discussions, you have all these different booth activities. These are all pre-scheduled, so it's not serendipity happens. So you could create a large-scale experience, multi-thousand person experience, and create a unique agenda and a unique networking plan for one specific role or person. And that's the benefit of what we do. The second side to that is we do want to cap this because there's a magic size here, and we believe that's around 5,000 people. One, we're in 4 hotels in Huntington Beach. We have 10 hotels in Newport Beach, people staying in Irvine. There's people staying 40 minutes away. So at some point, even if we can't control it, their experience is going to be different than everyone here. Yeah. And so we decided that there's a limit to what we want to do here.
I did see this idea of, growth and bringing people. I did notice that pretty much everything is branded. There's sponsors everywhere. From the perspective of this as a business, in terms of revenue, is your biggest revenue source still tickets, or is it sponsorships now?
It's always sponsorships. So
how much bigger is that than tickets?
It's probably 70-30 ratio. We also monetize all these different connection points. So again, using the technology, right? A lot of these meetings that you see, there's some are peer-to-peer, others are buyer seller. And so there's different ways to monetize events that we've kind of broken. One, it's a different format, right? Two, it's the technology allows us to do things differently than most other events. But yeah, the idea here is like events should be about the community and shouldn't just treat the attendees as a product, which is unfortunately how it typically happens when you have these booths and everyone's trying to pitch and wheel. And so you see people that you see a lot of the big brands that you see at other events, but they're showing up differently here. And it's meaningful. They get better ROI and the attendees have better experiences.
So, been doing this a few years, post-pandemic. I remember last year, Matt, that such a big theme was the upcoming U.S. elections. Well, they've come and gone.
Yes.
We've got a president in the White House that definitely markets and investors are focusing on. We are certainly, because what he says and what he does certainly impacts the investment environment. What is top of mind for the folks as you are moving around talking to folks? And are people more optimistic this year than they were last year? Any takeaway so far?
I think people are optimistic, but I also think people are not sure of what the future is, and that's for a whole host of reasons, like AI being the biggest narrative in this year's event.
Which is a big theme, right?
Of course, it's the big event, and you could look at it from all different sides, right? From an investment side, right, you have to understand what is going to be affected into the future, right? Not just what it is today, but what is AI going to do, and not just to tech companies. What is it going to do to various different sectors, right? The other side is the operational side, the industry side, right? It's a rewiring of our entire industry, and it's going to be a new operating model for wealth management specifically. And most people here are trying to figure that out, right? Most RIAs, which are a large majority of the audience here, they're small business operators, right? And so at the board level, they're having these discussions, right? How much do we need to invest in AI? How do we understand it? How do we use it? What's our audience going to look like into the future? Are we going to serve clients directly, right? There's so many different questions, and the truth is, even the AI experts today, no one knows because it's changing so rapidly. Every 6 months, it's a new shift.
Yeah, and at the same time, so much money, right, is being invested to the infrastructure build out and just overall. Matt, thank you so much.
Absolutely.
Thanks for inviting us. Really appreciate it. Matt Middleton, he's the founder and CEO of Future Proof, joining us here in Huntington Beach. All right, we're going to have more from the event.
Yeah, we're going to catch up with the head of U.S. Wealth Advisory and head of retirement at the world's largest asset manager, BlackRock. That's coming up next on Bloomberg Business Week Daily.
Looking forward to it, because some news involving BlackRock last week, also about their focus in terms of private credit and some of those target funds for their retirees. So we're going to get into that. Do not go anywhere. I'm Carol Master along with Tim Stanovic live in gorgeous Huntington Beach. We are here at Future Proof, and this is Bloomberg.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks trading higher across the board right now. S&P 500 index up 6. We're well off session highs, but up 0.1%. Dow Industrials up 39, now up 0.1%. Nasdaq up 86, looking at a record close, up by 0.4%. Wall Street is betting that the Fed will cut rates next week, with stocks rising on speculation that policy easing will keep powering corporate America. The 10-year at 4.04%, the 2-year 3.49%. Gold is up $47 the ounce, up 1.3%, and West Texas Intermediate crude oil now higher by 0.9%, $62.40 on WTI, and Bitcoin just above 112,000, up by 0.8%. Indeed, a busy week for economic data. 2 inflation readings this week: PPI Wednesday, CPI Thursday. Kathy Bostjancic is chief economist at Nationwide. She was a guest this morning on Surveillance.
Even if you get some real shocking numbers, it will be analyzed to see, is that repeatable, and are these one-off changes that eventually will fade over time. What it could influence is the pace of rate cuts this year and the total amount, not necessarily rate cuts themselves.
Kathy Bostjancic of Nationwide interviewed on Surveillance. You can hear more of that conversation on the Surveillance podcast, and you can download it wherever you get your podcasts. Summit Therapeutic shares are plunging after new data cast doubt on the future of its closely watched lung cancer drug. Summit right now is plunging 24.3%. Again, recapping, S&P 500 index up 4, up 0.1%. Nasdaq could see a record close. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie Pellet. This is Bloomberg Business Week, live at Future Proof in Huntington Beach. Today's show is sponsored by Van Eck, marking its 70th anniversary this year, with a legacy defined by forward-thinking strategies, resilience through market cycles, and an enduring commitment to clients.
All right, we want to get back to some of our guests here at Future Proof. First of all, I want to just kind of set up this because there's a big trend that's picking up some momentum, and this is as big U.S. banks are increasingly partnering with asset managers, big asset managers. Just last week, Bloomberg reporting out that Citigroup is entrusting BlackRock with tens of billions of dollars of clients' investments in a move that will close the bank's only remaining in-house asset manager and really outsource more of its wealth units offerings. In a new partnership, BlackRock will manage the assets of thousands of the bank's wealthiest clients who currently have accounts with Citi Investment Management. Our next guest is involved with all of this and so much more, and they have a new retirement survey out. Joining us is Jamie Majira. She was named head of U.S. Wealth Advisory in July. Her job includes heading up retirement at BlackRock. It is the world's largest asset manager. They had I think $12.5 trillion, record amount in assets. That was according to the latest quarterly update. How are you?
I'm great. I mean, we're at the Future Proof Festival. Like, it doesn't get better than this. This is beautiful.
It's pretty amazing, right? To talk about like kind of what's going on in the markets against this backdrop. I want to ask you though about the news last week. You were definitely quoted in one of the Bloomberg stories. It was exclusive. You said this is a sector-defining moment. How come?
Well, you know, the thing that I find so interesting about the wealth market is that as firms are getting larger, right, as wealth management firms, as banks, they're getting larger, and they're looking to really lean in on what they do best, which is serving their clients, expanding their relationships with their clients. And as they do that, they need to work with partners who can be their outsource provider, who can take on the investment management, who can build custom solutions for them. And so this is just one example of a very large global bank asking BlackRock, selecting BlackRock to be their outsource provider. But we're seeing this every single day from financial advisors all around the country. They're looking to work with firms like BlackRock so that we can customize solutions for them and take on the investment management so they can do what they do best, serve their clients, expand their
So
client
this is
reach.
just the beginning of a lot
just
more to come.
Just the beginning.
I
so much more to come.
I was just going to ask, should investors expect more of these partnerships to be announced?
Absolutely. Absolutely. And by the way, today, BlackRock has over 30,000 financial advisors just in the U.S. who are already relying on us to be their outsourced provider. Then you enter a firm like Citi, a massive global bank. There will be more firms coming who are going to come to BlackRock and ask for this type of partnership.
So you guys see a lot. How would you describe the investment environment? We were just talking to Matt Middleton, who puts on this event, and said last year it was all about the upcoming U.S. elections. they've happened, right? And we have a president who's very active on things that really impact the investment environment. How would you describe the environment today?
Well, look, I think a lot of people, with reason, of course, have uncertainty around economics, uncertainty around tariffs, uncertainty around everything and what that means for their portfolio. What I find most positive and exciting is the fact of all of these people who are thinking about, what does this mean to my savings? What does this mean to my ability to retire? What does this mean to my ability to send my children to school? Well, they're working with professionals like financial advisors, like so many of the advisors that are here. And the job of the advisor is to help them navigate that uncertainty and help them focus on the long term, right? It's about time in the market, not timing the market. And that's something that we believe very strongly.
What are the questions that they're asking right now, especially the wealthier clients? What do they want to know? What do they want to invest in? What opportunities do they want you to provide?
Yeah, there's two massive things. One is taxes. Help me better manage my taxes. I can control for that. I can't control markets. Help me better manage.
It's so funny that you say that. I feel like all of a sudden we've noticed too, I think in conversations, that it's yes about returns, but it is about tax
alpha
advantages. Yes,
yeah.
Exactly. Tax alpha.
So
go ahead. Forgive me.
But you're right. That is top of mind for high net worth, ultra high net worth investors, because one, they can control it. Two, there's actually a pretty significant implication on their portfolios when you think about taxes. And so it's exactly why a few years ago, BlackRock acquired a company called Aperio. Aperio is a direct indexing company, a platform that had best-in-class capabilities to help end investors customize portfolios, right? Single security portfolios, maybe for their values, their beliefs, most importantly, their taxes. And today, that's one of our largest growing platforms. Aperio direct indexing, also SpiderRock, where you can do custom overlay, custom options overlay. Think about that Apple executive that worked at Apple for years and years and years and has all of this Apple stock. That's emotional for them. They want to hold on to that. There's a lot of tax implications in that. But at the same time, they can hedge against that. They can run options on top of that. And that is top of mind.
Okay, so taxes is one thing. What's the other one?
Private markets.
Yeah, I knew you were going to say that.
Of course you did. Private markets, every headline.
What part of that specifically? When you think of alternatives, when you think of private markets, where?
Yeah, so let me take a step back and say one of the things we believe very, very, very strongly at BlackRock is our job is to help make it easier for investors to access the full power of the capital markets. Now, previously, capital markets meant public markets. We know the opportunities that exist beyond the public markets in the realm of private companies. And so it's why last year we acquired Preqin from a data perspective. We acquired GIP, HPS, because we feel so strongly.
Preqin being, I know, for those of us in the journalism world, I mean, that's where we go in terms of for data on the private markets.
Every slide, every chart you see, source Preqin. And it is really the only source of truth on private markets. And so if we have that in addition to all of these capabilities that help us build products that allow people to more efficiently access the private markets, then we can better serve our clients in the wealth market, not just institutions any longer, and also in retirement.
We're talking with Jamie Majira, Managing Director, Head of U.S. Wealth Advisory and Head of Retirement at BlackRock here at Future Proof in Huntington Beach. We reported, too, that I think Larry Fink, your CEO, has talked about, and your CFO, about offering target date retirement funds that include private assets next year. I mean, it meshes kind of with the survey that you guys put out today that talks about 24% of retirement plans are considering adding alt assets over the next year, private equity, credit, and other investments. Is that still on track? Can you give us an update?
Yeah, absolutely. So yes, it is still on track. Look, I think there's been a lot of headlines from a lot of different firms about people coming to market with ideas of how to incorporate private markets.
Safely, right? Because we have to remind everybody, they're not as liquid as a lot of investments that normally your retirement funds go into.
Yeah, there are many considerations that plan sponsors and investors need to think about to make sure it's right for them. Our view is that if we can do this thoughtfully, strategically, integrating private markets, private assets, into a target date fund alongside of public markets and manage that glide path so it's appropriate for people at different stages of their life, then we can actually deliver them 15% more returns over a 40-year, or 15% more retirement assets, I should say, over a 40-year time horizon. That's a long time, and that's a lot more retirement savings. And so we believe strongly in that. We are on track. We actually are already in market as well in the smaller and mid-size retirement space. So we partnered with a company called Great Gray, and we're powering their glide path so that they can incorporate public and private markets into one target date solution.
Do you know, when we think about target date solutions now, what we know and what we've experienced is like the asset allocation between equities and fixed income. Do we get to a point where that's not even a choice anymore? It's like equities, fixed income, and privates?
It's interesting. I think for so long, people have thought about the 60-40 portfolio. Equities, fixed income. Some people may be as bold we are to say 50-30-20. That 20% might be 10% private equity, 10% private credit, different diversified assets in there. But absolutely, I think the new portfolio, the portfolio of the future to fund these longer lives has to incorporate private assets.
You know, one of the things out of your survey that I thought was really interesting was guaranteed income is now a top priority. 86% of workplace savers want it. And for the first time, 100% of employers say they feel responsible for helping participants generate income in retirement. I keep thinking about my father who had a pension and VA benefits and investments, and not a lot of people are doing pensions, right, or anything anymore. And so I am curious about how employers are thinking about this. That struck me.
Yeah, so it's so interesting because you raised such a good point. So employers used to have pension plans,
right,
and then the conversion to defined contribution. Well, we're now seeing pensionization of defined contribution. Think about private assets have been available in pensions for decades. Well, now they'll be available in 401k plans, retirement plans. Same thing with guaranteed income. That's what the benefit of a pension was, but there's no flexibility around that. So BlackRock has created a solution. It's a target date fund solution. It's called LifePath Paycheck. And what it does is it actually delivers you the option, the choice to have guaranteed income. You can choose to take that or not, but it's giving savers and employers the option to have their employees have more security, have more simplicity, have more confidence in their retirement income. One of the things I'll just add is that I found so interesting in our survey, when you look at retirees, 27% of retirees, only 27%, are confident in their ability to live through retirement on their savings.
Well, that's discouraging.
It's discouraging.
Well, so what's the implication of that, just in the last minute that we have with you? Because that has implications beyond our own portfolios. That has real societal implications.
It has societal implications in that there's going to be this whole group of Americans who are trying to live through retirement. Maybe they do another job. Maybe they spend differently. That shouldn't be the case. Longer lives should be a blessing. They shouldn't be a challenge. And that's where guaranteed income comes in. That's where the modernization of 401k plans to include private assets comes in. And that's where more advice comes in, which is why we're here at Future Proof Festival. Advisors play a massive role in this.
All right, and you're going to be part of a panel a little bit later on today that's all about the state of investment management, where we're headed next. There's a lot of things I know that you guys are going to roll into that. Jamie, thank you so much.
Thank you. It was great being here.
It's great having you. Jamie Bajira, Managing Director, Head of U.S. Wealth Advisory and Head of Retirement at BlackRock, joining us here at Future Proof.
Hey, still ahead on Bloomberg Business Week, we've got the Chief Market Strategist at New York Life Investments joining us. Lauren Goodwin is going to be stopping by. We're counting you down to the close on this Monday, taking a look at markets right now with
bouncing around a little bit here.
We're still in the green. The S&P 500 up 0.1%. The NASDAQ Composite up 0.4%. The Dow, it's in the green, but we can go ahead and call that flat.
It's almost like investors know that there's a Fed meeting, less than a week and a half away or so.
Wow.
Yeah.
Time flies.
There's a lot coming out. There's also an inflation print this week. We get those new data, revisions when it comes to jobs data.
I don't know what you're doing.
There's a lot going on to Instead of X. We're going to come back from Future Proof. This is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, and the NASDAQ 100 index are all advancing. Let's head over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Shaw. That's right. U.S. stocks in the green, but somewhat quiet today. The Dow is currently higher by 34 points. The S&Ps are higher by 7, while the NASDAQ gains by 0.5%. The U.S. 10-year yield drops to 4.05. Gold is at a new record. Oil is in the green. And Bitcoin, that's higher by 0.8%. Among the main 11 S&P sectors, only tech and consumer discretionary were in the green. Utilities and real estate were under pressure. And leaders to the upside in the Dow, IBM and Amazon, while Verizon fell 2.6% and led to the downside. In the AI space, Databricks increased its revenue forecast to $4 billion a year. And in other news, Robinhood jumps 16% on the S&P 500 inclusion. Wrapping things up, gaming stock Take-Two broke out to an all-time high. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
It's the question that drives us.
This is the drive to the close.
The funky music will drive us till the dawn.
On Bloomberg Radio.
Ooh, wind's blowing in from the ocean. Do you feel that?
It's kind of nice, actually.
I know. Look at, I got Mr. Clean next to me now. Look at all that. I know, he took his jacket off. There's a lot of weight there.
Thank you for explaining for the
those
radio
on radio.
audience, too.
For
Yeah,
those on
I
radio.
appreciate it.
Tim had his jacket on. It's pretty warm here.
It's warm, and
We're
then
on
the breeze
West
comes.
Coast.
It's actually really nice.
I know. Feels really good.
This is Bloomberg Business Week, live at Future Proof in Huntington Beach. Today's show is sponsored by Van Eck, celebrating 70 years of helping investors stay ahead in a world that never stands still.
All right, I want to get to our guest because you love a guest who's bopping to the music, our lead-in music. Lauren Goodwin is with us. It's been a while. She's economist and chief market strategist at New York Life Investments, though very much well-known to the Bloomberg audience. She's here with us at Future Proof. How are you?
I am so energized being here. I'll say one of the biggest questions we've been discussing on the desk lately is, like, you know, you're a week away from a 25 basis point Fed cut, and that's a minor reduction in the cost of capital, but does it foster sort of the confidence that you would need to see to get the M&A market back moving, et cetera? And sitting in sunny California with a bunch of registered investment advisors, and the answer would be yes. It's an optimistic crowd. Yeah.
25 basis points? Is that what you think?
Yeah, that is what I think. And to be honest, I think it's the right call. I think it's what they'll do, but I think it's the right call. There's, just enough evidence to the downside on the labor market that I think an insurance cut in every way is probably a good idea. But 50 basis points, I mean, look, I don't think that we would necessarily get the market expecting, like, oh, that's the reason why then you have a blowout in inflation expectations or whatever the case may be. But I'd be worried enough about that not to try and mess with it.
So then what's the path into the rest of the year and into early next year?
So I don't know. I would say where we are.
I love the honesty.
I was just going to say, thank you for saying that.
Yeah,
exactly.
I will say that, like, if our view is outside of consensus in any way, it's that I am actually not convinced that we'll have a consistent cutting cycle from here. I think it would be fantastic for the market, and for housing, and for, in some senses, the real economy, for M&A, et cetera. But I look at, yes, the inflation risks, and I think we might have a little bit of an upside surprise on Thursday. I don't think that'll derail the Fed next week. But really what I'm thinking a lot about lately is the upside risk to wages. So in the labor market, part of the attention that the labor market's gotten lately is Powell sort of saying, hey, we're actually quite focused on this in terms of our reaction function, the sort of reduction in demand, the cracks we're seeing. But there's a reduction in labor market supply as well. And so I think we might have several months, maybe even a couple of quarters, where there's just not a lot of job creation, but wage growth stays exactly where it is, maybe even moves higher. And that's just a mix of risks where I think, if financial conditions stay loose, they're so loose right now, equity market valuations are high, bond market valuations are high. Like, there's not a lot of evidence that you need aggressive cutting yet.
Well, that's what I was going to say. Why do we need to cut rates?
I am a little. I am just concerned enough about what we've seen from the jobs reports lately, where again I think an insurance cut, and I am really thinking about it as an insurance cut. Like I think you would so much rather do 25 basis points and then not move for 6 or 9 months.
So it could be one and done for a while.
It could, and that's why I say, like I honestly don't know. It is so. Boring, but absolutely true to say that we have to be data dependent on this. I think there's people are so used to uncertainty after the last few months that they're saying like tariffs don't matter, it's one off, and the labor market is, and I just don't think anyone can actually feel confident about those things.
Can people feel confident about the independence of the Fed?
For now, the market is telling us yes. And
we're going to talk with Barry Ritholtz about this in a few minutes because I'm a little confused about why the market is so confident. But go ahead.
So as we know, the Fed's credibility in fighting inflation is probably its most important policy tool. And I think what the market is seeing when it looks at this environment is interference in who the personnel on the Fed might be, but a trust that those people are serious. That the people who are taking these seats, though, perhaps have a different political leaning or what have you, like, understand how Fed policy impacts the markets enough to take it seriously. That's the market's read. And that is so important. It's so important because I think what investors, and it's so interesting to me because the most sophisticated institutional investor will look me in the eyes and tell me, well, when there's change in personnel and we have 150 basis points of cuts, none of us should want that. None of us should want that in this economy because you could very easily see an environment where the policy rate is moving lower and long rates are moving substantially higher in that circumstance. If the market says, wait a second, that doesn't make sense. I think we have just enough data right now to thread that needle to say, okay, look, 25 basis points, that makes sense, et cetera. If the Fed moves too quickly, we lose that confidence. And so it's another reason why I just really don't see an aggressive cutting cycle, again, when financial conditions are so easy.
I think that's a really incredible point. I also, you are... You've got a master's degree in international economics from Johns Hopkins, and I was looking at some of the notes that you shared with our producer, Ari. You are thinking about the future state trends, and one of them is the redrawing of the global map. How would you describe kind of that global map today?
So a couple of things I think are really important about this. The first is that when I talk about redrawing the global map, I'm not really talking about trade, although I think trade policy is an accelerant of the trend. We have seen over the last at least 10 years, some build of policy change in the U.S. and elsewhere, such as competition over the technology supply chain. But an acceleration of that because COVID made us all realize that actually having access to vaccines and computer chips and a couple of other things is like really important, right? And so there's been this understanding that the U.S.-led sort of singular economy is changing. The U.S. will continue to be incredibly important in this new regime, but that new regime includes more players and in a way that is getting a little bit trickier to access. So if you think about, one way that this idea manifests is like, oh, well, does that mean you should add international equity? And for a U.S. investor, they've been underweight international equity for 15 years, and with good reason. But now it's not only like your day-to-day political risk trade that people think about that you would want to diversify, but it's also the last 6 months is a perfect example. Europe has been much more consistent in their interest rate cutting cycle, and they've been investing in defense, and so we've seen financials, industrials, all of the sectors that have their ebbs and flows in the U.S. just consistently outperforming. Like that's a type of diversification and sort of cycle adjustment.
Does that continue? And you think that continues?
I think that the pace of outperformance on the international trade for the next 6 months, I think that pace slows substantially relative to what we've seen. But the reality is that at the last 10 years, you've had a global economic cycle that is dominated by the U.S. And we now have diverging economic cycles, in addition to some of these, geopolitical and trade-related trends that mean you can access not just different, currencies or regions of the world, but different sectors in a way that I think is really interesting.
come back. We want to continue this conversation. We'll find
Thanks for
catch up
having me.
in New York. We hope. Lauren Goodwin, economist, chief market strategist at New York Life Investments here at Future Proof.
I think we're all going to stay here. Are we going back to New York?
Oh, we forgot to tell the team back in New York. Yeah, we're not coming home. No, we're coming home. All right, stick around. The close coming your way in just a moment.
This is Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, yes, indeed, everybody. We're coming up on about 7 minutes to go until we wrap up the trade on this Monday. What a lovely Monday here on the West Coast. We are at Future Proof. We're going to continue with some great guests from Future Proof here out at Huntington Beach, California. Our own Barry Ritholtz coming your way in just a moment. Priya Misra over at JP Morgan. Sarah Levy, CEO of Betterment. And then we're going to also talk a little bit about some of the stocks on the move. In the meantime,
one of the most read stories on the Bloomberg terminal over the last 8 hours. This one, for good reason, is getting a lot of attention,
I love
Carol.
this story.
U.S. stocks have been on a tear, setting more than 20 all-time highs this year. But the Fed's next move threatens to curb investor zeal. This according to JP Morgan Chase's trading desk, essentially saying a Fed rate cut risks derailing stocks.
I find it interesting on a day, so you've got that perspective. You did have Goldman and Morgan Stanley strategists coming out and expecting the drive in equity gains to continue. Goldman's David Kostin sees the S&P rising 6% through mid-2026, while Morgan Stanley's Mike Wilson wrote about the next leg of the new bull market and sees earnings growth for smaller companies turning positive. So that's a positive take on U.S. stocks, but this is the idea that the expectations that we would get Fed rate cuts have been kind of priced into the equity markets already and the gains, and that once we get that cut, and maybe in terms of the commentary, what if it's more, that maybe there's not more rate cuts to come in the near future, you do wonder whether or not we see some equity sell-off.
So that's what the folks over at JP Morgan are saying. It's a really interesting take. Listen to Andrew Tyler. He says, quote, "The current bull market feels unstoppable with new support forming as former tentpoles weaken." He's the bank's head of global market intelligence, who says that if the Fed follows through on a widely expected interest rate cut at its September 17th meeting, that could turn into a sell the news event as investors pull back.
Yeah, so JP Morgan's trading desk maintaining their lower conviction tactical bullish call while pointing to a number of risk factors, including inflation, employment, and the trade. This was put out in a note today. They also noted retail investors typically scale back their participation in September, while less corporates have been buying back their own shares. I mean, September tends to be a month where we see a lot of moves, volatility. We know about the historical significance of October in terms of the October crashes that we've seen, decades ago. But nonetheless, there's a lot coming at investors. And I think it's safe to say that you might see a narrative reset depending on what we get from the Fed at that meeting next week. Right?
Next week.
And what they say about what's to come and their commentary about the environment.
Is it next week already? Yeah.
Am I messing up?
No, you're right.
Yeah. It's coming up next week.
Oh
the 17th we'll get the decision.
Next Wednesday we'll hear from Jay Powell.
Yeah. And so commentary in terms of the market environment, risks to, their dual mandate. We just have had guests talking about concerns about the labor market coming off of that Friday jobs report that was much weaker than forecast.
Yeah, Lauren Goodwin over at New York Life just mentioning that. And I think it's really notable because that's going to inform our conversation with Barry Ritholtz about the weakening labor market sort of idea. Okay, well, if the labor market is weakening, if we're in an environment where we're seeing sort of tumult around the world,
right?
There are a lot of questions about the United States right now and Fed independence. And then a weakening consumer here, too. Yet look at equity markets. We're at all-time highs.
Exactly. At the same time, you see something like gold hitting records, which is often seen as kind of a safe place to park your investments when you're a little bit nervous about what's going on. I also think we're going to be in this interesting time period where the next round of earnings isn't until January, right? And so we're in this kind of period where maybe we're not hearing from a lot of companies about the outlook and the impact on them. So
we'll hear we'll hear from Apple tomorrow about a new device. And then when it goes on sale later this month, typically they share some sort of really cryptic message about how sales were.
So we'll look and see what they're saying.
So we'll talk to Mark Irvin about that too.
Yeah, look forward to doing that. Also, remember tomorrow we're going to get this kind of revisions when it comes to a lot of jobs data. So whether or not the jobs picture looks a lot worse than we've actually been seeing, that will be very, very important for market sentiment and maybe kind of determine whether or not indeed the Fed is going to cut rates. Could it be 50? Can we even bring that up?
I don't know. We'll ask Alex Semenova in just a minute.
Okay. And Barry Ritholtz and everybody else coming your way. Stick around, everybody. The close in just a moment. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:58 on Wall Street. We do check markets all day long here at Bloomberg. We've got NASDAQ at a record, minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ 100 index all solidly in the green. S&P 500 index ahead of the close here, advancing 13 points, 64.94, shy of a record. Got to close above 6,500 before we start talking records. Right now, though, the S&P up 0.2%. The Dow up 110, higher now by 0.2%. The NASDAQ Composite Index up 87. For the NASDAQ Composite Index, we are looking at a record. That is a gain of 0.4%. 21,789 right now, a record on the NASDAQ Composite Index. NASDAQ 100 Index pushing higher as well, up by 0.4%. Our Mag 7 Index flat on the day, little change there, up under 0.1%. And the 10-year currently yielding 4.03% with the 2-year right now, yielding 3.49%. Spot gold up $50 the ounce, 36.36 on the precious metal. That is an advance of 1.4%. And West Texas Intermediate crude up 0.8%, 62.36 for a barrel of WTI. Bitcoin up right now by 0.6%, 112,050 on Bitcoin. So traders betting that the Fed will cut rates, driving stocks close to records amid hopes that policy easing at a time when the economy is bending but not breaking will power corporate America. And there you have it, folks, from Maximus, ringing that closing bell at the big board with the Dow, the S&P, NASDAQ all advancing. NASDAQ at the close at a record, up 99, gain there of just about 0.5%. As for the overall market backdrop, Katrina Dudley of Franklin Templeton Investors says investors should be looking beyond those Mag 7 stocks.
A lot of people have become unintended overweight into a lot of these stocks, and I think that you want to start paring that back and start looking at other opportunities. Your diversification has not been as much of your friend during the past 5 to 7 years, but if you do believe in this earnings breadth story, there's so many more parts of the market that are likely to work.
Katrina Dudley of Franklin Templeton Investments. And again, our Mag 7 index did advance today, up by just about 0.1%. By the way, year to date, that index up by 11.9%. So again, recapping here, stocks finish in the green. NASDAQ at a record up 98, up by about 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody. Carol Masser along with Tim Stenovec. We are live at Future Proof. We're out on the West Coast in Huntington Beach, California, and we are surrounded by thousands of people, many of them registered investment advisors, everybody talking about how to best find yield, performance, tax advantages for their investors. That's what it's all about.
Looks like there's a pretty good break out there, too. If you want to head out and do some surfing later.
I can see the beach.
Yeah, I can see it right here.
Right here. Sorry,
there's this
everybody.
amazing bike path that goes just all the way up, all the way down the coast.
Yeah,
you can just take a beach, 10-mile-an-hour speed limit, but take a beach cruiser there all you want.
It is very California, but I've got to say, it's also very serious. We're surrounded by booths. Lincoln Financial, MSCI Wealth, BlackRock's right here, Crane Shares. I mean, they are all around us. Everybody who's anybody in the financial world. And we should point out that we, as we mentioned, live at Future Proof, it is sponsored by Van Eck, celebrating 70 years of helping investors stay ahead in a world that never stands still. And that is so true. There is so much coming at investors, Tim.
Yeah, 3,000 financial advisors here representing an anticipated $20 trillion in assets under
That's a lot of
management.
money.
You just heard from Charlie Pellet, markets closing higher. Wall Street traders betting that a Fed's going to cut rates and driving stocks to close at all-time highs. Something we're going to be talking about with Barry Ritholtz of Ritholtz Wealth Management. He's going to be joining us in just a few minutes. He was on the big stage yesterday.
He was.
Got to hear a little bit about the way he's thinking about markets and about his book, of course.
Yeah, looking forward to that. Always love Barry's perspective. JP Morgan's Priya Misra here. We're going to talk a little bit about the fixed income world, really get into Fed policy, what they're expecting.
And Sarah Levy joining us a little later in the program, CEO of Betterment and Betterment Advisor Solutions. So we'll talk to her all about the offering for RIAs.
And one of our best at Bloomberg. She's on the ground here. She just did a panel. Alex Semenova is going to join us in just a moment. But first up, where should we go?
Where do you want to go?
I don't know. Where should we go?
Let's go to Alex. She's right here. I want to bring in Alex Semenova. She's Bloomberg News Equities reporter. She joins us here on site at
like,
Future
guys,
Proof in Huntington Beach, California. So the panel that you just were on, moderated. By the way, Carol, when you were walking over the bridge to the beach?
Yes.
Did you see the big poster of Alex? Did you see that, Alex?
I understand there's a massive
Did you see
poster.
that?
It was very exciting.
You need
Did
to
you
take
see
it
that?
home
I
with
did
you.
see it. I might have taken multiple pictures with it, so.
I was like walking. I was like, I know her. She's coming on our program later. Well, the reason you were on a poster here is because your panel, Portfolio Shifts in a World of Tariffs and Conflict, a great group on it. Lauren Goodwin, who was just on our program,
Fantastic.
Stephanie Link. What did you find? What did you hear?
You know, I will have to say, if there are any concerns from Friday's labor market print, you really don't feel them here. People are feeling very optimistic about the future. There is this view that things are slowing down a little bit, but no expectation for any kind of substantial deterioration. I mean, you come over here, we have every major financial institution. Everyone's playing pickleball. They're, throwing hoops, shooting hoops. There's just really no feeling that recession risk is a really big concern at this point. And when I'm having conversations with people, I think the consensus is kind of people expect that the Fed will cut this time. There are different views on how much, whether it's 25 before they proceed with any potential deeper cuts. Rob Kaplan over at Goldman Sachs just said that on stage with Tracy Alloway and Joe Weisenthal. He thinks that they're going to have to get to a level that is neutral because things are restrictive right now, and then see how things are going with the labor data.
It's fascinating to hear that, because Lauren Goodwin, as you probably know from New York Life, just on air too, said financial conditions are loose.
Yeah.
So it's not like, we're in a difficult environment. You certainly don't see that. And you do kind of wonder, do we really need to cut rates? But again, it goes back to the labor market, especially we'll see what we get off those revisions, whether that will either cement the idea that, yes, the Fed has to cut, or whether or not the Fed has more to debate about.
Yeah, and for so long, investors were expecting rate cuts for a long time that didn't happen, and the market still fared very well. We've gotten used to, near zero interest rates for so long that people think it's time to cut rates at a time when economic data is still very solid, corporate earnings are good, the market is in all-time highs, and of course, inflation is still above the Fed's target. So that is going to be a potential problem for them. They're at this inflection point.
So maybe I'll bring in the seasonal challenges of September now, because this is a story that you had out earlier today. It's among the most read on the Bloomberg terminal. Seasonality, typically September is not a good month for stocks.
Yeah, in fact, it's
Wait,
typically...
I'm going to ask you the 4 words. Is this time different?
The magic question, if only anyone could tell us that
The
right
dreaded
now.
4 words.
But if you look at data, if history is any guide, the times that when the Fed cut interest rates when there was no recession have actually been the exception to poor September seasonality. So that's the important caveat here, is that whenever the Fed cut and there was a recession, performance was actually worse in September. The S&P on average fell about 5%. That's according to Bloomberg Intelligence data. If you look just at the history going back to 1971 on average, September in general just falls about 1%, the index. And then if you look at the times when the Fed cut rates, but in a solid economic backdrop, it was actually up 1.2%. And it seems like we're on track for that right now. Investors were clearly buying the dip after that poor reading on the labor market. People are, think that this Fed cut will drive stocks higher.
Yeah, it's going to be interesting to see how markets play off it, because I feel like on Wall Street you're seeing a little bit of a debate of folks saying, yep, that'll mean more room to run in terms of equities. Others saying, nope, it's going to be that concept of, buy the rumor, sell the news. So we'll have to see how it plays out. Alex, thanks so much for
Great
stopping
to be here
by.
With you guys. It's so much more fun on the beach in the studio. I wish we could do this all the time.
I know, totally. Alex Semenova, of course, joining us, of our own Bloomberg News team, joining us here at Huntington Beach and Future Proof.
Yeah, it's a really nice day.
I know.
But it's always like this in Southern California in September.
I know.
So September is a challenging month for stocks.
Right.
It's the New York side of things. You come out to California, the June gloom kind of goes away at the end of June.
Yeah.
Got a warm summer.
Yeah.
September's the best month.
It's just lovely. I got to say, it always feels like it's sunny in California.
It does.
Amazing.
This is an area, I was talking to some friends who live here last night, an area that's full of tourists typically during the summer.
Yeah.
They come from all over. A lot come from Utah, a lot come from Texas, Arizona, who avoid the heat to come here in the summer. Everyone's back at school, so this is the perfect time to be here. They're like, the tourists are gone.
I know. Although I've seen a few tourists, I see families and kids, and they're going swimming, and we're like getting ready to go to work.
Aren't they supposed to be in school right now?
I don't know. It's pretty amazing. We're getting ready to bring in Barry Ritholtz, a man who's very familiar to our audience. Always a must listen when it comes to his broadcast and podcast, and really has a great, unique perspective when it comes to investing.
He is the author of the new book, still new, I can say it, how not to invest, the ideas, numbers, and behaviors that destroy wealth, and how to avoid them. He is the co-host, or the host, rather, of Masters in Business podcast.
He's gotten out of his
Bloomberg.
suit. I ran into him, and he's like, I got to get out of this jacket. It's too hot here. So
he's wearing shorts now.
He looks like he's ready to play a round of golf or something.
Not golf, a little tennis.
A little tennis. Okay. That's
and some surf lessons, as long as I'm on the coast.
Are you going to do that, really, today?
I wanted to, but I had Joe Davis of Vanguard Funds this morning to talk about the state of the economy. And
what did you find? What does he think?
So I've had him on Masters in Business a few times. He's always so thoughtful and interesting. Joe Davis is the first guy who kind of made me start thinking about AI in like 2018, 2019.
It's a while ago.
His overall thesis is we are either in a moment of idea acceleration or idea deceleration. And looking forward, he sees the negatives as the same as everybody else sees. Tariffs are a tax, and the labor market seems to be softening, and what was a very robust economy 9 months ago seems to be starting to look like it's approaching stall speed. But the flip side of that argument is all this technology, all these innovations, all of the things that AI is going to do is very impactful. In fact, what he said this morning was Vanguard went back out and looked at 100 years of technological innovations. And what they've found is there are two phases. The first phase we're all familiar with. During the internet, the .com build-out, it was Metro Media Fiber and Pets.com. And, you saw all the companies that blew up. What people kind of forget is the second half where, nobody says anymore, are you an internet company? We're all internet companies. Everybody has a website. Everybody uses Teams or Slack. You use email. Like the internet is like the phone. It's just part of your... And what he is suggesting is AI is in the first phase where, hey, it's been the Magnificent Seven. There's been 5,000 companies in AI funded. When we get through this first phase, and he doesn't hazard a guess when that is, I've been calling it the Magnificent 493. Not the 7 AI companies, tech companies we all know, but what is that going to do for the rest of the marketplace? Who's going to become more productive, more efficient, more profitable?
Well, shouldn't the answer be all of them?
That's what you would think. Some of them are going to do a better job than others, but if you look at how first internet and now mobile has made just about every company more efficient, more productive, more profitable, people are saying, oh, stocks are so pricey. Yeah, they're pricey for a reason.
But is there a boom and bust to it, as there was with the internet?
Yes, and I think what we should expect is, listen, Dell, Gateway, Apple, Compaq, think about all the companies that rushed into computers, and you end up being left with a handful of survivors. Guessing who the survivors are is really tough. Looking at the rest of the marketplace and saying, hey, the next 500, the next 2,500 companies in the public market cap, look at who is not being valued for having a surge in productivity, a surge in profitability. That's phase two. And what he said is, what I thought was so fascinating, hey, we don't want to try and time the market, and we don't want to try and time when to get out of technology. But if you're overexposed to concentrated technology, major cap growth companies, we've had a fantastic 15-year run. Throttle a little back and rotate into value, which is the second phase of technological advancements. So, a fascinating discussion.
Does it change your view as Chief Investment Officer at Ritholtz Wealth Management on what your clients should be doing? Because you have a whole part of your book dedicated to buying the entire haystack. Don't look for the needle, just buy the haystack. And you guys do that at Ritholtz.
So, yeah, we very much do that, but we also know that sometimes you got to scratch a client's itch to prevent them from engaging in worse behavior. I like to say you can't get alpha if you don't at least lock in beta. So think of your portfolio. I know it's sunny and 80, hard to talk about Christmas trees, but if the core of your portfolio is a broad passive index, that's the tree, hey, what's the garland, what's the ornaments you want to put on that? If you want to say, hey, I want a broad value index to accentuate all the gains I've already seen in technology, And by the way, the same thing is taking place overseas. You have 15 years of U.S. outperformance. Maybe it's time to think about broader exposure overseas, international value. That's how you'll, if you can't pick who's the big winner from AI, pick all the secondary winners that are going to be able to be more productive, more profitable.
So I love talking with you. I'm amazed that we haven't talked politics at all. And especially like AI, if you think about was it last week, the big dinner of the big tech CEOs, all in D.C., surrounding the president. AI was a big part of, they were kind of thanking him for what he's doing in terms of the world of AI. Where does politics, what did Joe have to say about politics? Did it even enter into the conversation?
So I tried to push that question a little bit, and the consensus I've gotten, and I don't want to put words into his mouth, but the consensus I've gotten from economists on both the left and the right have been, hey, this was a very robust economy heading into 2025. It's starting to slow. That doesn't mean we're going into a recession, but it's starting to look more and more like growth is going to not be 3%.
Yeah.
Probably isn't going to be 2%. And the consensus seems to be that this is an unforced error, that this is between the craziness of the Doge layoffs and just generally the mayhem, not just the tariffs themselves. Hey, if I said we're going to pass a consumer VAT tax, you would think that's bearish for consumer spending and bearish for the economy. Someone like Joe says we look at tariffs as a tax on the consumer. So far, the pass-through hasn't showed up yet because, first of all, a lot of companies ordered, and this is me speaking, not him, there was a lot of inventory build in advance of the tariffs, and then tariffs were on, tariffs were off.
A lot of things pulled forward.
Right. So it's taken a while to work its way through the system. It seems that it's just starting to show up both in hiring and in inflation.
We got a minute left, Barry. I promised we'd talk about the Fed with you because it doesn't seem like the bond market is taking seriously the threat to Fed independence. Why do you think that is?
I honestly don't know. To me, I'm a stock guy as much as I own fixed income on munis and tips and things like that. It seems like James Carville was right in the 1990s, but in the 2020s, the stock market is the most feared index, most feared asset class because it was the stock market.
Well, it's not sending a message that the Fed independence is threatened.
Well, I think the market is pragmatic and cares less about academic discussions of independence and loves lower rates. Now, maybe it's inflationary down the road, but the difference between stocks and bonds is bonds are about a return of capital, which means you're waiting 5 or 10 years. Stocks are about the next quarter, at least when you look at, in the short run, it's a voting machine. In the long run, it's a weighing machine. I think in the short run, it's a probability machine. And the stock market is saying Fed independence is a concern, but give us some of those delicious low rates. We will let us show you what we can do. If you take 75, 100 basis points off, everybody's going to party. And that's what the market is looking at 1 to 2 quarters out.
As long as you're not worried that those low rates mean that everything's coming undone and the economy's falling apart.
I mean, the odds, if you...
Just quickly.
Torsten Slok said there was a 0% chance of a recession in January.
Yeah.
He moderated that. I would have said 10% in January. Now we're 45, 55%.
All right, we got to run. If you want more of Barry Ritholtz, he's going to come back with us tomorrow, so don't despair. Barry Ritholtz, co-founder, chairman, chief investment officer of Ritholtz Wealth Management. More from Future Proof. This is Proof.